hosting that panel. And then later in the day, the session 4, which is a balancing act. Do audiences shape creators or do creators shape audiences? A very interesting question to ask. Maria Shakil of NDTV is going to be moderating that panel. So all of that and more lined up today. You can find all the live coverage right here. And of course, you can visit the Wave Summit if you have entry. We've got a kiosk there, so do check it out.
Don't miss the NDTV Pavilion.
Yeah, that's
an
exactly.
exceptional one that has been made there as well.
Yeah, it looks very pretty, doesn't it? Yeah, so let's talk about what happened overnight though. You had a break for us here in India, Labor Day, but you had global markets that were trading. Wall Street gained in a big tech powered rally. The Dow, in fact, gaining about 0.2%, the S&P 500 about 0.6%, and the tech-heavy Nasdaq up about 1.5%. What were the big gainers? Microsoft and Meta were big contributors, gaining 7.6% and 4.2% respectively. In fact, the Magnificent Seven, as they're called, have now rebounded 20% from the recent lows, and they're above the Liberation Day close. Strong results by those two companies has somewhat eased concerns about AI spending. Microsoft shares were aided by strong guidance for cloud business, and the Meta revenue was aided by advertisement revenue, which came in quite strong. But not everything is a rosy picture. In fact, Amazon has disappointed with cloud computing revenue growth below expected numbers, and you have Apple also that has cut down its share buyback program by $10 billion. The better than expected earnings from those two companies, though, cheered the street after that weak GDP print just yesterday. In fact, US GDP, in case you missed it, contracted at a 0.3% annualized rate in the first quarter. There was the first negative growth for the US economy since the first quarter of 2022. Imports, and we pointed this out just day before yesterday, rose about 41.3% in the first quarter, and that was seen as the culprit. US manufacturing PMI, by the way, this is another data point, dropped to a 5-month low of 48.7 versus 49 in March. Quick look on Brent, and that has also recovered just a tad bit after falling earlier in the week. It's now at about $62 to the barrel, and you have the dollar that has now moved above 100, which is something to track for us here in the emerging markets, and also with regard to the price of gold. By the way, President Donald Trump has threatened secondary tariffs on Iran, and that's why you had Brent crude that went up. Another small update, well, big update, but then in the larger scheme of things, Bank of Japan's rate hikes may actually be over for now. BOJ has kept its rates unchanged and cut its growth forecast. The Japanese yen posted its biggest fall in 2025 after that rate decision. Now, we've got Peter Cardillo joining us this morning, but before we go to him, let's take a look at what President Donald Trump said after his first 100 days in office, and the fact that it's been the worst for the stock market since Richard Nixon's term. Listen in.
Yeah, I'm not taking credit or discredit for the stock market. In my case, I had the biggest stock market increase, 88% in the last term, in my last term. But I don't view the stock market as the end all. It's an indicator. But what the stock market really tells you, and when you look at the stock market in this case, is it says how bad a situation we inherited. This was a quarter that we looked at today, and we took all of us together. We came in on January 20th. So this is Biden, and you could even say the next quarter is sort of Biden, because it doesn't just happen on a daily or an hourly basis. But we're turning around. We took over on January 20th. The tariffs haven't kicked in yet. I know that, and I don't want this to happen, but I know that China is doing very poorly right now. I just saw some reports coming out, and I don't want that to happen to China. I like the president a lot, President Xi. I don't want it to happen. I was actually saddened to hear it, but they are getting absolutely hammered in China. But at a certain point, I hope we're going to make a deal with China. We're talking to China, but their factories are closing all over China because we're not taking their product. We don't want their product unless they're going to be fair with us. And that includes intellectual property and other things. There are a lot of things far beyond just buy, sell.
So that is important commentary, I beg your pardon, coming in from US President Donald Trump with regards to his 100 days in presidencyship. But let's welcome in Peter Cardillo, Chief Market Economist at Spartan Capital Securities. Peter, good morning and welcome to the show, and thank you for speaking to us at NDTV Profit. This is Hiral on the side. Whatever said and done with regards to where the US tariffs are concerned, the key question right now is the contraction that we are seeing in the US GDP. The number is coming at 0.3% at an annualized rate in the first quarter. And I think this is the first negative growth for US since the first quarter of 2022. What does this tell you? Because I'm sure the emerging markets are also absolutely concerned with this kind of a number.
Yeah, well, the numbers basically indicate that the U.S. economy is either in a recession or about to go into a recession. Now, of course, all of this is predicated on uncertainties. Since the new administration began with its tariff policies, it's created a lot of uncertainties, and that, of course, is also being manifested in the corporate reports that are coming out. Most companies have pulled back guidance, and in many cases, just simply saying it's hard to predict because no one knows the effects of the trade war, and both on an inflationary aspect and also on a business aspect. So it basically has to do with the tariff situation. And I think if today's employment numbers are extremely weak, by the way, we're looking for a jump of non-farms of about 125,000, which would be substantially lower from last month. But if that number should come in lower than 100,000, let's say around 70 or 65, that would be very troublesome for the prospects of the economy in this quarter. And that means that that most likely a recession has already started. Could it be corrected in the sense that you may not have a long-lasting recession? Absolutely. And I think, what we're seeing in the bond market right now is that bond traders are betting that the Fed is going to be forced to cut rates, most likely in June. I do not expect them to cut next week,
Right.
But that's what the bond market seems to be indicating.
Yeah, Peter, point well made. Morning, Alex here, or rather evening where you're at. And the question that a lot of people are asking, though, is how deep will this recession be? A lot of people building it in. You said that it's quite likely that we're either going to see a recession or we're already seeing a recession in the US. And the dichotomy, one might argue, you've seen the Magnificent Seven post numbers, and some of them actually posting numbers that were better than anticipated. Whereas, as you pointed out, so many other companies are pulling back on earnings and not even giving out estimations. So how do you make sense of that, one? And two, what does it mean for emerging markets when the dollar heads higher above 100? Do you think that's long-lived?
Well, let me say this, that I think a recession is going to be very light, a very moderate recession, sort of like a dip-type recession where you go in and you come out rather quickly. It's not going to be long-lasting, and I'm basing that prediction on two factors. One, that the trade war probably will end by the beginning of the summer, and we're beginning to see some hints out of China that maybe they'll begin talks. In fact, it looks like some sort of trade agreement between India and Japan is probably already on the table, and it's just a question of being announced. So I think, if you remove the the threat of a prolonged trade war, then I think the recession will be rather mild. Can a recession be stopped right now? I think that's quite difficult at this point because there's been too much psychological damage done to the economy. And so you would need a Fed to become ultra easing and would have to enact ultra easing policies. And I don't see that because they're just going to want to wait and see what the effects of inflation are. So if you get a rate cut in June and a few agreements announced, then I think it's safe to say that it's going to be a mild recession.
Hi Peter, Soumit also joining into the conversation. On the Indian markets, now if you look at the earnings, they're not as bad as the street was fearing about it. Oil prices are now around $60 per barrel again. And given the fact that the street is expecting, but when it comes to the Trump tariff, it won't be as bad on India as compared to other Asian countries. So keeping these factors in mind, do you see there would be foreign buying would continue into the Indian market? We have seen foreign buying for the last 11 trading sessions. Do you expect that to continue?
I've always said that if there was one nation that is going to escape this, it's probably India, because they basically, from the very beginning, your prime minister, said that he would work out a deal. And so I think that it's very possible that very little damage will be done, and I think India can escape it. But of course, again, it all depends. If there's a prolonged trade war, then a global recession is in sight.
Thank you, Peter, for joining us and giving us your perspective about the global markets. Moving on, how the Nifty or the Indian benchmark reacted on Wednesday. In fact, if you look at the benchmark, that is Nifty 50, it remained flat for most of the trading session. But if you look at the last half an hour of trade, Nifty dropped nearly 165 points. And this fall, we had seen a bigger fall when it comes to the broader market. In fact, the Nifty small cap index was down around 1.7%, while the Nifty mid cap index declined more than 0.9%. Now, this fall in the last half an hour could be attributed to the volatility which was driven by the weekly FNO expiry and the geopolitical tension between India and Pakistan. This is what I was picking up even in the dealer check, that no one wanted to carry any long trades given the fact that yesterday, Thursday, was a holiday. Now, if you look at FI buying, it continued for the 11th trading session, but the number was very minuscule, just 51 crore. DI buying 1,792 crore. Fourth session of buying that we have seen. And when it comes to the sectoral indices, Realty and Pharma, these were the only two sectoral indices which were in green, while all the other sectoral indices were in red. In fact, PSU stocks lost the most. PSU banks was the top sector loser, down around 2.2%, while the Nifty PSE index, that was down around 0.8% in trade on Wednesday. Now, when it comes to stock specific action in FNO, it was IGL, HDFC Life, Tube Investments and Maruti that were top gainer. IGL had multiple factors that were in support for the stock, and hence we had seen it. In fact, it was the top FNO gainer in trade on Wednesday. Maruti had seen a rebound from the lows after it reported its Q4 numbers. And on the losing side, it was Bajaj Twins on the back of numbers, Exide again on the back of numbers, BAC because of the trade volatility that we have seen, and Trent declined as much as 4% after gaining 5% the day before when it reported its earnings. On the cash side, it was Sonata Software, Vishal Megamart, CIAT, Barbeque Nation that were the top gainers. Barbeque Nation is one stock that we need to watch out for. In the last 3 trading sessions, the stock has gained nearly 20%.
Those are going to be interesting names, in fact, to watch out for again in terms of today's session as well. But let's look at, what's probably on the cards in terms of today's session. Clearly, as Soumit was pointing out as well, Wednesday's session, I beg your pardon, was 100 points range. If you see today's implied open as well, you're just looking at a 23% kind of an up. So volumes will be slightly on the lower side because it's a truncated week and now you have the weekend around the corner. Now, consolidation has continued because you're holding on around that 24,300 mark in terms of Nifty 50. The broader market sentiment, however, has dampened. If you see in terms of the mid-cap and the small-cap index as well, that will show you the kind of cuts that you're seeing. And that range-bound trading is what could continue, and this is mainly being influenced by what the Q4 earnings are telling you. Overall, the US GDP growth indication of a contraction is a key concern that the emerging markets are going to have as well, because if you see in terms of the jobless claims data, that has been also elevated in the US. So those are two factors which will somewhere have a bearing on our markets as well. Strong earnings from global tech giants. Alex spoke about Meta, Microsoft, Cognizant, etc. That probably could provide some bit of a cushion in terms of some, likewise sectors on the Indian markets. Your GST collections in the month of April have been absolutely robust. Your institutional flows have been robust as well. So these are the two factors which are somewhere going to support our markets as well, though your VIX is expected to be elevated from here on. The strategy that everyone is talking about is buy on dips near key support levels and book profits near your resistance zones. Selective stock picking strategy is going to remain crucial from here on. On Nifty, you're seeing support at around 24,200 and the resistance at around 24,550. So that is a broad range. 23,800 is on the lows as well. So broad ranges, 23,800 to 24,550. But before that, you could see support coming in at 24,200 as well. And if that is not broken, it's doubtful you could go down to those levels. Let's quickly look at Bank Nifty. Now again, the kind of strength that we were seeing over the last couple of trading sessions, that has turned into weakness in terms of where Bank Nifty goes. You're seeing support at around 54,450 and resistance that is coming in at around 56,000 in terms of Bank Nifty as well. Now, any sustained move above 56,098, that's what could probably trigger a further upside towards levels of 56,800. So that's with regards to where Bank Nifty is concerned. So that's the overall setup that we're watching out for. But the key is going to be what the derivative data is indicating. In fact, the Wednesday was expiry as well, so the fresh day is going to be interesting. Puneet comes in to get us more in terms of what he is watching out for. Puneet, over to you.
Well, thanks for that. So seeing very minor, gains, actually losses currently in terms of the implied open today. We're trading on Wednesday also. The Nifty traded in a very narrow 100-point band. 23,300 is a very near-term support, but that could be broken very quickly, and we could look at somewhere around the 23,000 mark to be one of the key supports to watch out for. The 24,000 mark to as a key support. You've spoken about the Bank Nifty as well as the Nifty level. So let's quickly go on to the open interest distribution in terms of calls and puts. We've just seen in terms of calls some slight pullback or very low volumes, at least on Wednesday, in terms of the 24,500 levels in terms of calls. But in terms of puts, we've seen an increased interest at the 24,000 mark, and that's sustained over the last week or so. In terms of stocks, in terms of open interest distribution gainers as well as losers, we have seen some short build up in stocks such as Exide as well as Varun Beverages. Both were having the results on Wednesday. While there was some weakness seen in Exide results, Varun Beverages largely in line with numbers. We've also seen something like an Apollo Hospitals as well as PNB Housing seeing some short build up. In terms of open interest losers though, we have seen in terms of short coverings across stocks. A lot of it is of course backed by results, as well as something like L&T Finance, which has been focused on the results as well as what's happening in terms of updates from Tamil Nadu. But overall, we've seen short coverings across these stocks, at least on Wednesday. Going forward, of course, it will be one of the we have a lot of earnings also starting next week. We will be seeing a lot of reaction on stocks like Zomato on the Nifty. So very important and key if we can close above the 24,300 mark at least today. But overall, it's expected to be a decent session, at least in trade.
Well, 24,300 is the level to watch. Thank you, Puneet, for that. Well, with that, let's slip into a short break and we'll be back with more news on the other side.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture
Yes.
right?
I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
watching India Market Open, and we've taken you through what happened overnight, and we've told you about the key levels to watch out for in trade today, what happened on Wednesday, and the setup in the new series that begins today. But let's talk about stocks, and there are a whole host of stocks that you should watch out for. So take out your pen and paper, take notes on your phone. Bandhan Bank is the first stock that we're talking about today, and it's a thumbs down, and it's because the asset quality problems that have been plaguing this lender have continued. The microfinance space is something of a problem. In fact, both the gross and net NPA have risen further in the fourth quarter, as a result of which the credit cost has remained elevated at 3.9%. The ROA has also dropped to 0.7%, which is down about 24 basis points sequentially. But take a look at the snapshot. The net interest income has come in lower by about 4% year on year, down about 2% on quarter. The operating profit coming in at 1,570 crore rupees. The provisions remain elevated. They've come down sequentially, but they still stand at 1,260 crore rupees, and as a result of which the PAT has actually declined on a sequential basis to 320 crore rupees. I've already told you about the gross non-performing asset figure rising. It's coming at 4.7%, which is something, right? And it's expanded further. That pressure continues to remain in the microfinance book. The net NPAs have also more or less remained flat at 1.28% despite the provisions that they have made. The advances have grown by about 10% year on year and 4% sequentially. So this is a bank that is slowing a little bit in terms of its advances, particularly in that unsecured space and in the microfinance space. Deposit growth is at 12% year on year and 7% quarter on quarter. The NIM, the net interest margin, has contracted about 21 basis points to 6.7%, and this is also a reflection of the change that the management is trying to take up in the composition of its book. What a brokerage is saying, you have a couple that have come through. Bank of America has maintained a buy with a target price of 195. They're saying that there's a gradual MFI normalization and the growth is set to rebound in the current financial year. There's one more, UBS on Bandhan, that is maintained a neutral with a target price of 165. It says that the PAT miss was driven by the weakness across the core metrics, and the management target of a steady state ROA of 1.8 to 1.9% in the medium term is something they're looking at this juncture, though it's pretty far from that level. Let's talk about the second numbers. You have Eternal, which is Zomato, as you know. It's a thumbs down because of a relatively poor performance. The revenue is up about 8% at 5,800 odd crore rupees. This is in line more or less with expectations. The EBITDA is down about 56% and it has come in below expectations at 72 crore rupees. The margin is 1.2%. The net profit is down about 34%. The key aspect to focus on, though, is that the gross order value growth has come in lower than the management had expected at 20. The expectation, of course, was 20%. It's come in at 16% year on year, and that's really something that has resulted in a weak set of numbers for Zomato. The EBITDA margins have inched up by about 10 basis points. It is also shutting down its quick business, which is a 15-minute delivery, owing to what Dipinder Goel has pointed out as an increasing incidence of quick commerce players delivering frozen food and packaged food. And that is something that they've done. The third stock is Adani Ports, and this is a thumbs up. They've posted a beat on the revenue as well as the revised EBITDA guidance for the full financial year, and the Q4 PAT growth is driven by a higher profit from the joint venture and lower exceptional loss. The revenue for FY26 is set to grow at 16 to 22%. So let's look at what happened in the quarter. You had a 23% improvement in the revenue number. The EBITDA is up as about 24% or thereabouts. 5,000 crore rupees is where it stood at. The margin has also improved by about 33 basis points, coming at very close to 59% or thereabouts, and that's resulted in a net profit increase of about 48%, 3,014 crore rupees. There's also a dividend that has been announced to the extent of 7 rupees per share. The outlook for FY26 is going to be key to watch. I already told you about the revenue projection, but the EBITDA is set to grow by about 10 to 16% according to the management, and there's considerable capex that is planned for this year as well, 11,000 to 12,000 crore rupees, and the net debt to EBITDA is being maintained at up to 2.5x, which is important, which means that incrementally the capex is not going to result in a sharp increase in debt. The port cargo volume is seen rising 12 to 14% as well. Now, Speaking about Adani Ports, Prime Minister Narendra Modi will officially commission the Vizhinjam International Seaport today, placing Kerala firmly on the global maritime map. The deepwater port has been developed by Adani Ports and SEZ, as you know, and it was completed at an estimated cost of over 8,000 crore rupees. And following a trial run, the port received its commercial commissioning certificate on the 4th of December last year. Meanwhile, Kerala Chief Minister Pinarayi Vijayan posted on the platform X that the commissioning of the port marks the beginning of a new chapter in India's maritime journey, placing the nation firmly on the global map. With this, Vizhinjam will now become the main hub for South Asia on this route. And this is, by the way, the first semi-automated port in India. It's a major development for the company and indeed for trade in India. Somit.
Well, yes, my three stocks for today was first would be PNB Housing Finance. As we had pointed out back on Wednesday that there would be a big block that is coming in. And yes, the big block will be today where Carlyle Group will be selling close to 10.4% stake under the name of Quality Investment Holding. Now, Carlyle Group holds around 10.4% stake in PNB Housing under the name of Quality Investment Holding, and the floor price for this deal is fixed at around 960 rupees, which is at a discount of nearly 5% to the current market price. IIFL Capital is the banker to this deal. Now, if you look at this big block, obviously, on a positive side, this block should remove the bigger overhang that has been there on PNB Housing. But given the fact that it's 10.4% of the equity that is coming into the market, the first 10-15 minutes, we can see an initial downtake on the share price of PNB Housing. And this is because if you look at the average daily number of shares that are traded in the month of April for PNB Housing, that number stood at close to 23.7 lakh shares. While in the month, while today we will see Carlyle Group offloading close to 71.2 lakh shares, that is nearly 11 times of the average daily traded volumes. So we could see some initial downtake. Now, if you look at how the shareholding movement has been for Carlyle Group, they bought their stake firstly in PNB Housing Finance back in 2017. They had bought around 62.2 million shares. Post that, they sold close to 8 million, then again bought 30.7 million. And in the last couple of quarters, they have been continuously selling. In the third quarter of calendar year 2024, they sold close to 33.3 million shares. Post that, they sold 24.5 million shares, and today will be the last chunk of their holding in the company of around 27.1 million shares that will be getting sold. Now, brokerages are quite bullish on PNB Housing, and hence I'm pointing out this fact that post this selling gets absorbed, we could see a up move on PNB Housing Finance, given the fact that nearly 12 analysts track this company. All of them are buy rating. The consensus target price stands at close to 1,212 rupees, which is a potential upside of 20%. And the biggest important point is that this overhang of selling that could come in from Carlyle now goes away from PNB Housing. Also, the valuations of the stock are quite cheap compared to other housing finance company. The second stock on the list is Industars. Now, if you look at the fourth quarter numbers, they're actually strong compared to what the street was estimating. Now, if you look at the EBITDA number, that would look 38% lower compared to last quarter at close to 4,324 crore rupees. But that is because of the one-off provisions that were there in the base quarter, that is the third quarter of FY25, and hence this downtake in EBITDA. But if you adjust for that one-off, adjusted EBITDA is up around 4% at close to 4,000 crore rupees. Net profit again down 56% because of this one-off that was there in the base quarter. Now, overall, the adjusted numbers are on the higher side because of the fact that there was a higher tenancies and higher number of tower additions that we had seen in the fourth quarter. Now, this tenancies and tower addition, this was largely because of the acquisition of 12,000 towers that they had done from Bharti Airtel. So, if you remove this acquisition, again, the numbers don't look that good. But obviously, this was pretty much known to the street, and despite this, the street estimates were lower than what the actual numbers are. Now, why we are giving a thumbs down to Industars? The most negative point that has come in from Industars is that there has been no dividend or buyback announcement. Now, street was expecting the dividend announcement to come in at around 20-25 rupees, but at this moment, the company has said that their committee is evaluating on how to enhance shareholder returns. So, there would be a dividend or buyback, but at this moment, they have not announced. And the second important point why we are giving a thumbs down to Industars is the fact that the management in the conference call has hinted that they will fund the acquisition of the 12,000 towers that they have done from Bharti Group which costed them around 3,100 crore via internal accruals. Now, earlier they had guided that this acquisition will be done via borrowings. Now, given the fact that they are using internal accruals, the cash that they will be left with to give a reward to shareholders will be on the lower side, and this could lead to lower dividends than what the street was estimating. Now, street expected a dividend of at least 20 to 25 rupees. Now, we are yet to get the dividend announcement, and this could be on the lower side. That is what our understanding is. And the last set of stocks that are on the positive side is the oil marketing companies. Now, Q4 numbers for BPCL and IOCL were strong. In fact, it was strong on the back of the refining segment. Now, despite the fact that the Singapore gross refining margin were lower on the fourth quarter, the refining margins reported by BPCL and IOCL were very much ahead. In fact, it was 3 times that of what the Singapore gross refining margins were. Coupled with this, there are 2 factors because of which we are giving a thumbs up to the oil marketing companies today. Is first, that Brent crude has come back at around $61 per barrel, and this could remain here because of the poor demand commentary that has come in from Kepler and the World Bank. The commentary from Saudi to increase the oil production, and Saudi Arabia has also signaled that they can live with lower oil prices as per media reports. And the next OPEC meet is on May 5th, so we need to watch out for what is the stance going forward. But as of now, Brent crude is at $61 per barrel, and Singapore gross refining margins have climbed back to $7 per barrel, which is the highest level that we have seen since March 2024. Now, if you look at the impact of this, lower crude oil prices will increase the marketing margins for the oil marketing companies, and every 0.5 rupees increase per liter in the fuel margins increases the EBITDA of IOCL, BPCL and HPCL anywhere between 7 to 11%. And higher GRMs will increase the refining margins, which means that generally $1 per barrel rise in the GRMs increases IOCL, BPCL and HPCL's EBITDA by nearly 14 to 16%. So both refining and marketing segment will fire in the first quarter of FY26. Only downside would be the inventory losses that would come in. But again, that would be notional and not actual. So keep an eye out for oil marketing companies as well.
Follow up on that, and since you track this very closely, to explain why Singapore GRMs were at 3 and how come BPCL and the other oil marketing companies reported 3 times that, and considering that Singapore GRMs have moved up, as you've said, to $7, will you expect a similar outperformance in the first quarter?
Well, see, Singapore GRMs is kind of like Nifty. In Nifty, there are 50 stocks. In Singapore GRMs, there are multiple products. So when a product cracks go up, Singapore GRMs also move up. Now, why oil marketing companies might have reported a higher GRM, because the conference call is not yet done, so we cannot conclude specifically. One of the reasons could be the fact that the product that they are manufacturing, that product cracks must have moved up.
Okay.
So we cannot even necessarily say that
because of the mix of the product.
So 3x jump in Q4 does not necessarily mean 3x jump in Q1 as well, but it would be definitely higher.
Okay.
So that's going to be an interesting one. And your PNB, this was a herd on street on Wednesday as well. So I think that segment is doing absolutely fabulous in terms of NDTV profit on India market close at 230. But 3 stocks on my list. One is Nuvoco Vistas. That's a thumbs up from our end, and that's mainly because the top line has seen a growth of around 8%, and that's on the back of the uptick in terms of volumes that we've seen. Lower blended fuel costs, that is what has aided the EBITDA margins this time around, and that number has come in at 18.1% versus a 16.7%, and your net profit has seen a growth of almost 65% coming in there. In terms of the capacity details, they've said that they are on track in terms of achieving 31 MMTPA cement capacity, and this is going to be by the 3rd quarter of FY27, and the company remains the 5th largest cement group in the country. If you talk about Vadraj acquisition as well, the NCLT final approval is yet pending. This will actually help them unlock capacity by FY27, and it's done at a EV per ton of almost $60, and this will help them boost their footprint in terms of the Western market. What's interesting is their FY25 net debt has inched lower as well by almost 22%, and that number has come in at 3,640 crores. So that's in terms of Nuvoco Vistas. The second one on my list is a MOIL, which is also a thumbs up. Now, the margins have seen an expansion, and this is mainly on the back of a good realization number. I'll quickly take you through the numbers. Overall, if you see in terms of the Q4 revenue, that has seen a growth of around 4% on a year-on-year basis and 18% on a sequential basis. The EBITDA for the quarter has seen a growth of around 8%, and this is only on the back of the sales realizations that have improved for a MOIL as well. In terms of the margins, 32.2% is the number that we're tracking versus a 25.9% on a year-on-year sequential basis, I beg your pardon. Overall, if you see, if you have to look at the volume target, they aim to achieve almost 2.5 million ton production in FY26 and scale it to 3.5 million ton by FY30. And this will be driven by production ramp up that they are expected to see at the Gumgaon and Balaghat mines in Maharashtra. They hold almost 46% market share in the Indian manganese ore market, which is heavily import dependent as well. And they've completed almost 107.53 kilometers of exploration drilling in FY26, which marks almost a 22% improvement. And that is going to be key triggers as well. So overall, a good set of numbers that have come in from Amoil. And very lastly, the third stock on my list is Paras Defence. Last week, yes, defence companies were in focus, but last two trading sessions, there was some bit of profit booking that did come in on these names. But overall, if you see in terms of the quarter, it's a thumbs up. The revenues have seen a growth of around 36%. Margins have also improved substantially, and that number has come in at 26.1% versus a 15.4%. A smart jump in terms of profitability. They've also approved a stock split. In fact, if you see in terms of last month, the stock has seen gains of almost 36% that has come in there. And very quickly, if you see in terms of the guidance that Paras Defence has given, I think I'm just missing that number. That's an interesting number as well overall, because they've guided for a revenue growth of around 40 to 50% going ahead. Margins, they are saying, will be improving from the previous quarters as well. And from a valuation perspective, the 1 year forward PE, if you see in terms of a Paras Defence, which is almost at around 55 to 56 times, that is below the 3-year average of almost around 62 times. So from a valuation perspective as well, Paras Defence seeming to be attractive. Guidance is absolutely strong. Quarter is also absolutely strong. So an up move and a thumbs up coming in with regards to Paras Defence. So these are the three stocks. But let's also welcome in our guest, Kush Bora, who's in the studio, and Neerav Ashar, Head Equity Research Analyst at Latin Manharlal Securities. Welcome to the show, gentlemen. Kush, let me come to you first. Taking into consideration, Wednesday's session where we saw a 100-point range in terms of Nifty 50, a lot of concern still because of the fear that is gripping the retail investors. What should you be watching out for in terms of support and resistance on Nifty today, taking that the volumes might be muted, and the strategy for Bank Nifty?
Sure. First up, morning, guys. And before I get to all of that, first let me congratulate Somit. I was listening to his commentary back then about GRMs and everything. A lot of stuff I didn't know and so beautifully explained. Yeah. So I must say beautifully explained Somit on that. And on a slightly lighter note, I know there is at least one person on this table who's happy to see some red on screen, albeit not in the markets. Am I right, Alex?
You're a little late, and you're not the only. I'm not the only one, by the way. It's her as well. She's a Liverpool fan as well.
Hence, I said at least one person that I know.
At least one person.
Yeah. Okay. So you have to wear some form of red up until they'll actually go and lift the trophy.
Absolutely.
So guys, I'm actually talking about the Liverpool victory. I mean, the official lifting of the trophy is still there, but yeah, I mean, they've sealed the deal. So congratulations, guys, for Liverpool fans.
By the way, so it qualifies. You can celebrate that way if you've been a fan since the start of the century. If you started being a fan 2 years back.
If you're counting me, no. I just track the headlines. Football's not my game. So yeah, I love to play it, not tracking as much. But yeah, so congratulations to you guys, for Liverpool winning. There's been a bit of a red on the Nifty as well for some time now, and that's not a healthy sign. However, let me start looking at the broader side, or rather the brighter side of things, which is the FII buying streak of 11 sessions has been, I think, the longest in the last couple of years, which is a very good sign, correct? Also, what's very healthy, probably slightly scary, but very healthy, is that the FII index long positions have been at 47%. Now, this is the longest that we've seen in times that I can, even recall. The reason it's a little scary is because when you have short covering or other short positions, you can see some, short covering rallies as well. But if you're long by this much, any kind of profit booking will perhaps bring the Nifty down by at least a couple of 100 points. But for now, let's rejoice the fact that, the FIIs are coming back in a more stable way, if I can call it that, because of the, buying streak, not only in cash, but in the index futures as well. So let's just rejoice that fact. Derivative data also supports the idea that the support levels are shifting higher from 23,800 to about 24,000. So we've seen that also. One or 2 points which are actually just a bit of caution in the entire story is that 24,350 that we've been speaking about has been a near-term resistance for the past 4 to 5 sessions. If that is taken out, then you could see some move towards 24,600, 24,800 kind of levels also. Also, the negative RSI divergence setting up on Nifty is something just that you might want to be aware of. I still maintain a positive view on the markets, on the indices, but with that hint of caution that if something were to go wrong somewhere, you could see a sharp round of profit booking, especially given how long the FIIs are on index futures. So positive, but with a mild hint of caution.
Okay, all right. So a very quick view I want also. Hi, good morning to you, Kush, and good morning to you as well, Nirav. On IT, because in days when you've seen an outperformance, particularly of big tech and of tech companies in general in the US, you have IT react. Is that on the cards? Is that durable? And you have foreign institutional investors that have been deploying. IT has traditionally been a favored pick for them. What is the upside for some of these stocks? And I do know that you've got a buy and a sell call, and in days past, over the last couple of months, that has indicated the way that you're approaching trade as well. So is that caution that has prompted you to take that call?
It has. But let me just give a slight global context to the IT move, Alex. First up, let me also admit that I've been a little cautious on IT. I continue to remain so, but the price action over the last 2 weeks has been rather encouraging on the IT stocks. Now, if I look at the Nasdaq, it's already retraced and recovered the 50% fall that it had starting somewhere late February, early March. So some tailwind coming from there as well. While I know Meta and a couple of other stocks have posted good returns numbers, Apple, Amazon, they've been slightly muted. So there could be a mixed kind of a reaction. But what I take heart from the fact is that after the expiry is over, we've seen the IT stocks gain some ground. I still remain a bit cautious, but the price action is now telling you to perhaps take a note and revisit that view. So I don't go overly optimistic, but yes, select pockets like HCL Tech, Persistent, Coforge, which have been beaten down drastically, could perhaps see some sort of an uptick going forward as well. The risk-reward ratio remains favorable. It's just the momentum is not as strong. So I remain cautious, but yes, if you want to accumulate for, let's say, a 6 to 12 month kind of a time horizon, maybe because the kind of bottom formation that we're seeing in place, this might just turn out to be an opportunity.
Right.
And your picks?
Yeah, and regarding that, you're right, because we, when we see a very clear and a strong trend, that's when, a couple of buy calls, maybe 3 of them make sense. Given the kind of mix that you're seeing, global uncertainties, technically, some caution, then perhaps, a buy and a sell makes sense. I tend to approach the markets not just from a pure, technical perspective, but also from a trading strategy perspective. And hence, Alex, as you rightly pointed out, whenever I see caution, I give a mix of a buy and a sell. This time around, that's the view. Chambal Fertilizers, if you'll recall, that's a stock we discussed early April for a second target of 675. That's been hit. The stock is now consolidating with a positive bias around the 690 odd levels. We believe that this momentum could continue, especially given the kind of volume action that we are seeing. So 705, 720 are your levels on the upside. 680 is now your stop loss. On the short side, we've got Concor. Again, this is a trade that just keeps giving, has been over the last year and a half. Every rise has been taken as an opportunity to sell. Wednesday's volume action also has been pretty high on the short side. So for a target of 664, 652 with a stop loss around the 688 mark, Concor is a sell.
Right. Nirav, coming to you on one stock that the street would be wanting to know is Eternal Earnings. Now, if you look at the numbers, the adjusted EBITDA was much ahead than what the street was estimating. But on the other side, there is a fear of competition, which already the street knew before the numbers had come out. So how are you looking at Eternal numbers, and do you expect the market or the stock to react negatively on the numbers that they have posted for the fourth quarter?
Well, good morning and thank you for the invite. When we look at Eternal's numbers, I think on the face of it, an optical view of the numbers definitely gives us some disappointment because the profitability numbers have fallen way short of estimates. But if one were to look at the larger picture, how the revenues have performed, it's been a very smart performance as far as revenue growth is concerned, top line growth is concerned. We've seen food delivery business, quick commerce business do exceptionally well. Now, typically, what happens in the businesses like this is that the focus initially is on the top line growth. The race is to achieve the numbers, to scale up very fast, and once a certain scale is achieved, the focus is on creating a sustainable advantage. That means you are able to sustain the kind of high growth. So the entire focus shifts from the cost to accelerating the revenues. Once the revenues have accelerated and are in place, then companies begin to focus on the operating leverage, the cost optimization, and the operating efficiencies, etc. So I think if there's likely to be a sentimentally negative reaction to the numbers because the profitability has fallen short. So if there is a fall in the stock, it can actually be used as an opportunity to buy. Having said this, I think there are factors which need to we need to be careful about. That is the extent of the competition. But I think the company would be in a position to manage it, considering the way it is scaling up its revenues.
Right, so that's with regards to Zomato. It is going to be interesting to see how the stock opens in trade today. But moving on, auto sales numbers are interesting because it's showing you a mixed trend in the month of April, which is the first month of the financial year. You have Maruti Suzuki that has seen a good growth, while Hyundai and Tata Motors are facing declines. Puneet joins us with all the details. Puneet, what's the trend that you've picked up so far within the three segments and in terms of the companies?
Well, thanks for that. This is the first month of FY26, and why it's interesting is that within segments as well, we've seen outperformance as well as underperformance from certain peers, and there are three key trends. One is the domestic motorcycle market is definitely slowing down, and the share of growth has moved to scooters, and that's visible in numbers of TVS. Another visible trend is the export growth has been stronger for all players, so that's visible in numbers of both TVS as well as Eicher Motors. But the domestic market has been very muted and negative, and for Hero MotoCorp, it's down 42% in this particular month. While the company has mentioned they shut 4 plants between 17th and 19th April, the number is a very stark, weaker number, and there would be some more clarification needed from the company regarding this huge fall for Hero MotoCorp in April. There some festivals like Gudi Padwa was shifted from April to March in this year compared to last year, and hence we are visiting that some weakness was expected in the domestic fronted players. But that's a huge fall for Hero. The second trend is, of course, SUV sales is growing and continuing its growth, but that's largely visible only in M&M numbers, up 28% in this particular month. Estimates, were for roughly about 48,250. It's coming at 52,000, another straight month of more than 50,000 for the car maker, and essentially beating industry growth of just about a mid-single digit for the industry of cars. And specifically Maruti as well, growth has been decent at 7%, but largely led by the export growth. The domestic growth, just 2 to 3%, has been again a negative, and the small car segment again falling more than 30%. And finally, in terms of both commercial vehicles as well as tractors, it's continuing its trend from FY25. The numbers for M&M in tractors were much stronger compared to Escorts, and in terms of commercial vehicles, we saw outperformance from VECV, which is the commercial vehicle arm of Eicher Motors. So essentially, these are the three key winners for this month up until now. It will be TVS, Eicher as well as M&M. We're still awaiting numbers from both Ashok Leyland as well as Bajaj Auto. And Ashok Leyland has some growth, while Bajaj Auto is going to be disappointed largely because of slow domestic growth.
Right. Thank you, Puneet, for summarizing that. Before we go to Nirav on the auto stocks, firstly on PNB Housing, what we are picking up is that around 4.2% of equity have already traded hands in the pre-open window. Now, we had initially given it the thumbs down, given the fact that there was 10.4% of the equity that was going to change hands post-market opens, but given the fact that now the deal is happening in the pre-open window, most likely the stock could open higher. PNB Housing, because the bigger overhang of the stake sale that could come in from Carlyle Group now goes away, given the fact that it's a clean out trade that has come in from them. Nirav, coming to you on the auto sales number, how are you looking at the overall sales number? Which company stood out for you as compared to what you were estimating when it comes to the April 2025 sales?
Yes, as far as the auto sector is concerned, it was a mixed picture, but I think M&M is the clear winner on the growth highway. And we've seen a very strong performance in the month of April, 19% increase in the overall sales and 28% increase in the SUV sales. Of course, becoming now the second largest player in the country. As far as Maruti is concerned, I think there was a modest 4% growth helped by exports, which helped. There was a sharp growth in the exports, which helped the overall growth move up to 7%. So modest performance from Maruti. As far as the rest of the pack is concerned, I think Tata Motors was a disappointment with the fall in the commercial vehicle sales and the passenger vehicle sales. Hyundai was helped by exports. As a matter of fact, we saw a lot of companies being helped by exports. The export performance overall has been quite strong. Amongst the two-wheeler makers, I think TVS Motors 16% increase in the sales was quite impressive, we thought. And amongst the smaller players, I think one can particularly watch out for VST Tillers and SML Isuzu, which was a smart performance as far as this quarter is concerned. We had expectations from the tractor makers, but preponement of the festive season has led to a fall in the sales as far as this month is concerned. So, Escorts Kubota was a slight disappointment on that account. And I think that kind of pretty much sums up the auto season as far as the numbers which have come till now.
But what would your top picks be very quickly based on what you've said?
I think we like Mahindra and Mahindra quite a lot, and Maruti is also a preferred pick. But amongst the mid-cap stocks, I think we like Force Motors and VST Tillers.
Kush, I want to come to you on a pack that has done incredibly well in the recent past. And Hiral pointed out Paris Defense, it could react positively in trade today. But remember, it's up over 35% over the last month. The question is, for the pack as a whole, what are the levels that you would watch? And if you manage to catch that updraft, would you book some of your gains right now?
You would, Alex, because, or I would, because what's happening is we're starting to see some negative divergences which are suggesting that the momentum from now on is perhaps starting to wane a little. And if you actually did buy them, at the start of the rally, somewhere close to the lows, and you've been making a neat 20-25% depending on the stock and the timing at which you entered. So while the momentum could still continue, it may not be at the same pace at which it did, for the last 2.5 months. We continue to like solar industries in this space. We've given a call on that, two, maybe 3 sessions ago. So, that is something that is still witnessing some kind of, strength. BDL is one stock which has actually seen quite a bit of spike in volumes. The stock price has seen consolidating over the last 2 sessions, but the volume actions have surged, which is suggesting that there is perhaps near-term momentum as well. And amongst the shipbuilding pack, Mazagon Dock continues to impress, having cleared all the key moving averages with the kind of volume support and the breakout that it's given above that 2800, 2850 mark. I think these are a couple of stocks that you might want to keep on the radar. But yes, to answer that question, if you did buy them at a slightly early stage in this rally, you might want to consider booking partially, if not completely.
Okay, all right. So we've discussed already quite a few stocks. We have to slip into a very quick break. We'll be back on the
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture
Yes.
right now.
I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point?
Nifty 24,448 is what you're tracking so far. But let me go across to Nirav to understand how he is looking at all the financials that have reported numbers. Nirav, we're talking about a Federal Bank, Home First Finance, Bandhan Bank. How are you looking at, the banking space, specifically the smaller names?
Well, I think as it always happens, first the larger players tend to report a better set of numbers, and then it basically percolates down to the lower levels. So I think most of the smaller players have started showing some signs of making a comeback as far as the financial performance is concerned. We've seen loan growth starting to improve. We've seen asset quality improvements. We have seen net interest income starting to inch up. Overall, I think the parameters have been improving. The asset quality has been improving. But having said that, there's a lot of work which still needs to be done. This is just the starting point. So hopefully, with the interest rate transmissions, interest rate cuts happening, and the transmission taking place in a gradual manner, we'll see a further improvement in the financials going forward.
Okay, but then which would you be? So a lot of people have preferred the larger cap companies, and both public and private, but specifically private. Nirav, would you say that there's still value to be found if you buy these right now, fundamentally, valuation-wise? Or would you say that you should venture out? And if you do venture out, would you stick to the few quality names?
Well, it's we've already been invested in the likes of HDFC Bank or ICICI Bank, Bajaj Finance, etc. But having said that, it's one can definitely have a look at the smaller banks where there is a spark in terms of performance. We've been looking at Federal Bank, we've been looking at CSB Bank, a DCB Bank. So I think some pockets are looking interesting, especially the south-based banks where we are seeing a good amount of exposure as far as NRI banking is concerned, as far as gold loans are concerned, and a whole host of exciting opportunities.
Kush, coming to you on NMDC now, fundamentally they have taken a price hike which the street was not expecting. So it's probably positive for the stock, but on technical front, how are you looking at the stock?
So just before that, if I can quickly come in on one more stock that you were discussing in the financial space, CSP Bank. I think there is now a consensus between Nirav and myself, on the fundamental and the technicals as well. We released a call last week on our advisory. So looks good. There is a good bit of accumulation happening. So just want to put it out there that that the stock actually looks well from a medium to a long-term perspective.
What targets?
So for a CSP Bank, on the upside, we're looking at 380 to about 410 kind of levels positionally, and on the downside, 335 is a good support zone. So that's where you want to place your stop loss if you're buying in from let's say a 6-month perspective, maybe a little longer as well, right? Now specifically about NMDC, there isn't a very clear uptrend emerging on this one, while today because of that fundamental reason you might have an uptick, but if you see technically, the momentum indicators are actually a little somber, a little muted. The stock's actually in a bit of a near-term downturn where the 20-day moving average is actually crossing over on the downside of from the 50-day moving average. Not much going for it. So if I were to consider a trade on this one, I would keep a very strict stop loss at the 63 mark. If that is broken, the near-term trend, the downtrend could actually accelerate. And on the upside, you're looking at a level of about 66.50, and once that is taken out, a 68.50 as well. So not a very clear directional trend on this one just yet, but maybe on the basis of news, you could get some uptick.
Right. Now this price hike could have a negative impact on the steel company. So any views on steel names like JSPL, Tata Steel, JSW?
So most of these stocks had actually run up quite a bit, and now you're starting to see some cool off. It's not a bad sign because the run up was equally sharp on on the upside. So something like a Tata Steel, you're seeing some sort of cool off. I would wait out with everything that's happening geopolitically, and we know how sensitive these stocks are geopolitically, plus the combined factor of profit taking that we've been seeing over the last 3 to 4 sessions. So on names like Tata Steel, Jindal Steel and Power, I'd perhaps want to wait it out and see where the base formation happens, and then consider a long trade. For now, they're a wait and watch.
Okay. Among the stocks that are reacting in the pre-open session, initially you saw a sharp up move for Adani Ports. It has settled down a little bit from that level. It was up 6% at one point, but it's now about 0.8% higher. But Eternal or Zomato seems to be taking it on the chin. And let's see if the dust settles at all for this stock, because it's down about 5% or so. Among the other big movers, I would also want to pull up a Paras Defense, because Hiral had it on her list, strong set of numbers, margin expansion, and also announced a stock split, but it's not moving too much. Again, context of course, Hiral, is that it's moved up 35% over the last month.
Yeah, I mean this quarter, the last week itself has been pretty strong. Just the last 2 trading sessions where you started to see profit booking coming into defense. But this is going to be a sector that is in focus till the time we have the Indo-Pak situation not settling, and I don't think so that's on the cards too far. But one stock that we should be looking at is a Vedanta as well. What's interesting is not the numbers, but the commentary with regards to their capex is what is on a stronger footing, because the revenues have been absolutely flat. The margins, in fact, have seen some bit of a contraction, and it has been lower than what the street was estimating. But the reason the stock is seeing gains of around 0.8% in pre-open is mainly on your capex commentary. FY26 capex is estimated at around $1.5 to $1.7 billion, and almost 0.65 to 0.7 billion is allocated to aluminium and power, and the rest is allocated to zinc. In terms of the debt profile, the consolidated debt is lower on a sequential basis with regards to 7%, and the company has reduced its net debt to EBITDA multiple to 1.2 times versus a 1.9 times in the first quarter of FY25. In fact, they're expecting its cash flow pre-growth capex at $5 billion in the near term. And overall, in terms of the demerger, I think the timeline has been pushed as well, and this is on the back of lack of approvals that they've received. So that could be an overhang on the counter. Before I go to Nirav, in terms of Vedanta, your view, Kush, what are charts indicating with regards to where Vedanta goes?
Range bound, I would say. On the downside, you're looking at 405 kind of a support zone, and on the upside, 425. So right now, bang in the middle of that range, not a very clear directional play. The volumes are suggesting some accumulation, but no momentum here at the moment. So the same commentary that I made just a while ago regarding the metal space, same applies to this one as well. You might want to wait it, or on the upside, if 425 is taken out convincingly, then I think you could see some uptick coming in. But otherwise, the stock could perhaps spend some time in this range before it gives you, a very clear direction play.
Okay. So that's with regards to Vedanta. Nirav, very quickly on a fundamental perspective, how kicked are you with regards to the capex plans for a Vedanta and the delay that's happening with, on the merger? What would you advise an existing investor and a good call to buy right now?
Well, as far as the mining business is concerned, we all know that it's a very capital intensive business. And a lot of the fortunes are linked to the expansion plans. So as you rightly pointed out, there is a huge amount of expansion which is planned in aluminium business. Aluminium typically is a power intensive business, so you definitely need to have your captive power plants and sources of power to keep the business running. So all these entail huge amount of investments, so there's no element of surprise as such as far as this is concerned. As far as the zinc business is concerned, I think we've had a phenomenal performance coming in from Hindustan Zinc, because they've reported the 4-year lowest cost of production. So one can imagine the margins which they would be able to make on this particular business. Silver has been doing quite well as well. So overall, I think remain upbeat about the prospects of the mining business. So I think one can definitely start accumulating this stock from a medium to long-term perspective.
Right. Now it's time for the big brokerage call for the day. Macquarie has come up with this bullish note on L&T. Harsh is joining us with more details on the same.
Yeah, strong levers, right? Swami, good morning. In terms of 26% upside, first off, that Macquarie sees on this one, they're saying that the order pipeline remains strong. Unlike FY25, FY26 has just about one election in the year, and therefore provides a good tailwind with regard to both execution as well as order inflows coming through. And they're expecting some of those order inflows to start to pile up. Guidance for at the end of Q4 awaited, because that will be one thing that the street will look out for. But outside of that, they believe L&T trades at attractive valuations, and all of this backlog will likely provide good tailwind. With regard to the valuation, the core business trades at roughly 21 times FY27 price to earnings, which they believe is reasonable. It's largely in line with the 10-year average, and this is despite both improvement with regard to order backlog, which is order pipeline, as well as the prospective growth that is expected. So improvement on both growth as well as ROE at reasonable valuation is why they're positive on this one.
1,200 target is quite interesting, and that implies quite the upside. And the point that was made on the multiples as well. Kush, on the charts, Larsen & Toubro, at this juncture, I think it's 0.5% lower, but then what are the prospects on the charts?
You know, Alex, Larsen & Toubro's never really been a trader favorite counter, right? I mean, it's always one of those where, you buy and hold. Portfolio stock, absolutely. So at the moment, I think this is turning out to be a good buying opportunity with a small caveat, which is 3460, 3450 zone had proven to be a support level for the stock for a goodish bit of last year. So once the stock comes up to that level, you might see some exits. The patience of traders and investors holding on to this one might perhaps, give way, and you could see some sell-off. But I think in the clear of 3450, I think the stock is poised to move higher. If you see the weekly setup, I'm not going by a daily setup on this one, looking at a slightly longer time frame. The weekly setup is, showing a higher high, higher low formation on the last 4 weeks. The volumes are also, suggesting accumulation. So all in all, looks like that the bottom for this stock is in place from a near-term perspective. Risk-reward ratio is extremely favorable. If you want to buy and hold for anything above 12 months, you should actually consider starting accumulating this stock at this current juncture. Positional stop on this one comes in at 3100, 3050 odd levels. So if that is broken, then perhaps you might want to consider an exit. But yeah, as I said, from a medium to a long-term perspective, things look to be shaping up rather well for Larsen & Toubro.
Okay, a few stocks in the news, some that we pointed out to you. Adani Ports now gaining about 3% or thereabouts, and we've settled, the pre-open rates have settled. Bandhan is up about 1.8%, and there's some interesting trading at play there. Indus Tower, Somit had pointed out, not the best set of numbers, 3.5% lower at the start is the indication. And PNB Housing, Somit told you why the initial overhang is no longer there, and therefore the stock is up. So of these, Kush, do you see any opportunities? What would you look to deploy in, if at all?
There was an opportunity, and the reason I call it was because PNB Housing was our long call about a couple of weeks ago, and it's hit the target. And now with a 6% gap up opening, I think most of the opportunity here will be lost. So other than that, if you do get a cool off, a pullback near the 1040 odd mark, you might want to consider going long. I'm very bullish on the financial space, and that includes, the likes of some of the housing finance companies, insurance plays also, but obviously, banks also included in that name. So PNB Housing is one stock that I like, but right now with the kind of opening that you're seeing, you might want to consider it at, a dip closer to the 1040, 1050 mark.
What about the ports move, 3% up?
So this is a good move. I just want to see it sustain. What's happened is that the 200-day moving average has been acting as a resistance for some time. Right now it's cleared, but this 1250, 1260 zone has been a resistance for the last week or 10 days. Also, if you dial back the clock a little more, late 2024, this is a level that had proven to be a resistance. I will not be surprised to see some sort of profit booking coming in at those levels. So if you get it again closer to the 1225 mark, which is the 200-day moving average, I think that's when it will perhaps make more sense to enter and play for that better risk reward ratio of 1:2 with targets around the 1250, 1275 mark, 1200 being your stop loss.
That's an interesting one on the Adani Ports. Let's just quickly pull up the OMCs as well, as Somit had highlighted. You have Brent crude, which is back at $61 per barrel. So somewhere you're going to see some bit of positive moves coming in with regards to HPCL, BPCL, IOC. All of them will be in focus. Nirav, let me come to you with regards to where OMCs are concerned. What would your strategy be, taking into consideration where crude oil prices are, and you have seeing Singapore GRMs, which are at the highest since March 2024?
Well, I think it's a positive as far as the oil marketing companies are concerned. I think fall in the crude oil prices, Brent crude, and the improvement in the gross refining margins definitely augurs well And we've seen some strong numbers coming in and reported by BPCL and IOC. So I think continue to remain bullish on the oil marketing companies.
Right, and Nirav, coming to you on ONGC, today we had a downgrade that has come in from Citi on the back of low oil prices. How are you looking at ONGC as a stock? The stock has opened 1.4% lower in trade.
Well, I think definitely the fall in the crude oil prices is a negative as far as the upstream companies are concerned, those which are involved in E&P, exploration and production. But I think one can use this as an opportunity to accumulate from a medium-term perspective.
Right, so that's with regards to ONGC. One interesting name that I'm watching out for in terms of pre-open is a Coromandel International. Nuvoco is also looking pretty strong. Kush, two of these names, a quick one.
Coromandel, very bullish on this one, have been for some time. I think on the upside, you are looking at targets of 2300, about 2350 also positionally, and support zones come in at just under 2200, 2190 thereabouts. So very bullish on Coromandel.
Okay. All right. So 30 seconds odd remaining for the start of trade, and the indications are that it's going to be a little bit of a quiet open for the benchmark Nifty 50. Don't be surprised if that comes through because of the kind of moves that you've seen over the past couple of weeks. You would watch out for a few pockets of strength though on the back of earnings. One of them, of course, is Adani Ports from the Nifty 50. On the other end of the spectrum, a disappointment could be in the form of Eternal, and we'll see whether that actually does pan out. The first ticks should be coming up as we speak right now. So let's take a look at where we are. Just about flat on the benchmark Nifty 50. The Nifty Bank moving up about 0.2%. Okay, so we moved up very quickly to 0.2 higher, and I would hazard a guess to say some of the heavyweights are pulling their weight and resulting in the up move as things stand right now. In fact, let's look at the IT pack and see whether it's doing anything. Of course, overnight in the US, you had the tech pack that led gains, and indeed, you have gains of about 0.8% for the IT pack as a whole. We'll look at what the constituents are doing. Before we do that, though, let's take a look at the Nifty heat map and see whether what we had anticipated is indeed taking place. And rightly so, right on top of the list, you have Adani Ports, which is gaining about 4%, a very strong set of numbers, a beat on the revenue front as well as on the EBITDA and the revised EBITDA front for the full year FY25. And the stock is doing quite well in trade today, 4% high. Of course, Virinyam Port is also coming on stream. The Prime Minister set to inaugurate it not far from now, is something that you should watch out for as well. Adani Enterprises on the back of numbers as well, doing quite well. Of course, there was an exceptional item in the bottom line, and you should bear that in mind as well. Jio Financial, Hindalco, M&M on the back of very strong retail numbers, by the way, doing quite well in trade, up about 1%. And then you have the IT pack. There you go. Infi, Wipro, and I wouldn't be surprised if you also have HCL Tech. There you go, up about 0.5%. Reliance Industries pulling some weight, about 0.6% higher, and it's made a smart up move in the recent past. On the bottom end of the spectrum, not too much in the way of big movers apart from Eternal, which is down about 2%. It's not as bad as a pre-open had suggested, so it is gaining some ground. There are a few brokerages that are saying that maybe the cash burn is done for now. It is peaked at this juncture. Of course, it will continue as the business is very, very competitive, but it might just have peaked. What else is moving lower? You have Aisha that is down about 2%, reacting possibly to the latest sales numbers. You have ONGC that's down about 1.5% or so. But Hiral, from the sectoral perspective and individual stocks from the broader end, what are you looking at?
It's very interesting because before we go to any of that, look at the WIX, Alex.
Yeah,
that's what
down.
We've been discussing. It's down around 0.7%. 18 is that mark that you're tracking. And you have Nifty 50 where we are above that 24,400 mark already. So I think there is some bit of momentum play that's coming in right now. In terms of the broader markets, let's quickly look at the overall picture. You're seeing the mid-cap 150, which is down almost up around 0.6%. So very similar moves in terms of what's happening with your benchmarks. Your small cap, in fact, is outperforming today with gains of around 0.8 to 0.9%. And if you see in terms of the sectoral heat map, let's just quickly pull that one on the screens. As Alex was mentioning, IT continues their upward trend today. Media, PSU Bank Index and defense is seeing some buying interest continuously. But real estate, FMCG and the pharma pack is on the muted note. But apart from that, you are seeing these signs of positivity that are coming in so far. But let's quickly look at the stocks, that are in focus in today's session. And this is again on the back of your earnings. A good set of numbers that were reported by a federal bank. If you talk about growth and turnaround, that has been the key with regards to where federal bank goes. Your home first finance is another one that you're watching out for. That is trading under pressure. So both these counters where we thought it'll be positive are reacting negatively. Let's pull up Paras Defense and Skipper as well. Those are the other two ones. Paras Defense is seeing a downtick in spite of a good set of numbers. Skipper on the set of good set of numbers is up around 3.5% in trade as we speak. On back of weak earnings, you have a Bandhan Bank which is in focus. That is up around 0.3%. Eternal is reacting to NDTV Profit's commentary as well, where we did say it will be a negative set of numbers, 2.5% downtick. Indus Towers, 5.5% is the kind of cuts that we're seeing on the back of the weakness in terms of earnings. Two stocks that we're looking out for in terms of Adani Port as well as Vedanta, and this is with regards to a strong capex. Adani Ports 3.5 to 4% is the kind of up move. Vedanta now is seeing cuts of around 0.6 to 0.7%. And in terms of a block deal, PNB Housing, where Carlyle should have been selling 6.5% up move. Somit did indicate this, that because the deal has happened in the pre-open session, there could be some bit of positivity. And Sanofi Consumer Healthcare on the promoter stake sale is in focus, and the stock is trading absolutely flat. NMDC, unexpected price hike that the company has taken. That stock is seeing gains of 2.5%. And on the back of auto sales numbers, let's quickly look at the passenger vehicle names. Hyundai, Tata Motors, Maruti and M&M. Those numbers will be crucial to watch out for. I mean, no perfect trend, but clearly majority of them in the positive except one. If you talk about Escorts, Kubota, again, that's another one to watch out for, 0.2% higher. Ashok Leyland down 1.5%. Hero Motor, TVS, Eicher in the two-wheeler space also, which are in focus. Again, they're trading with slight bit of a positive bias. And you have the OMCs on the back of crude again at $61 per barrel. There could be some bit of positive moves. There you go. Almost 1% to 1.3% in terms of HPCL, BPCL, IOC and ONGC, which has seen some bit of negativity. But clearly, a lot of stock-specific action, Alex and Somit, that you are watching out in trade. And I think one key highlight we need to pick up right now is the strength that the rupee is taking. It's past that 84 to the dollar. I think that's something we should be watching out for.
Right, and a few other stocks that I wanted to mention here was M6. That stock is up 2.5% in trade. Phoenix Mill is down 5% on the back of the Morgan Stanley downgrade that had come in from overweight to equal weight. That also cut the target price to 1,660. UPL is up 2% in trade on the back of FMC earnings, and analysts are indicating that there could be a recovery in the numbers from the second quarter of FY26. Apart from that, again, it's Industars, Godrej Agrovet, again on the back of number which is down. But when you look at Nifty, it's hovering around the 24,400 level. Kush, do you see that as a major resistance now?
Not a major one, maybe a mild one, yes. And we did speak of 24,350, as the resistance for the last 6 odd sessions. Right now, you're seeing the Nifty in the clear of that, but 24,400. And the only reason I say that, it's proving to be a minor resistance because, it's been 7 minutes to open. But if you see the derivatives data, there's quite a bit of pile up on the 24,400 call option for the next week's, expiry on the Nifty. Hence, perhaps the, the straddle is at play where 24,400 call and put might perhaps be written today for some gains over the weekend. So I think from that perspective, I think this 24,400 to 24,500 zone might perhaps act as a bit of a resistance. Anyway, we've spoken about the waning momentum. So even if the bias remains positive, the moves could be gradual, and that's okay. You might want to take that as long as the bias is positive. So yeah, as I said, the bias remains positive. Mild resistances around these levels could perhaps see the index consolidating with a positive bias. So if you have a long position, continue to hold, but now trail your stop losses to about 24,250 levels.
Okay, Samit just pointing out to me the intraday chart on Zomato. Let's pull that up.
Eternal,
because
yes.
well, it is called Eternal now. It'll take me a
It
little
opened with a
while.
down take of 5%, but now it's trading.
It'll take me
green.
a while to get used to the change in the name, but eventually I think I will manage to call it Eternal. Let's pull up the intraday chart, because that's really going to give you a picture of where things are. This is a stock that was down about 5% in pre-open, and it has made quite the comeback from that point. So the question really that Nirav, you have to answer is that the issues that have been highlighted with regard to the cash burn, with regard to the competition in the space, and the gross order value, which has come in at a growth of 16%. The target was 20%, but Dipinder Goyal saying that 2 percentage points of that should be accounted for the fact that last year was a leap year and you had one extra day, and there's one other fact that he's talked about. So he's attributed it to those two things. And if you remove that, then you're talking about 18%, which is still not where they want to be. So do you think all of those things are in the price right now?
Well, I think it's very difficult to match point to point, but I think the efforts have been in the right direction. So I think that is what needs to be appreciated by the market, and I think hopefully the markets are going to pardon this, and we'll see the stock making a comeback.
All right. What about the charts then? Because what an incredible move from the lower point today, right? Kush, what would you do with something like an Eternal?
Okay, so I don't want to be genius in hindsight, but I'll tell you what. When I saw that 5% downtake, I was like, this is a good move. Perhaps a little lower as well would have been a good move, and I'll tell you why. For the last few sessions, I've maintained that the Eternal range, the range for Eternal.
Come on, that was
some wordplay.
No, that was a low blow.
The range for
no.
The range for Eternal.
Because next you say, Alex, you're an eternal optimist, stuff like that.
Right. The jokes practically write themselves, right, with the name. So.
Low-hanging fruit. Aim higher.
With a MCU movie coming out, Eternals is one of the other plays if someone's actually into that. No, but it's going to take me a while to get my bearings right on this. So yeah, the range on the Eternal stock price has been 200 on the downside and about 240 on the upside, right? Closer to the lower end of the range, your risk-reward ratio becomes very attractive. And at an opening price of 220, it was bang in the middle of that range. So I was like, if you get it a little lower, then perhaps at 1.5 to 1:2 kind of risk-reward ratio will perhaps be a favorable trade. Closer to 200, 210 mark. That's just not turned out. I mean, you saw that tick and then it's now up again. So at the moment,
up 2%.
Up 2%, So now I would avoid it, If it goes above 245, breaks that, resistance band, then perhaps you want to consider. But otherwise, this range might take, some time to perhaps clear out. And you have seen this range for the better part of this year. So above 245, and I'm giving some grace, above the 240 resistance level. Above that is perhaps you might want to see some momentum building up. So up until then, you might want to hold it, but not add at the moment.
Okay. While I discuss with Kush his strategy to come up with better jokes on Eternal, let me thank both Nirav and Kush for joining us this morning. Thank you so much, gentlemen, for taking the time. We will talk about more stocks like this one, but we have to slip into a very quick break. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
Welcome back. You're watching India Market Open. 24,484 is what you're tracking in terms of Nifty 50 as well. And a good amount of strength that's coming in with regards to the Indian rupee. Let's quickly pull up that one on the screens. 83.86 is what you're tracking against the dollar. And if you see in terms of the rupee as well, what is giving its strength is because the dollar seems to have weakened, and this is mainly on the back of the poor economic data that you've picked up in the US. That is what is giving the Indian rupee some bit of strength. Whether sustainable or not is a key question. We will ask a few of our guests as well once they come in and join. But moving on, one stock that is in focus is a Vedanta on the back of the numbers. Nothing that great with regards to the quarter, but it's mainly the capex that enthused investors. The stock is seeing cuts of almost 0.7%. We're now joined by Mr. Ajay Goel, Group CFO at Vedanta, as well as Arun Misra, Executive Director at the company. Welcome to the show, gentlemen. But let me first start by asking your view on how the quarter has gone by.
This quarter, we did well on the back of good operational numbers, both in terms of volume and reduced cost. And we generated a profit after tax of 4,961 crores and 180% growth year on year. And this has resulted in the annual profit after tax of 20,535 crores, 172% year on year. So that's a very satisfying number.
Okay. All right. So the one key highlight for the aluminium segment was the FY26 guidance given for production and costs. What is going to drive the production growth, and how are we going to see this 5% reduction in production costs play through?
Production growth primarily will come from the commissioning of the additional capacities that we have put up. And so that is on the volumes in the Balco expansion project that will get commissioned. And there are certain debottlenecking projects in Jharsuguda as well. While the cost reduction will come from our capacity augmentation of Lanjigad Alumina Refinery, and we should see the capacity exiting at 4 million ton at the end of the 4 million ton per annum at the end of the year. At the same time, our own bauxite mines, regional bauxite mines, should get commissioned in Q2. It will start producing towards the end. While we do recognize that globally also there is a lower trend of the prices of alumina, and so accordingly the bauxite. So whatever we purchased will be at a lower cost and will increase our own production component in the overall alumina that we consume. And that will reflect at about 10% reduction in cost of aluminium.
All right. And Mr. Goel, what is your outlook when it comes to the aluminium prices for the first half of financial year 2026?
So if you look at maybe over the last 1 odd year, and the pricing for aluminium has been quite strong. It's driven by the demand world over, and more so in India. And if you look at the demand in India, it's going out about 12%. And Vedanta has an advantage of home demand. So if you look at the current spot LME, it's about $2,500 per ton. And most expert and the consensus believe will go back to last year's levels, almost $2,750 per ton.
Right. So the kind of guidance that the company has given, if you talk about the aluminium business, what kind of EBITDA benefit does it have on a consolidated level, Ajay?
Say overall our focus remains on aluminium in overall is on the very basics. So we are working on volume augmentation across the businesses, including aluminium. At the same time, cost compression, which is led by integration of supply chain, more so in terms of Lanjigarh refinery. In the current fiscal, as the refinery ramps up in aluminium, our aluminium margin may go from almost $850 per ton to more than $1,000 per ton. In that case, aluminium becomes our most profitable business, helping in terms of EBITDA augmentation.
All right. I do also want to talk about the oil and gas segment, and we've noted a further production reduction in FY26 and flat operation expenditure. What can or when can an investor expect a meaningful recovery in that segment?
On the oil and gas side, the decline that you see is natural in this business. After producing for quite a sustainable period, there will be a decline. Now our next target is to arrest the decline by injecting alkaline surfactant polymer in Barmer oil fields. So that has started in one pad and it will keep on increasing in this year. At the same time, we are looking for newer areas of production. We are looking at more gas production. Finally, we would plan to deliver about 105,000 barrels of oil equivalent in the current next fiscal year. Well, in Q4, we finished at about 97,000.
Right, so that's with regards to the overall outlook. But thank you, Ajay. Thank you, gentlemen, for joining us on the show as well and sharing your views in terms of what's expected going ahead. In fact, Vedanta is going to be an interesting one to watch out for going ahead. Let's quickly pull up what's happening on the Indian rupee right now. The moves that you're seeing are interesting. 83.93 is the level that you're tracking against the dollar, so some strength that's coming in there. Anindya Banerjee, SPP Currency and Commodities Research at Kotak Securities, joins in. Anindya, good morning and welcome to the show, and thank you for speaking to us at NDTV Profit. The strength that the rupee has picked up in terms of today's session, in fact, it started off on Wednesday. What are the reasons you're picking up? Is it global or is it the FI support that India is getting?
A very good morning and thank you for having me. It is actually primarily, I would say, India's attraction as a market in the emerging market space, because we are seeing quite a bit of flows in the equity, and debt had seen a substantial outflow in April as the yields had crashed. But over the past few days, we have seen some flows come into debt as well. But when I look at the economic backdrop, on one hand, we have lower oil prices, which is a bonanza for the consumers. Then you have a stronger currency, and third, the ample banking liquidity. These three pillars are creating a very optimistic scenario for the economy. And plus, you add to that case that because of the trade war between China and America, there is a lot of talk that some of the companies are looking to use India as a place for manufacturing. So India is quite well positioned, and that's the reason why Indian rupee is outperforming, in spite of the fact that RBI is there in the market absorbing the dollar flows. So that's why we have seen it go below the level of 85.
Anindya, hi, Alex here. I'm just wondering whether some part of this big move that we're seeing is a bit of a catch-up move, considering that the dollar index, and that's how I'm measuring the strength of the dollar, is now hovering around that 100 mark. Of course, it had hit 99, but it's back to about 100. So is a bit of catch-up at play, and what is the kind of upside that you see in the rupee at this juncture?
Sure. Yes, it is, because the Indian rupee has not appreciated as much the other currencies have. But we have to understand that when we look at the dollar index, it's primarily the European currencies, except for the one yen, which is there in the basket. So if you look at the emerging market space, we have done almost in line with other the emerging market currencies over the past 1 month or so. But yes, there is scope for the Indian rupee to appreciate over the near term. But as I said, RBI is going to be there in the market because what we have seen in the past is whenever the Indian rupee has done a move which is not in line with other currencies, suddenly appreciating or suddenly depreciating because of any reason, the RBI has come into the market and heavily intervened. So in this case, we could see the RBI come into the market and start buy dollars, and that may prevent the Indian rupee from appreciating too much. But having said that, we could see levels of 84.5 over the interim.
For half over the interim in India, but what is that broad range one should be watching out for? 30 seconds.
So 84 was the breakout point last year. So I think 84 could be the downside, the optimistic case. And on the upside, we could see levels of 86.5. Yeah, but that will depend on the global situation.
Very quickly, just to follow up, now we've spoken about the currency so far, but I also want to get your sense if you're tracking it on the liquidity scenario, how quickly has that moved up, and do you anticipate it moving very close to that 5 lakh crore number that we were talking about because of the OMOs in May?
Yes, because it's currently well above the 2 lakh crore, 2.5 lakh crore now. So it could head towards a 4 lakh crore plus, which is again a positive for the economy.
All right. Anindya, thanks so much for joining in and for giving us that perspective, particularly on the currency. Now, interesting moves to track, of course, in the currency market and certainly on bond yields as well. In the recent past, there has been money to be made playing duration because you've seen a reduction in the policy rates to the extent of 50 basis points over the course of the last couple of policies. And the next policy is in June, where you could well see another 25 basis points cut in order to support the economy. But let's talk about earnings and let's talk about Bandhan Bank. It's the next stock that we're focusing on. The lenders Q4 largely disappointed the street, and you saw margin contraction that took place as well. We caught up with Partha Pratim Sengupta, who's the Managing Director and Chief Executive Officer of the bank, and here's what he had to say about those numbers.
I wanted to understand, my first question, while your profit has surged, but, your operating profit and NII has declined on a yearly basis. So I wanted to understand, do you think that, this growth is sustainable? And what is your view, for the coming quarters?
Yeah. So let me first come to the profit, which is much higher than compared to the Q4 of previous year. So Q4 of previous year was an exceptional year because a large amount of loans were written off in the previous, only in the Q4 of in the last quarter of the previous financial year. This year, the write-off exercises, we have phased it out in 2 quarters. So partly we have done in Q3 and partly we have done in Q4. So the provisions were much more in the previous year, and for which the profits were low. And this year we have actually made a profit of 318 crores because the provisions were definitely much lower compared to that of the previous financial year. Coming to the operating profit, last year the microfinance book was almost 6,000 crores higher than what has been seen in this year, the outstanding compared to the outstanding this year. And that has happened, as you all know, that during the current year, there has been challenges across the country in this segment, which has affected us. So we were also not insulated from what has happened to the entire country, and for which what happened, we have to take some, I would say, strategic decisions. And in some geographies, we have to contain our loan book, for which there has been a slowdown in the pace of growth, and the outstanding has come down. So because the NIM in microfinance is much higher compared to the NIM in the secured book, so that's the reason actually the operating profit has gone a little bit lower. Now, as regarding the sustainability, I can say that going forward, we are thinking that the quarterly profits would be much more than what we have posted this year, because mainly of 3-4 reasons. The first reason is that the slippages that we are witnessing in the microfinance book, so that we are seeing that it is decelerating, and Q1 and Q2 will be a little bit of problem, so we accept that. But Q3 onwards, I think that will be stabilized, and the slippages will be at the normal level of around 1.5 to 2%. That's what we are. So it will not be as high as 10% what we have witnessed during the previous financial year. So that is one of the main reasons I can say that the profits will be there. Number two is that as a strategy also we are becoming more and more universal bank, as in that our secured book, which was 42% last year, I mean last year means 23-24, it is now 50.5% in 24-25, just in the currently concluded financial year. So you can see that we are actually changing our asset base. We are more focusing towards a secured book, and going forward also the secured book will increase. But yes, as the secured book increases, there will be some moderation in NIM that we accept for the year. There will be a moderation. So even the current NIM of 6.7% would become a little bit lower. But given that, because the volume of business will increase, number one. Number two is that we are also looking at increase in other income through various other services that we are going to introduce, mainly the payment systems and the digital banking. So we fairly we can see that the profits during the coming quarters would be better than what we have posted in Q4 of 2014.
All right. So you spoke a lot about NIMs and how you are trying to diversify your loan book. I wanted to understand, a lot of banks have actually said that they will expect some pressure on margins going forward. Your NIMs have also declined this quarter. So I wanted to understand, given that we're already in a rate cut cycle, where do you see your margins, in what range, if you could provide us a number?
So the first of all is that we have also rationalized our cost of funds, the deposits rates in the last ALCO meeting. We have also rationalized those rates. That is one. Of course, the effect of the deposits will not immediately come, excepting the savings bank account. In the term deposits, it will come as and when they are matured and further renewed, or on the new deposits. But the second thing what we have also done is that we have made a clear focus that we will grow in the other sectors of the business, that is the housing loan, the retail, and the other factors, I would say. So considering all these factors for the year, we feel that the rate cut that has happened will not impact that. It will impact definitely, but I think going forward we can make it up a lot from Q3 onwards. The first thing is that if you look at our loan asset book, so almost 55% is under fixed income. So almost fixed interest is 55%. 5% is through MCLR, and 40% is through EBR. So the EBR, of course, the transmission has immediately taken place, and as I've told you, that the fixed income rates loans, that will more or less remain stable unless we decide to go for a cut. So that is one thing. And so almost 40% of our loan book may get impacted because of EBR in the Q1 and Q2, but Q3 onwards we will get the effect of the rationalization of the deposits that we have already made.
All right. Sir, one more question. You spoke of loan growth and how you're planning to diversify. On an annual basis, I see that your loan growth has sort of come down. If you could provide a loan growth and a deposit growth outlook for FY26, and adding to that, the Tamil Nadu Assembly has actually passed a bill on coercive loan recovery. I wanted to understand to what extent does that could hurt Bandhan Bank, because there is fear that this may affect lenders, given that the government, this has already been introduced in the parliament by the government.
So first of all, let me come to the second part of your question. See, in Tamil Nadu, our total exposure is close to 400 crores. So it is very, very minimum. It is only 1% of our book, and means of our microfin book, and 2% is I would say, in the SMA2, and another 2% in SMA1. So it is not going to impact us much more. But the second thing is that the law that has been enacted in the assembly for that year, it is not applicable to banks. So it is not applicable to Bandhan Bank. So one thing is very clear for that year. But nevertheless, we are keeping a close watch, and we have already given a guidance that everyone has to follow the guidelines of Reserve Bank of India while recovering the loans. So that is very clearly given. So I don't think that Bandhan will be affected that much in respect of this Tamil Nadu, whatever the rules they have made for them.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture
Yes,
now,
yes,
right?
yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you
Now
have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
Hello and welcome. Now, one other stock in focus, and it's earnings heavy, right? Federal Bank came out with numbers. Margins were a bit of a disappointment, and it's likely why you're seeing the reaction that you're seeing on the counter. Now, joining us, Venkatraman Venkateswaran, who's the Group President and CFO at Federal Bank. Welcome, sir. Good morning. I want to first try and understand from you with regard to growth for FY26. You're making several changes with regard to systems within Federal Bank. What's the growth outlook like?
See, Federal Bank has always demonstrated solid growth even in the past years and has been growing faster than the industry growth. Having said that, with the leadership change, what we are looking at is tweaking of some of the parameters to ensure that the growth which we get continues to be quality growth, profitable growth, and in the areas where we have chosen to grow. In the analyst meet in February, our new MD and CEO Manian had given an outline of areas where we want to focus, especially on the growth aspect on the medium yielding assets. And what we have seen play out in this quarter is exactly the growth in the chosen areas. Now, with that backdrop, we will continue to grow in the chosen areas, and the growth will happen both on the assets and liability side. For example, on liability, we clearly spelled out that our focus will be on CASA. And I'm happy to report that CASA has grown close to 7% QOQ, and CA specifically, I want to call out CA, 27% QOQ growth, and the number of accounts we have onboarded in CA is significantly higher than what we have seen in the past. So there will be focus on the chosen areas, and we'll continue to grow. And we have absolutely, in terms of ready in terms of capital, in terms of CD ratio, LCR. So we will capitalize on the growth opportunities.
Right, so with regard to how your commentary panned out, you suggested a 1.2 to 1.5x growth to industry. What are the levers that you're going to use? What areas are you going to choose to grow in?
Okay, in terms of growth guidance, yes, we typically are about 1.2 to 1.5x of nominal GDP or industry growth, which is pretty much around the same levels at this stage. The chosen areas of growth which we have demonstrated in this quarter as well as, if you look at the advances side, we categorized it into high yielding, very high, high, medium, and low. Now, the focus is on growing at this stage on the medium yielding assets. In that, we have CVC, we have commercial banking, business banking, gold. These are the areas, auto, these are the areas where we have grown quite well, very strongly, over close to 20% and above growth in all these areas in FY25. And on the high yielding, if you see, we have credit cards and personal loans. We have seen the card growth come back quite strongly last quarter, and we believe that we are in a position to continue to grow the cards portfolio quite well. Personal loan growth also will come back in FY26. In the very high yielding book, we have the MFI. We believe it's still not time for us to press the pedal on the MFI. Maybe 1 or 2 more quarters of caution is warranted. And once things stabilize, then we will look to see how we will address the growth in that segment. At the lower end, we have the large, the home, and on the medium yield, we also are focusing on the LAP. On the low yielding, we have home loans and corporate. We are not saying we won't grow that. All that we are saying is we want to make sure the growth is profitable. So if we have a home loan customer with multi-product, whether it could be a home loan with a SA, with a credit card, insurance, or wealth offering, and it's a relationship-based growth, we're happy to look at it. But otherwise, just growing only home loan and this super aggressive pricing market doesn't make much sense. So the growth in those will be relatively low. And having said that, again, the example I'll take is on corporate. So there are corporate relationships where the fee income growth more than offsets the thin margins which we have. So we will choose those relationships where we see the opportunity to grow holistically.
Interesting point you make. Now, in terms of, and brings me well to the next question and possibly the apprehension of how the street is looking at the numbers as well. Where do margins bottom, therefore? We're in the midst of a rate cut cycle. Where do margins bottom, and what's the aspirational margin number looking like normalized?
Just a small correction. I'm not saying we are focusing on high margin. We are focusing on profitable advanced growth. Okay. And having said that, in terms of NIMs, yes, we have seen 2 rate cuts. And in this quarter, we have managed to maintain the NIMs at the same level as last quarter, despite a rate cut. And it's around 3.12. The factors which came into play is making sure we grow those segments where it is relatively higher yield as compared to the rest of the book. And as you know, margins are impacted both by liabilities and assets. On the liability side, our focus on CASA has paid dividends. We'll continue to focus on growing that strongly, including the savings side as well. And on the deposit side, we have started seeing banks dropping deposits. We have also moderated the rate on deposits for some buckets. We have reduced our SA rates. We were one of the first banks to reduce SA by 25 bps, which will help us offset some of the impact of the rate cuts. There is an expectation that there will be 2 more rate cuts. Now we have to wait and see how it plays out. I don't want to give a number to say this is where it will bottom out and all that, but what we are trying through the combination of working on both the asset side and the liability side is to ensure that we are able to balance the impact and make sure that the impact on NIMs is minimized.
So therefore, and credit where credit is due, what with regard to where the agri pocket lies, there's been some bit of pain with regard to slippages there. What's the FY26 outlook with regard to that one?
Yeah, see, at an overall level, the track record which we have had is to ensure that the slippages are contained within 1% of the assets. So if you look at Q4, it's about 0.81%. And over the last several years, when you go back, you'll see that it's not exceeded that. And that is given our moderate risk appetite and the framework within which we work. On agri, the MFI piece sits in that line. And as I said earlier, I don't think we have bottomed out from asset quality worsening on the MFI space. I do believe probably 1 or 2 more quarters before it bottoms out. And Q4 for us was a record quarter in terms of recoveries as well. So we have to make sure that our teams are working hard to make sure recoveries happen at pace, and we try and offset to a large extent on the slippages. And yeah, so that will continue. And this is not a story of this quarter or this year or last year. Over several years, if you go back, you will find that our asset quality and credit cost has been probably amongst the lowest.
All right. Thank you so much, sir, for joining us. All the time we have. So we're going to slip into a very short break. On the other side, more action. Stay tuned.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now,
yes,
right?
I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you...
Welcome back. You're watching India Market Open. Nifty 50 well above 24,500 and 1% higher in trade today. Quite a few of the stocks on the Nifty 50 gaining ground. But in an exclusive conversation with NDTV Profit, SEBI chairperson Tuhin Kanta Pandey says that the market regulator is actively working on fine-tuning regulations related to F&O market in a bid to protect small retail investors. Pandey also said that SEBI has released a consultation paper for changes which has received over 800 public comments, and a final decision will be taken soon. Listen in.
Talking about the regulation, one regulation around F&Os, the derivative markets. Everybody is talking about that whether it's a over regulation or not. But one thing the experts are saying about that, this could hurt volumes because the way it is designed, it's skewed in favor of large institutional investors. But of course, SEBI is coming from the point of view of retail investors, because you have studies talking about 90% retail investor losing money. How are you seeing this? What is your assessment at this point of time? And do you see that it's an over-regulation when it comes to derivative segment?
In the derivative segment, we had some issues around it when we studied this matter, and we put it out as this report also in public domain, where we said is at least 9 out of 10 small investors were actually losing money. The question is that whether the particular methodology which they were deploying was good enough, whether there was proper education. And we found that there was a particular problem in terms of, index options on the expiry day. I think that is where we find it was truly distortionary. The purpose of F&O market, which is also a very important market, is to hedge risks and also help price discovery. So to that extent, I think the market does that job. The derivative market is really important market. But sometimes I think if the distortions come in form of a particular way that we are looking at it. So therefore we put out a consultation paper saying that, when we need to change the metrics, the risk metrics, where For options, in terms of risk metrics, we were having apples and oranges issue. We were, summing up, different components like futures and options. They're slightly different. And options, we were not counting the delta. And that delta is now, we intend to bring in so that we know exactly, how the, everyone understands what the risks are.
So that's SEBI chairman's first conversation post taking his position as well. But moving on, in a special conversation, Vari Energy's CMD Hitesh Doshi spoke to my colleague Neeraj Shah at the company's unit in Vapi, Gujarat. The stock today is seeing gains of 0.3%, but let's quickly listen in as he talks about the company's plans to become an energy transition company.
What is Vari Energies? Could you describe Vari to us as it stands now and as you see Vari to be like, let's say maybe towards the end of the decade or maybe 10 years from now?
Vari started with the mission, I will say, can we change the energy we are using? And that has from normal electricity to solar way back in 2007 with that idea. Can I use a solar power? And this, what I saw 16, 17 years back, and today it is alive. Now the technologies are coming up constantly. The new things are coming up. So we'll continue to work on the direction, the way we use the energy, and the new name for it, the energy transition. So in that it comes an energy transition company. Of course, we have been selling a solar for a long time, and company knows as a solar company. But internally, we are not a solar company. Internally, we are the energy transition company, and we'll continue to work in that direction. And that is a vision for the company. That how we keep on changing the way the people are using the energy in this transition.
Okay, so Mr. Doshi, the belief is that Vari or you are executing a long-term strategy to be both a vertically and horizontally integrated company.
Right.
Could you describe or could you tell us about it?
See, to answer, like on the horizontal side, solar panels, batteries, inverters, right? Hydrogen electrolyzers. And if you go vertically, to make a solar panels, we'll need a glass, aluminum, solar cells where we are today now, solar wafer, solar ingots. Same things will come up in a batteries, electrolyzers, and other products. But this product range is going to increase. It is not going to stop at the electrolyzer or at the solar panels. So product will increase. Same way, vertically, downward side and upward side. We are talking about developing a solar farms, power generations, EPC. So whatever you name it, going ahead till we generate the power and going backward till we make all the components for it. This will continue in entire business chain.
Okay, so as I understand, sir, the main product right now is modules.
Right.
And on modules now you're going vertical wherein you do, let's say the cells or the ingots, etc. and stuff like that. You are adding more product lines, you are saying?
We are in the solar panels also, we are adding a lot of product lines. Okay. And same way to make a solar panels, we have gone to the solar cells. Now we are going for an ingot and wafers.
Okay.
So that backward integration is going on.
Wow. Okay, please.
Okay, and you can catch that entire interview later in the day, over the course of the weekend, and also on our YouTube channel. I'd invite you to check it out. It's a very fascinating interview. I thought so, at least. Let us know in the comment section what you think. In the meanwhile, let's introduce our next guest for the day. We've got Prateek Agarwal, Managing Director and Chief Executive Officer of Motilal Oswal AMC, joining in. Prateek, thanks as always for taking the time, and I think it's a great moment to speak to you today because some fears on the global stage of the implications of tariffs seem to be dissipating because the US administration themselves are contending with the fallout of what they've tried to do. The GDP numbers coming through day before yesterday, and everybody else is trying to make sense of it as well. Seemingly, in that time frame, foreign institutional investors are starting to look at India more attractively. What specifically are you focused on, Prateek, at this juncture when you look at all of these moving parts?
So
we have been more positive than most all through this. We said, even taking into account global slowdown as a consequence of import duty increase in the West, uh, we could have been net gainers, because while on one side we could have lost a bit on exports, but on the other side we were gaining a lot on account of lower oil prices. So net all as an economy, we were not losers at the worst. Was the first thought. Yes, markets behaved differently. Markets behaved differently because bond yields in the US shot up. And, one category of foreign investors who are yield focused moved out probably. Markets behave differently because currencies turned volatile. So somebody who is engaged in levered strategies, have to, quickly bring down leverage and maybe square off all positions. So the performing part of the market got hit much more. So those were the things which happened, and of course China, whatever deep seek moment it had, and pulled money away from other emerging markets into China. Now, if we see, a lot of these things are reversing. Bond yields in the US down sharply, closer to 4%. Oil down sharply. So oil down sharply is India looking good globally. I mean, this is as nicely sold a story as possible. And rupee having strengthened, hopefully it stabilizes. Stability is what is more required versus level, but rupee has strengthened back to December 24 levels. So I think DXY is below 100. Lot of positives. I think this is time now that people are, finding reasons to stay negative. Otherwise, if you speak to corporates, incrementally there is a slowdown which is there. Results is all of that. Okay, but ceteris paribus versus April 2 to now, are corporates feeling better or worse? I think that is a question that you should ask every corporate on your show, especially guys who look at external markets. My sense is most of them would be very positive rather than negative.
Pratik, good morning. This is Hiral on this side. So if you have to look at FY26 as a year, earnings which have already come through, the commentary that we've already heard, what is your estimate telling you? Are we going to be better off? Because the overall expectation is mid-teens right now. What are you looking at, and what could be the negative triggers that we will have to keep in mind?
Yes, trying to find negative triggers. So,
I think that's what the world wants to know, right, Pratik? Because positive, everyone knows where we are going, but what is it that will take us down?
Get a negative guy. From me, you get positives. So, in fact, you spoke of earnings. Okay, let's start from there. This year is a year where you will end at probably 3, 4, 5% earnings growth. Okay, now you are saying next year will be 11, 12, 13%. Mid-teens actually is higher earnings growth. Now, if 3, 4, 5 is what you are going to end at, will people find double-digit plus earnings growth positive or negative? Is one thought. And two, we have been saying something else very different, which is there is old economy, which is very well represented in the index. So they had their glorious days. The newer spaces which are coming up, where growth quotient is of a very different order, is not there in the index, and one needs to focus there rather than index. So here again, when people say large is good, index is safe, I have a very different view. I think growth is safe. If index companies don't deliver growth, in excess of the averages, how do you build a thesis of their continuous performance? So growth is available in many newer spaces which are opening up. So it could be capital market companies, it could be electronic manufacturing, it could be new tech, and you get the drift. Spaces which were probably not there in the market 4 or 5 years back. That is the space to focus on, where earnings growth is very different from what you see in the index. Index earnings growth in a large part these days looks like, same as the western part of the globe, where the economy grows 2.5%, 3%.
So, and that's a fair point that you're making, which is where stock pickers earn their bread and butter, right? So therefore, when you're talking about these new opportunities and you're talking about the earnings growth, which will eclipse, shall we say, the companies that have led the last couple of legs of growth, then what is the kind of earnings potential that you see if you were to put numbers to it? And you were to say that this particular sunrise sector, for example, if you talk about capital markets, and you talk about wealth managers, for example, or you talk about insurance companies, or you talk about in the healthcare space, so many opening up, right? Or you talk about EMS plays. So where, according to you, is the fastest leg of growth, and what is the earnings potential there?
So each one of them would do probably in excess of 25%. Add renewables to the space, and maybe some of the faster growing NBFCs. Some of the companies which are positioned in the luxury consumption space. These are the spaces where growth, has tailwinds, and should be significantly faster than the index itself. Because if large was safe, then I would just urge people to go back to 94 and see what was there in the index then, and try and find it in the markets now.
Yeah.
Both is safe. It is not the size which makes you safer. It is growth that makes you safe.
Yeah, that's an important point that you make. I will come back to you on that very point. But as you know, Prateek, we have the Prime Minister that's set to commission the Virinium port. And this is, of course, the transshipment port and semi-automated port, the first such in India. In fact, Charu is there right now to bring you some visuals ahead of that inauguration. Let me go across to her. Charu, what's the mood like?
Hi, so we are currently here at the inauguration of the Virinium Deep Water Multi-Purpose Seaport. It is set to be inaugurated by Prime Minister Narendra Modi shortly. So what we have learned is that the port is going to be solving a lot of issues for Indian importers and exporters, because currently 75% of the Indian cargo is taken care of by foreign ports. So this means that per container, the Indian importers and exporters end up paying $80 to $200 extra, which leads to a consolidated payments of over $200 to $220 million yearly. Now, these are the problems that are going to be solved by having a port within India that is going to be taking care of the cargo shipments for the importers and exporters within the country. Now, how is it going to do that? It is going to do that because of the close proximity with the Gulf and Europe, as well as the fact that the natural depth in the area of the port is 18 to 20 meters, which is going to be able to help it accommodate the mother vessels easily. And it is also aiming to achieve the cargo work that is given to Dubai, Singapore, Salalah and other countries like that, so that it can be transferred to India, to an Indian port. That's what we know for now, and after the PM inauguration we'll give you more key takeaways and more details.
Thank you so much for getting us the details with regards to what's happening on the port side of the business. But Prateek, let me come to you. I mean, not a sector specific in terms of only ports, but let's broaden this, taking into consideration the infrastructure part of the story in India. You talk about CAPEX. We hit a record high in terms of FY25. Overall, there is still that some bit of cautiousness that is prevailing in spite of a good number in the budget. If you have to talk about the private CAPEX for FY26, how would you look at this aspect? And do you think this is a good investment bet in terms of the sector?
No, so if you are saying that private capex number is not moving up as maybe expected, it's true. To some extent, it should be expected to move up. So private capex, the big part that is expected to move up is BOTs. Earlier, the government used to do it on its balance sheet, so that were cash contracts. Then it moved to annuities, and now it is trying to move to BOTs. If it moves to BOTs, for some time it is on the balance sheet of the private sector, and it shows up in private sector capex. Point one. Point two, if we look at 2000s, let's say 5 to 8 period, private sector capex moved up sharply. So there were 2, 3 components of it. One was BOTs. Okay, this other was coal-based power projects. Okay, and third was steel. These are the 3 areas where a lot of capital intensity is there, and you can absorb. It shows up in private sector capex. Now the problem is BOTs have started. Steel is happening. Recently, you heard of a company putting up a huge steel plant, one single location steel plant, which is probably bigger than whole of the or equal to whole of the PSU presence in steel. So that is the kind of capex somebody is committing. However, on coal-based power, which was a large space where private sector came in that period, is now difficult to do because coal-based powers, we are moving away from coal-based to solar, renewables, etc. And the wind is domestic, but solar, a lot of it is still being imported, while the domestic intensity is definitely increasing. So capex for power generation, which used to be large in that period, is now not as large. So that is something which is probably pulling it down a bit, and the buoyancy one expects is not there. Now, in these spaces, government is focused on. For example, any space where the government is rolling out PLIs and other benefits, we are seeing very strong capex. And the only issue there is these are spaces where the capex intensity is not as large. So for some time, to at least our belief, government will have to continue to pull the train of capex.
So I take the point. I just want to follow up on that, Prateek, because we're talking about building of capacity, and the point that you made on renewable and people moving towards solar is well taken, because a few of the larger players, they're talking about adding in gigawatts practically the next 2-3 years. So the kind of capacity that's going to come on stream is going to be absolutely phenomenal. But as an investor, how would you play that? Would you play the generation companies? Would you play the transmission companies? Would you play the equipment manufacturers? In your opinion, which is the best leg to pick up?
So all will see growth more than the past period. So on a larger base, higher growth. Because, let's say air conditioning is increasing in the country, point one. Point two, manufacturing intensity is increasing. Manufacturing versus services will consume more power. So on a larger base, one should hope for a larger percentage increase. That said, our teams, we have seen, trying to invest in this space through equipment providers, solar and wind, and through transmission equipment providers. So not the utilities, but the equipment providers, because we see a very long period sustained high growth in that space.
Right. Prateek, so that's with regards to where power as a segment goes. Now, one other aspect that the street is watching out for in terms of how consumption picks up from here on. From your durables to your FMCG, all of that is in focus, but not really translating into the kind of numbers you want to see, specifically from a rural India, from a urban India perspective. How are you looking at consumption, and do you think the valuations are attractive enough right now to bet on this space, or would you say it's a complete avoid?
No, so if you are saying FMCG, I think we are close to zero in our house. So we see that space delivering growth significantly lower than that of the index, X of a quarter or two where input prices can change and things look different. If you look at volume growth in most of the FMCG spaces, is simply not there. Point is, a lot of these spaces which are associated with consumption in the country are very well penetrated. Stuff like toothpaste, shampoos, hair oil, everybody uses it. So how much more, how do you increase the penetration? You are almost at the end of that journey. But consumption also means maybe telecom. So any increase in price there is consumption. You have to count for it. Consumption means jewelry, for example. Consumption means ordering food and other things sitting at home. You're paying for that service. It's not coming free. Consumption means electronics. Consumption means also, buying real estate. And all of these spaces, if you see, we are seeing pretty decent growth continuing. In any case, there is a block of years wherein one space, consumption or capex, drives the economy. 2000 to 2008 was the period when capex drove the economic growth. That was the engine of growth. 8 to 20 was of consumption. 20 onwards, from the bottom of COVID, again, it's becoming capex as the key driver. I think it shall sustain for several years. But that said, the luxury part of consumption, if you take into account that per capita in the country is moving up, and we are a very aspirational society. The stuff which is good, it's not only priced higher, it is good. There is utility to it.
Right.
Are categories where you shall see better growth.
Yeah. Prateek, thanks so much for joining us this morning. Insightful conversation as always. Apologies for cutting you off. We have to cut across to the Waves event. In fact, we spoke about this earlier today. The Waves Summit being held in Mumbai brings together content creators, media houses and the who's who of the nation's entertainment industry. Prime Minister Modi has called the event this event to herald the power of India's orange economy. Minister of External Affairs Jaishankar is speaking at the event right now. Let's listen into what he has to say.
And prioritizing its ethics are all part of the emerging discourse. And there is much more there that will unfold. So friends, I'm confident that the Waves platform will serve to deliberate on the key issues before the global media, entertainment and creative worlds. Once again, I welcome you all to this session and look forward to a productive roundtable. I thank you for your attention.
Thank you, Honourable Minister Dr. S. Jaishankar, for those insightful and forward-looking remarks, sir. I now request the members of the media to leave the meeting so that we can commence the proceedings. So, members of the media are kindly requested to leave the hall.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Let's start with the story of how Fasos began, you're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture
Yes,
now,
yes,
right?
yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
Welcome to NDTV Profit. I'm Mahima Vachrajani and you are watching Ask Profit, a show that gets all your stock related queries answered. Before we move on to that, let's take a quick check as to how the markets are panning out to be right now. Let's pull up the benchmarks. The Nifty 50 is trading around 0.8% higher in terms of its fall from high. That's been around 73 odd points, but it's recovered from its day's lows for sure, trading 0.8% higher. Let's pull up the Nifty heat map and see what counters are buzzing in trade today. There is something like an Eternal which is recovered on the back of its earnings. There is Asian Paints doing well in trade today. Maruti up 3%. As Hindalco, which is up 2% as well. But Eicher Motors under pressure, Nestle under pressure, Bajaj once again down by about 0.18%. Let's pull up the Nifty Midcap 150. The Midcap 150 is trading around 0.4% higher, a tad bit lower than what benchmarks are trading at. In terms of the Small Cap 250, it's trading around 0.5% higher. In terms of the sectoral indices, let's pull up that and see what sectors are doing well in trade today. Well, almost all sectors in green except for Nifty Defense, where we're seeing some amount of profit booking, almost trading flat. Nifty Pharma also trading almost flat. Nifty FMCG also trading almost flat. There's Nifty Oil and Gas up by about 1%. Nifty Auto up by about 0.8%, followed by Nifty Metal, Nifty PSU Bank as well as Nifty IT. Let's also pull up the overall BSE 500 and see what counters are buzzing in trade today. In terms of the gainers, we have something like Credit Access, which is up 7.8%, Sonata Software up 7%, Nuvoco Vistas, which is up 6%, there's Jubilant, which is up 5%, PNB Housing seeing gains of about 5 odd percent, Coromandel also seeing gains of about 4 odd percent. Some counters not doing well. Godrej Agrovet down by about 11 odd percent, Phoenix Mills down by about 5 odd percent, and Data Patterns also down by about 5 odd percent. But Sona BLW is the counter which is in focus. And we also have Puneet joining in to discuss as to how the quarter has panned out for the company. And of course, we're joined by the management for the conversation as well. Puneet, how was the quarter for Sona BLW?
Well, definitely. First, thanks for that. So definitely, earnings were largely in line with estimates. It was expected to be a slightly weaker quarter. Revenues were down by about 2% in this one. But largely, I think it's the commentary that's something in focus for the street today. And while the stock is in green, it's corrected from its highs. But to know more about how the quarter gone by was, and what is the outlook for the next financial year. We have Rohit Nanda, the Group CFO of Sona Comstar, who's joining in now. Mr. Nanda, good morning, sir, and thank you so much for joining us today. Just want to start off, essentially in this particular quarter, it was, marred by tariffs essentially, and that's something just I want to start off because you had one huge order win by the end of the, I think March somewhere, you got a big order win of 1,500 crores. What is the current conversation like on the ground? Have you seen some delays in terms of order wins in the month of April?
Yeah, good morning and thanks for having me here. So look, there is right now, as you can imagine, with so many multiple noises which are coming out and multiple clarifications, etc. Till I would say 2 days ago, there was too much of confusion. Therefore, I would say there's been noise because of which it is difficult to sort of. So uncertainty has gone up, let me put it this way, in terms of one's ability to predict or to see the near term. Having said that, there was this clarification which the White House has issued with respect to auto tariffs 2 days ago. That kind of clears up a lot of, I would say, fog, at least for the time being, unless there are new announcements that they make. So right now, I think what they've done is they have said that companies which are doing high value addition in US and under USMCA, they will be largely unaffected if the value addition is upwards of 85% in the first year and upwards of 90% in the second year. So from that standpoint, if we look at our revenue exposure to US, which is about 40%, we've done some assessment customer by customer. So out of this 40, 30% of the total revenue comes from OEMs directly, and we've done the assessment. And according to us, for most of their platforms, they are doing value addition more than the threshold within United States. So this part of the revenue should stay unaffected. 10% of our total revenue that comes from US is through tier ones. There also, we've done order by order assessment, and our view is that at max 3% of our total revenue is what potentially could be at risk. But that also is a worst case scenario because the customer will have to find a local manufacturer who can sort of potentially replace the supplies that we are doing, and typically that also takes about 18 to 24 months. So having said that, that's the, I would say, preliminary assessment basis the clarifications which have come out just 2 days ago. In terms of order pipeline, the pipeline continues to be strong. There are engagements. In fact, the level of engagement with some of the European customers has gone up in the past 2-3 months, maybe because of the uncertainties of the supply chain, which are there or which have cropped up, I would say, over the last 3-4 months. So level of engagement with the customers has gone up, but I guess till the fogs clear up, the order wins and all may be a tad slower. But as I said, the pipeline has become stronger. In fact, degree of engagement has gone up with the customers.
So Nanda, I just want to take your point forward here. So roughly 40% of revenue comes from the US. You said 30% of that is specific to OEMs. And there, the threshold for you is above the 80% to 85%, which is now not going to be tariffed based on the announcement that was done a couple of days ago. Is that correct?
No, so let me clarify. So 30% is of the total revenue, which means of 30, not 30 of 40. I mean 30 of the total revenue of the company.
Okay.
And the value addition requirement is for the US OEMs, not for us.
Correct.
Yeah.
And sir, just want to ask you, because you also have a plant in Michigan for Tata Motors. Essentially, how much of the US revenue of 40% is coming from within the USA, which won't be affected by tariffs? And how much is actually exported from your facilities, either from India or from around the world?
So exports to US largely happen from India. we do have a local facility from where we are doing about, let's say about $20 odd million of revenue. But there also, the preliminary sub-assembly parts are done in India and the final assembly is being done in US. So it's not a completely independent operation in US. So for that matter, I would rather look at the whole equation in sort of at par rather than segregating the US supplies, because part of that will also flow from India.
Mr. Nanda, you also have already a plant in Mexico. You have another one coming up in FY26. Is the assessment that USMCA, and I think your plant will be compliant with that, is the assessment that all auto parts essentially exported to the US from your Mexico plant will not have any kind of tariff impact? Would that be a safe assumption to say as things stand as of now?
So I think, basis the latest circular, and I don't know if things again change later on, but the tariffs have not been taken away. The OEMs who eventually are supposed to bear, the cost of tariffs, they've been given, a relief that in the first year they'll be getting 3.75% of the sale price of the vehicle as a subsidy or rebate from the government. Okay, provided their value addition through US or USMCA is above 85%. And in the second year, the same number comes up to 90%. So as long as, our customers are assembling the final vehicle in US and have that kind of domestic value addition, including USMCA, they will be eligible for this rebate from the government. So to that extent, they should be able to bear the increased cost of tariffs.
And Mr. Nanda, just one update on your acquisition of Escorts railway division. The timeline has now moved to May. I just wanted an update as to what's any kind of reason for the delay, and where are you expecting this to close by? Is that expectation of closing in this particular year itself?
Yeah, so it's been moved. We've given out the date. The new closing date is 1st of June instead of 1st of May. So in these transactions, there are various government approvals, etc., that are required, be it factory license transfer, and there's so many other approvals. And, sometimes there are delays. So basically the date has been pushed out because of the conditions precedent, which were set to close the transaction by 1st of May. They were not getting met by 1st of May, but we are confident we should be able to meet the 1st June deadline.
Mr. Nanda, thanks so much for joining in, giving us a whole host of details about the company, as well as what's your view of the tariff market. And we look forward to our next conversation. But thanks so much for joining us today.
Thank you, Puneet.
Well, essentially, Mahima, very interesting in terms of tariffs, because there are only a couple of companies having a major contribution from the US.
Right.
Definitely Sona BLW, one of them, and management quite optimistic, at least as things stand today. The impact will be just limited to 3%. That's also in a bear case scenario for the company.
And that's, I think, seen in the stock reaction as well. The stock has consistently maintained that 2% higher mark. And that's why, even the earnings were largely in line, and the stock is doing well in trade today. Well, with that, let's also welcome in Sameer Dalal of Natverlal & Sons stockbroker, and Jatin Gedia, technical research analyst at Mere Asset Sharekhan, joining us now. Welcome to both of you, gentlemen. I'll start with the first query. And we have Dheeraj, who's calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Netweb Technologies.
Okay.
So, I'm holding, one moment, I'll check.
I believe it's 220 shares. Yeah, okay.
Yeah, 220 shares of Netweb Technologies.
Right.
At 1427.
Right.
So, the stock's all-time high is around 3,000 rupees.
Right.
And I have heard that Netweb is related to NVIDIA.
Okay.
US company NVIDIA. So the company's results are tomorrow. So could I expect some good levels in the coming 3 months, like 1,700 or 1,800 in the next 3 months?
Okay. Okay. Got your query, Dheeraj. I'll take this up.
Or else should I shift to any other
Okay, got your query. Dheeraj, I'll take this up with Jatin quickly. Jatin, a very good morning to you. He wants to know the levels for something like a NetWeb Technologies for the next 3 months. What's the view like? Should he continue to hold or switch to some other counter?
See, the trend for NetWeb is negative as of now. It on the weekly charts, it is forming a lower top, lower bottom formation. So until and unless the stock sustains above 15, 15, 25, we don't see the trend changing as of now. So I think he is currently, the stock is currently trading around his buy price. So I think it's better off to take the money or square off his position even at current levels because only a minor loss is there. Overall, we believe that in the IT space there are many other companies that he can switch to. From the frontline space, we like TCS. It has collected a decent amount in the recent past, and thereafter the risk reward has become favorable for a 3 to 5 month kind of a holding period. So I think you should exit from NetWeb and switch on to some frontline stocks like TCS.
Switch from NetWeb to TCS is the view coming in with respect to where charts are concerned. I hope that answers your query, Dheeraj. Our next caller, Suresh, is calling in from Hyderabad. Suresh, a very good morning to you. How can we help you?
Very good morning. I am holding the BDL shares at around 38 shares at 1,067.
Right.
I'm in around 40% in profit, but I wanted to know the exit levels for this one and what is the near-term future for 6 to 1 year, 6 months to 1 year.
6 months to 1 year.
Can I achieve the previous high, or can I exit it now and enter into the lower levels?
Okay.
Just I want to know that.
Okay, got your question, Suresh. Jatin, I'll come to you again. All of these defense counters did see a significant up moves in, the last 2 days of trade. Today, they are seeing a certain amount of profit booking. Bharat Dynamics, though, is down by about 0.75% right now. But what's the view like in terms of 6 months to 1 odd year? Are the charts still looking attractive to stay invested in the counter?
Yeah, see, more or less these defense company stocks have, witnessed a sharp pullback in the last 3 to 4 weeks. So overall, the structure remains sideways to positive. In case of BDL, the crucial resistance levels are 1795. That is the previous all-time high. So I think the stock is poised for a retest of the previous highs around 1800. So I think it should continue to hold. Having said that, he should definitely keep a stop loss of 1420 on the stock. So if the level of 1420 is breached on the downside, then you can again expect some range bound to price action in the case of BDL. Overall trend remains sideways to positive.
So continue to hold is the view coming in on Bharat Dynamics where charts are concerned. Our next question is from Satyan, who's writing in from Kerala. He's holding 500 odd shares of Ircon, bought at 241 a piece, and wants to know whether he should continue to hold or book a loss. Samir, I'll come to you on this one. He's sitting on a loss of almost 41,000 rupees right now. What should be the next course of action for him?
So honestly, many of these investors have bought these stocks at very high levels when they were in momentum because of the expansion that the government was talking and touting about in the railways. We're not denying the fact that the railway sector is going to continue to see expansion. The demand and orders flow for a company like Ircon, which is in the constructing the rail network for the Indian railways, is going to continue to be decent. But they probably bought it at much higher valuations than what justifies for a construction company, because at the end of the day, these are companies that work on L1 business models as the lowest bidding. You have to be, that means margins are always tight. Yes, the cash flows may not be as much of a concern because they're coming from the Indian Railways, so chance of default or any of that reduces. So that safety is there, but still I wouldn't value them at the kind of valuations that were. Now coming to where the stock is trading today, yes, if you look at it, it's come off from, over a period of time, but I still believe the valuations are a little expensive in Ircon. I think the entire railway construction space still is a little expensive. Ircon is no different. Order flows will remain because, like I said, the government is intending on continuing these orders, and that won't be a problem. But I think the stock needs a bit more of consolidation. If he has a slightly longer term view, he can choose to hold on. But otherwise, I would suggest that there are other companies where valuations look better. If you want to make a shift away from the railway space, that would make sense. But if you have a 2-year view and you feel you can hold on, you will make some money over the maybe next 2 to 3 year period, not immediately.
Okay, and Samir, what would those counters be that are looking attractive in terms of valuations?
So honestly, I think in the banking space, there are quite a few of them. I'll just say yesterday, day before, Bandhan Bank came out with the numbers. Look, we don't deny the fact that the NPAs have been higher and the provisionings have been higher because of the microfinance space. But we believe we're at the end of that pain point, right? So talk about companies in the banking space or the NBFC space that are catering to that segment. We think the turnaround there will start coming. You'll see the earnings picking up. The opportunity in Indian banking is still very large. And these kind of counters where they're trading in near one-time book can go up. So Bandhan Bank is one, IndusInd Bank is another, IDFC First Bank is a third. In the NBFC, there's L&T Finance that is doing that kind of a business. We think that looks attractive. There's Manappuram where, in fact, they do the microfinance as well as the gold loan, and they've got a lot of capital that's coming. That looks attractive. Then you can look at QSR space. I mean, I can go on. In the entire QSR space or the retail space, we've seen a huge correction in valuation. And we believe that the growth in consumption is going to see a great uptick in the current year, given the tax cuts, given the fact that we're expecting, you talk about the monsoons, they're going to be a good one again. So consumption, the consumption story in India will continue to remain healthy. And you will see the operating leverage for all of these playing out. So it could be something like restaurants like we discussed, Devyani, or maybe a Jubilant Foodworks or Westlife Developers, which is McDonald's, Barbecue Nation. Then in the retail space, companies like Bata, Metro Shoes, Manyavar, Trent, yes, valuations are very expensive. I'm not denying that fact. But, given the kind of reach that they have and the deep pockets that they have, given the parentage of the Tatas, I'm sure they'll be able to expand at a decent pace, get their SSSG going. And once that starts coming in, then the valuations need not look so expensive. So these are the kind of counters, I believe, where one can make more money than an IRCON at this point of time.
Pretty comprehensive answer there, Samir. Thank you so much for that. Our next caller, Paramjeet, is calling in from Himachal Pradesh. Paramjeet, a very good morning to you. I believe you have a question on Blue Star.
Yes. Good morning, ma'am.
Good morning. Go ahead with your query.
Having 400 shares of Blue Star at the rate of 1700.
Okay.
Want to know long term as well as short term view.
Okay, I'll take this up with Samir then. Samir, what's your view like for something like a Blue Star and of course Voltas, because Voltas has been under pressure since quite some time now, since its Q3 earnings in fact. How do you compare the both of them and what's the view like?
So, we believe the space in India where it comes to electronic and especially air conditioning is going to see a great uptake over a long term. So fundamentally, nothing wrong with the company. They will grow from strength to strength, no doubt. Similar with Voltas. Voltas has been going through a bit of a lull, but I think that you will see them being able to come back also as well. But the problem we face in the entire space, right? We are a value investor. We believe that something has to be bought at the right price, not just the fact that it's a good company and growth is there, so growth at any price. So it has to be growth at reasonable pricing. Sorry. So based on that, where we find the difficulty in a lot of these counters like Blue Star or Voltas, or the guys who actually manufacture the ACs, that you have Dixon Technologies or your Amber Enterprises, is that valuations have run up far more than what fundamentals justify. We don't deny the fact that growth will be there. Every year you will see not only the replacement demand continuously increasing, but also new customers coming about. And like we talked about, the fact that we believe that consumption growth in India is going to see a good uptick, given the fact that we even crossed the $2,000 mark when it comes to your consumer discretionary, the per capita GDP. So once that starts seeing a bigger uptick, I'm sure these companies will do well. But your returns are going to be subpar. They're going to be under 15% CAGR return over a 2 to 3 year period. So if I were to do that, what is the point of investing in equities when you're going to get less than 15% return? So I would stay away from these counters, not because the fundamentals are bad, but because valuations are really expensive.
Okay, so that's the view coming in with respect to where Blue Star is concerned. Our next question is from Natasha, who's writing in from Goa. She's bought Bajaj Housing Finance at 166 a piece and has bought around 908 odd shares. Wants to know whether she should continue to hold or sell. Jatin, I'll come to you on this one. What are the charts indicating for Bajaj Housing Finance?
See, overall, we believe that the trend for Bajaj Housing Finance has reversed. Yes, recently it has corrected from around 140 odd levels to 120 odd levels. However, the trend has not changed as of now. We believe that until and unless 118 is not breached on the downside, there is a scope for the stock to rise towards the previous high of 138 and also surpass that level. So, my suggestion would be to continue to hold Bajaj Housing Finance with a stop loss of 118 rupees.
Okay, so that's the view with regards to where Bajaj Housing Finance is concerned. Our next question is from Govind, who's calling in from Hyderabad. Govind, a very good morning to you. How can we help you?
Yeah, very good morning, ma'am. Very good morning to all. Ma'am, actually, regarding Kurvi, the Newgen software, ma'am, actually,
Okay.
I have brought it to 200 shares at the price of 970 rupees.
Okay.
Ma'am, actually, can I add some more, ma'am, at least 200 to 300 shares for a long-term prospect to you for at least 1 to 2 years, ma'am? What is the fundamental and technical?
Okay, got your point, Govind. I'll take this up with Samir. Samir, what's the view like for something like a Newgen software?
Unfortunately, we don't have coverage on a Newgen software.
All right, Jatin, then in that case, what are the charts indicating, let's say from a 1 year point of view, should he enter right now? Are the levels attractive enough?
See, the stock is currently trading around 12% higher from the previous trading session. So, definitely there is a positive price action that is happening in the stock. From a medium to long term perspective, yes, I think the stock has corrected from 1800 to 900 odd levels. That's a 50% correction. And technically, there is a trend reversal on the daily chart. So, the lower top, lower bottom formation has now reversed. It's forming higher tops and higher bottoms. So yes, he should currently enter the stock. On the downside, the crucial support is placed at 970. So 970 should be the medium term stop loss. On the upside, we believe that 1275 to 1350 should be the medium term target.
Okay, so that's the view with regards to where Newgen software and charts are concerned, of course, there. Let's take the next caller then. Shankar from Bengaluru is calling in. Shankar, a very good morning to you. I believe you have a query on Kalyan Jewellers.
Hi, ma'am.
Good morning.
Ma'am, Kalyan Jewellers, 300 quantity, average price of 550. Stellar World profit last book, ma'am.
Okay. Shankar, just wanted to know, you want to hold this from a longer term perspective?
Ma'am, short term, February month buy, ma'am.
Okay, okay. Got your point.
Consolidation 3 months, ma'am.
3 months. Okay, all right. Jatin, I'll come back to you again. Kalyan Jewellers, in the past few months, it's fallen quite a bit. But at the same time, in the past 1 or 2 weeks, it's been a topsy-turvy, trade when it comes to Kalyan Jewellers. What's the view like for the next 3 months?
See, I believe that this bounce back that we have got from the lows should be considered as an exit opportunity. Overall, the structure still remains negative despite the rise from the lower levels. The structure is still negative. So, this bounce should be considered as an exit opportunity. At current levels, the trader should exit Kalyan Jewellers.
Okay, exit Kalyan Jewellers is the view coming in from Jatin. Well, Jatin, thank you so much. I believe we have to let you go. Thank you so much for joining us and sharing all those insights. Well, with that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side, so stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close, food and football.
You're painting a very stereotypical Bengali picture
Yes,
now,
yes,
right?
yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent role if you
Now
have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam.
You're watching Ask Profit. Let's take a quick look as to how the markets are doing right now. Well, in terms of where we started at 10:30, markets have fallen by about 70 odd points. The Nifty 50 has fallen by about 70 odd points from its high. The stock is currently, the Nifty 50 is currently trading at 0.4% higher. Let's also pull up the Sensex and see what it's doing in trade today. Well, almost moving in lockstep with the Nifty 50, around 0.6% higher. The mid cap 150 is also losing some ground. It's down almost 84 odd points from its high, trading around 0.4% higher. The small cap 250, however, has upheld the kind of moves it had in the morning, up by about 0.6 odd percent. Let's pull up some counters that are really buzzing in trade. There's something like a Railtail which is up by 12 odd percent. Nugent Software also up by about 12 odd percent. Moil up by about 10 odd percent. Nuoco Vistas also up by about 8 odd percent. But let's shift to our queries then. The next query is from Sumit, who's writing in from Bengaluru. The stock that is bought is Dixon, bought at 17,800 a piece, and the quantity that is bought is 100. He wants to know that with respect to the current PLI scheme benefits given by the government, how is the EMS sector set to benefit, and Dixon in specific? Samir, I'll come to you on this one, and we're also joined by Sneha Seth, senior analyst at Angel One, also joining us now. Good morning, Sneha. And Samir, I'll come to you on this one. What's the view like with something like a Dixon, and of course your view on this PLI benefits given to EMS?
So the PLI benefits is definitely a positive, right? At the end of the day, we want to increase the manufacturing in India and the exports that we do to the global world, global markets for when it comes to electronics, and not only global markets, but also cater to the Indian industry, right? So a huge chunk of the Apple phones and the Samsung phones that were manufactured internationally and imported are now getting manufactured in India. The problem lies in some of the components which are still having to be imported, right? So if the PLI can drive where we can do a bit of replacement of the not just the assembly, but also the raw materials, or not to say raw materials, but the products that go, finished components that go into assembling of a phone, I think that could benefit along with Wave. But PLI is not the only benefit that we have as of right now. So there's a huge benefit that will come to India, and especially companies like Dixon Technologies, which manufacture all of these EMS components, is that if China continues to have these higher tariffs, India becomes the next logical and best opportunity for all of these companies in the US to import of their products. So Apple is already talking of shifting their purchasing from India versus China, because that would reduce the cost quite significantly given the import duties. So India needs to act fast, and if we do, I think companies like Dixon and companies catering to that space could stand to benefit a lot. The problem again, simply, yes, we are factoring in a lot of growth, and these companies work on thin margins, like 2%, 3% margins net profit level. So these huge growth numbers obviously will drive some amount of operational leverage, but it will not be that significant, and valuations are high. So that remains the key risk, barring which I think these are great companies. Corrections are great buying opportunities, not at the current price.
Right. Got your points. Thank you so much for that, Samir. Let's also shift focus to the Wave Summit that is being held in Mumbai, which brings together content creators, media houses, and the who's who of the nation's entertainment industry. Prime Minister Narendra Modi has called this an event to herald the power of India's orange economy. We have our reporters Agnidev Bhattacharya and Sanjana Chauhan, who's getting us all the action from there. Let's go across to them.
That's right. We're standing here at the NDTV kiosk, as you can see right behind me. I'm joined with my colleague Agnidev Bhattacharya, and this is in fact day 2 of the Wave Summit 2025. Yesterday was a pretty important, powerful day with the Prime Minister kicking off and inaugurating the event. We also saw some star-studded appearances with Shah Rukh Khan and Karan Johar and Deepika Padukone, and we're also going to see a lot of key highlights taking place today. I'm going to quickly hand over to Agni to give us what's going to happen today, and then take it back to take you through the panel discussions that NDTV will in fact be moderating and are not to be missed. Agni, over to you.
Right, so Sanjana, like you said, a power-packed day, so let me quickly take you through it. So first of all, today is the day we'll be seeing the Wave X platform being launched. Now, Wave X will be a platform for investors to meet businesses and startups in the media and entertainment space. Now, remember, this entire summit is based around the idea of creating a $50 billion economy by the year 2029. So do watch out for that. Second of all, the Create in India Challenge awards that are coming up today. Create in India Challenge, if you remember, was launched in August of 2024 by INB Minister Ashwini Vaishnaw, with challenges ranging across different sectors, including cinema, gaming, artificial intelligence, music, and more. 1 lakh participants and across 60 countries later, today we are here at Waves, where over 750 finalists are present. So the award ceremony is something you need to look out for. Lastly, the Global Media Dialogue. The Global Media Dialogue will see participation by of ministerial candidates from 25 different countries. Now, they will be exchanging best practices and ideas for driving the media and entertainment industry forward. Other than that, like my colleague Sanjana said, there are a lot of interesting panels planned for today, which NDTV will be moderating. Sanjana, if you can tell us more about that.
Thank you, Agni, for that. And yeah, looking forward to what today actually has in store. It's quite an action-packed day, and as you can see, quite a buzzy actually atmosphere at the moment. But let me take you through all of the panel discussions that NDTV will be moderating today, not to be missed. First up is going to be Indian Cinema Oriental Outlook with Amir Khan. That's going to be at 4:20 p.m. Then we're going to have the Future of Live Events moderated by NDTV Profit's Executive Editor Tamanna Inamdar. That's going to take place place at 5:10 p.m. And then at 5:35 p.m. we're going to look at storytelling from India, by India, for India. And then finally, before that, at 3:30 p.m., going to be moderated by Maria Shakil, is audiences shaping creators, or whether creators actually shape audiences. So an action-packed day today, as we are promising. We'll continue to bring you lots of interactions and the latest that's happening from here. But for now, back to the studio.
All right. Thank you so much for that, Sanjana. And we'll keep getting you live bites and updates from the event throughout the day. So keep an eye on that as well. And let's shift back to Ask Profit Show. And let's also get in our next caller. Teja from Hyderabad is calling in. Teja, very good morning to you. How can we help you?
Good morning. Thank you so much for taking my call again.
Our pleasure.
So I found my first multi-bagger in my investment journey. I've invested 11 lakhs in Kitex Garments. I bought 15,000 shares at 78 rupees an average price.
Okay.
I'm sitting on more than 215% profit. I was wondering, should I book a partial profit, or else shall I keep holding for more?
Okay. Teja, first of all, congratulations on backing the first multi-bagger, and you're sitting on a significant profit of 25 lakhs. So kudos to that. I'll take this up with Samir, if at all he has a view on Kitex Garments. Samir, not sure if you have a view on this particular counter, but Teja has bought it at the right levels and sitting on a significant profit. What's the view like? Should he continue to hold or book some profits?
So congratulations to your viewer, but unfortunately we don't have coverage on this company, and it won't come.
No problem. Sneha, with respect to where charts are concerned for Kitex, what's the view like?
If you look at the chart structure, we have seen decent up move. Like counter has made a base around 150 odd zone, and from there on we are seeing a decent up move. I believe for now there is a good support zone placed around 225 zone. So if someone who's holding a long position, I would suggest keep a strict stop loss of around 225 and keep holding it. Looking at the overall chart structure, I believe there is a chance that this counter may head towards 255 would be the first target, and then once it moves above 270, 275 zone, that would be very interesting. So looking at the overall chart structure, I believe someone who's already holding it and having a good profit, they can book half of the quantity and remaining half can be held.
Teja, I hope that answers your query. Book half of your profits and continue to hold for the rest so that you can probably see some more up move in the counter as well. All right, the next question is from Rajan, who's writing in and wants to know as to what should be the next course of action for Kotak Bank. He's holding 40 odd shares at 1700 a piece and wants a short-term outlook on this particular counter. Sneha, I'll come to you on this. Kotak is expected to post its earnings tomorrow. Of course, margin picture as to how FY26 will pan out, plus how asset quality will improve is something that we'll of course watch out for. But what are the charts indicating right now?
Mahima, if you look at the chart structure is quite strong. If you see the counter had been, trading in a range wherein on the higher side, I believe there was a resistance around 2050, 60 odd zone. And the counter has managed to surpass those levels, and it has been sustaining even. In fact, you look at the daily chart structure, it has been trading above all the key moving averages. So that is a very good indication. So I believe someone who's holding a position, barring the result thing, but looking at the overall chart structure, I think the smaller degree chart to higher degree chart structure remains very strong. So if someone is holding it, they may continue to hold it. On the higher side, I believe any up move above 2,250 would be very interesting, and we may see some momentum coming in. Otherwise, there are chances that the counter can consolidate in very short to near term. But on the higher side, the level I told, that is 2,250, that would be a very interesting level. And any move above this would bring back the momentum, and we may see this counter, clocking fresh record high even. So the chart structure looks strong.
Okay, so that's the view with regards to where charts are concerned for Kotak Mahindra Bank. All right, our next caller, Marco, is calling in from Chennai. Marco, a very good morning to you. How can we help you?
Good morning. I just want to know about the entry level for PV or for a midterm. I noticed the stock has fallen very huge numbers, so I just want to know about it.
Okay, got your point, Marco. Sneha, I'll again come back to you on this one. What are the charts indicating for PVR Inox? Is this the right level to make an entry?
If you look at the chart structure over here, the counter has corrected, and I believe it is hovering around the support zone of 200 is simple moving average on the monthly chart structure. So that is an interesting thing. But looking at the overall chart structure, I would suggest if someone wants to go ahead and take a long position, wait for the level of 1020. A move above that would be very interesting, and then we may see some buying interest coming in, because if you look at the chart structure, it has been consolidating in a range wherein 850 840 is the support zone on the higher side, 1000 1020 1030 is the resistance zone. So once it moves above 1020, that would be the level one should be entering for a momentum based action. Otherwise, there are chances that the counter may continue to consolidate in this range. So at this point in time, avoid and wait for the levels as I mentioned.
Okay, so that's the view with regards to where PVR Inox is concerned, and of course where technicals for the counter are concerned. And next point, let's just shift focus to Ola Electric. Now it's likely in SEBI's crosshairs for an alleged insider trading. Let's go across to Tushar for the latest update on that. Tushar, what are you picking up?
Good afternoon. So what sources are telling us now that SEBI may have Ola Electric on its crosshairs over alleged insider trading. These insider trading cases happened in October and December, and there are at least 2 counts of it that SEBI has noticed. That's what the sources are telling us. Apart from these trades, the SEBI may also be looking into related party transactions by the company, as well as the sales mismatch which was reported in the month of February. Remember, the sales mismatch or any kind of sales reported by the company is important to calculate revenue for that quarter, as well as the PLI benefits and the subsidy that the electric two-wheelers receive against the sales that happen. We actually looked into the insider trading data. Remember, it's actually not a crime for an insider to trade in the stock, but a non-disclosure is. So we looked into the data and emerged that the Ola Electric's VP, Claudio Zizzo, conducted 3 buy-sell transactions within a span of a couple of days between October and December. Zizzo also conducted a total of 5 buy-sell transactions, that again split between only a few days in all since actually Ola Electric's listing in August last year. Again, this is a developing story. We have reached out to SEBI as well as Ola Electric for comments on the matter. They haven't responded yet. Whenever we have something more, we'll reach out. We'll actually let our viewers know.
Right, thank you so much for giving us all those updates, Tushar. We'll keep an eye on the development for the same. Sameer, I'll quickly come to you on this one. The recent development indicates that the stock might see a significant amount of pressure if this is confirmed by the SEBI as well. What's your view with regards to this, and of course your overall view on Ola Electric?
Okay, so let's put this. If one of the employees of a company trades and doesn't disclose or does something incorrect, that doesn't mean that the company is at fault, right? It just basically means that an employee either has no idea what he's doing or knows what he's doing and is still doing it, and then the company needs to take action against him. Does it mean that the company's sales are going to drop? No, it probably doesn't mean that. Now, when it comes to the other issue, so I'm talking about the SEBI issue. When it comes to the other issue of the reporting of certain numbers being incorrect in February, we need to wait for clarity that comes out. But at the end of the day, if I look at the company without these issues, right, let's assume that they're able to resolve these issues by paying whatever penalties that need to be paid to SEBI for for that employee and for maybe some mismatch in the reporting. The company is actually poised to see a lot of growth. In fact, we are going to have our second pure play EV two-wheeler manufacturer list very soon, and that's going to kind of increase the market. So we've noticed that when 2 and 3 and 4 companies in a similar space list, the interest and the coverages increase in that space, and then people are going to try to extrapolate value and growth. And eventually, India is a growth story. I keep saying this, that growth is very important in India because that is where the money is really made. Value makes you the money as long as there is growth. So I believe Ola is poised for growth. I think a lot of the negatives are already factored into the stock price. The stock has seen a huge correction. I think after listing, it went up all the way to 140, 150 odd levels and is down to about $50 right now. So you're seeing a 66+% correction from the lifetime highs and even from the IPO price. They have their battery manufacturing capacity, which will come on stream, which will allow them to vertically integrate. They still are the market leader in the EV sales. They still have the largest market share, 23%. 3%. So, all the things that are positive should also be considered. And I believe over a period of maybe 3 years, there's good money to be made. All the noise will eventually die out. So for me, this is a buy. Yes, it could have hiccups in the near term because of these news flows, but barring everything, I think the company is poised to do well over a long term.
Okay, so that's the view with regards to where Ola Electric is concerned, and we, sticking with the auto theme as well, Bhupendra Mehta has bought Maruti Suzuki and wants to know whether he should continue to hold at this level or sell. Sneha, I'll come to you on this one. What are the charts indicating for something like a Maruti Suzuki?
If we look at the chart structure, we have seen a very strong up move this week. It is already up by 7.5%. And looking at the chart structure, I believe there was a consolidation and the counter has given a breakout. It is poised for an up move at least towards 12,900, 1,300. That is the level which I'm watching for. Above that, there is further scope of 13,500 levels even. So the chart structure is quite good. The volumes has been quite good in last couple of sessions. So I believe someone who's holding the long may continue to hold. If someone has taken a fresh long today, keep a strict stop loss around 12,200 and continue to hold your long position for the target of 1350.
To hold is the view coming in on Maruti Suzuki where the charts are concerned. Our next caller, Shashwat, is calling in from Karnataka. Shashwat, a very good morning to you. I believe you have a query on ITC. Hi Shashwat, can you hear me? Okay, I think we seem to have lost the caller, but we do have his query. His query is on ITC Limited. Is this the right time to enter the counter or not is the query. Sneha, I'll again come back to you. Are these the right levels to make an entry in ITC?
I think there is no harm adding it now even because if you see the overall chart structure, on a monthly chart structure, even this counter has made a strong base around 380 zone, and from there onwards only we are seeing some buying interest in last 2 months. So overall, if someone wants to go ahead and long, I think they can go ahead and long at current level as well. On the higher side, 437 would be the immediate resistance zone. Once it surpasses that, then there is a possibility of this counter heading towards 450, 460 zone even. So I think the risk reward ratio is quite good at this point in time. One can go ahead and long this.
Okay, so that's the view with regards to where ITC is concerned. But let's also shift focus to JSW Steel. Now, more problems continue for the counter. Reporters say Supreme Court rejects JSW Steel's resolution plan for Bhushan Power and Steel. And we have Vishy joining in with the latest developments. Vishy, what are you picking up?
Right. So the development seems to be coming in fast and furious at this point in time. At this, we're not sure exactly what the conditions for this rejection are, but essentially the Supreme Court has ruled that the resolution plan that was submitted by JSW Steel back in 2019 to take over Bhushan Power and Steel will be now reversed. Essentially, that transaction under the Insolvency and Bankruptcy Code will be null and void. In 2019, the creditors had approved it and then the transaction went through. 2021, JSW Steel officially took over Bhushan Power and Steel for about 19,500 odd crore, roughly around 20,000 crore worth of an amount. And now, if the transaction has to be reversed, then essentially the lenders who took that money will have to return it to JSW Steel. And once JSW Steel, we'll have to see whether they go out and challenge this decision. At this point in time, all we know is that the Supreme Court has rejected this. Remember, this was the second largest such transaction that happened at the time under the Insolvency and Bankruptcy Code. The largest, of course, was SR Steel. And after that, Bhushan Power and Steel was the largest. There were a lot of cases that were pending in this case. Essentially, the Enforcement Directorate had attached a few assets of Bhushan Power and Steel because of allegations of money laundering that were happening in that company. And there was a huge legal battle that happened between three parties, essentially the banks, JSW Steel, and the Enforcement Directorate about what to do with those assets. Broadly, it was decided that the transaction can go through, but now, of course, the Supreme Court judgment is sort of coming in against that as a big blow for JSW Steel.
Absolutely. Let's in fact pull up the charts and see how JSW Steel is reacting right now. There you go. The stock is down 3% as we speak, and that's happened in just last few odd minutes of the trade. Samir, I'll come to you. If you have a view on this particular update that has happened with JSW Steel, what's the view like? And overall, how do you see the impact playing out when it comes to the overall development?
So Mahima, let's on this particular news development is very difficult to give a view, but what I can say is obviously they're not going to take it sitting down. They will challenge it in the Supreme Court with a 3-judge bench or something else. It'll be another few years before anything actually develops or materializes. In India, cases go on for years. It's hilarious. After a company's been taken over, 6 years later, you decide that no, this was illegal. Companies probably made investments in that. Now, how do you recover those investments and take that money back out of the system? Whatever capital you've put in, maybe, for expansions, how do you take that? The cash that you invested for running the operations, how do you take that out? How do you calculate all of that? It's a very complicated and situation where it should not have been approved in the first place if all the approvals were not in place. The fact that it's done, I would think that the Supreme Court needs to look at the situation and say that, look, the banks have got the money, they've agreed upon it. I don't know what the litigation is, but it's going to be murky and
right. Right, fair point, Samir. Fair point there, and that makes sense. I mean, everything you said makes sense. That this should have been done long before, and this is not the right time to give out such rulings. But all right, let's shift focus to the next query. Snigdha is writing in from Delhi and wants to know about Krasna Diagnostics. She's bought at the levels of 670 a piece and wants to know, the outlook with regards to its future. And she wants to know from a 1-year point of view as to how the stock will react. Sneha, I'll come to you. The stock has fallen from its high levels, but in terms of continuing to hold the stock, is that the right approach?
Yeah, I think the overall chart structure is little weak over here, and I believe we may see a further selling pressure at least towards 700 odd zone, 700, 690 is the level. But in case if anyone is holding the long position, I would say keep a strict stop loss of 690. If it goes below that, then avoid holding it. And in case of any, up move above 760, 765, that is the zone after which we may see some buying interest coming in. Otherwise, there are chances this counter can consolidate and may correct further, at least towards 700 zone. So someone is holding for a very short-term perspective may exit it right now. But if someone wants to hold and for a longer degree they are holding it, then I would suggest keep a strict stop loss around 690 and look at there and review the counter at those levels. Once we see and down move below this, I think then the correction can head towards 630, 640 odd zone. So at this point in time, for me, for a short-term trade, I would say that exit the long position. Someone who's holding and wants to still hold it for a medium to long-term perspective, keep a stop around 690 and
so that's the view. All right. So that's the view with regards to where Krasna Diagnostics is concerned. Samir, Sneha, it's time for the rapid fire segment now. You both know the drill. Keep your answers as short as possible and I try to throw as many questions as possible at you. I'll start with the first query. Quickly, Samir, capital goods is something that our viewer wants to invest in from a longer term perspective. What are the top 2 stocks that you would suggest?
Siemens is one of them, L&T is the other.
Okay, Sterling and Wilson is the next counter. Prithviraj has bought 225 at the rate of 225 and 50 odd shares. Should he continue to hold? What are the charts indicating, Sneha?
I think there can be further correction, so avoid.
Okay, okay, all right. RI is the next counter, and what's the view like for the next 2 years, Samir? Pramod from Thrissur is holding 100 shares, bought at 1200 a piece.
I think it's hold on. Stock has good momentum with it, and also the businesses will continue to do well.
Okay, Tips Music is the next counter. Ajay from Delhi is holding 100 shares at a price of 201, sitting on significant amount of gains. What are the charts indicating, Sneha? Should he book profits?
I think may continue to hold. Once we see an up move above 700, that would be interesting.
Okay, Toms Varghese is holding 100 shares of Piramal Pharma, bought at 262 a piece. Wants to know as to what should be the outlook for the next 6 months. On the chart, Sneha?
I think that the counter can be hold for the target of 1000, 1080.
Okay, Hitachi Energy is the next counter. Mubin from Kerala wants to know whether he should buy, hold or sell. Samir, I'll come to you on this one. What's the view like?
No coverage. Please take it to the technical analysis.
Okay, Sneha, any view on the charts?
Can we hold for the target of 15,700?
Okay, Samir, next query on Yes Bank. The person has invested 50,000 at 19 a piece and wants to know whether he should continue to hold and what should be the next course of action.
I would say you can add on if you have some more capital. It'll do well over a long term.
Okay, Rohit has a query on Hexaware Technologies. He's bought at the average price of 711 and bought 328 odd shares. Samir, any view on this one?
Not very positive on the entire IT space, so I would say avoid it.
All right. With that, it's a completely wrap on this particular show of Ask Profit. Samir, Sneha, thank you so much for joining us and taking us throughout the show. With that, we're completely out of time, as I mentioned earlier as well. Stay tuned to NDTV Profit. Know your company on the other side.
That's huge. That is a biggie. It's out of it.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture
Yes,
now,
yes,
right?
yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
Hello and welcome. You're watching KYC and I'm joined by Puneet Javeri today, and we're going to take a look at one of the IT names, Hexaware Technologies. Interesting because it's just IPO'd, right, in February of this year, Puneet, and it's private equity owned. And generally, when it's private equity owned, they're here to create value. That's the perception. So let's try and get straight to it. Let's see if they're actually here to when it comes to Hexaware. One is they have a high exposure to quasi-US government agencies, and a lot of those are under the DOGE program, because of which there will be either some push with regard to spend timing, so the timing of the spend may actually get pushed, which could well impact the numbers for Hexaware, or you could see a squeeze with regard to spending altogether, which could impact the numbers for Hexaware. And that changes substantially in the 3 months and therefore warrants conversation. The second piece is with regard to impact of tariff delays in spending. Now, this likely has already been impacting IT companies this quarter as well as in terms of commentary. Also, the fact that that will impact what the Fed does in terms of rate cuts, and if that doesn't happen, will discretionary spend get impacted and will impact Hexaware Technologies in that sense. The third piece is with regard to slowdown in deal wins. We're already seeing that this quarter. There has been some bit of pessimism on this. And of course, this is just an extension of my previous point. And the last one is the possibility of margin expansion. This could well be an upside trigger than a downside. Yep. But there is potential there with regard to margin expansion. Is that a possibility or not? Is something that we'll want to explore. And any of these could well impact the stock as well as the way in which one sees the business going forward. But with that, let's look at the business itself. What exactly does Hexaware do? It aids customers in their digital transformation. It embeds AI into every aspect of service that they provide. And we'll talk a little bit about their AI solutions as well. I've kind of listed down some of the products that they have, and we'll come to that. They have a suite of platforms and tools which enable the customer to embed AI into their systems and software. They have partnerships with enterprises and solutions which help customers accelerate the time to market and improve developer productivity. So both of those, we can come to the next graphic, both of those could well impact. So one is convert ideas into applications rapidly. So that's one big plus. And that is RapidX. That is what RapidX does as a product. Tensai is AI-powered automation platform designed to help organizations automate IT and business processes. And Amaze is for cloud migration. So all of these AI actually help each cohort of service that they provide to their clients and help optimize it through AI. So positive. Now, in terms of what their service offering offers and what kind of customers they deal with, that's the broad-based brush. And along with it is travel and tourism as well, and transportation as well, which they are well placed to serve in terms of their delivery and product. Last off, service delivery. How do they actually deliver service? They have 39 delivery centers. They have 16 offices in America, across Americas, Europe and APAC. And they have around 32,500 employees in 28 countries. So that's broadly the presence that they have, very much a global presence. As I did mention, they're Carlyle owned and therefore no worries with regard to capital, even pre-listing. Carlyle has just sold some of its stake. But Puneet, you want to talk and kind of give us the split with regard to how segmental performance has been.
I think you did highlight the segmental performance. The only reason, and one of the key reasons, and actually this is not a complete graphic because the company, while in terms of for IT companies, they give BFSI as a total. This one doesn't. They have a split between that. So financial services definitely is one of the largest contributors. But healthcare also includes the insurance vertical. And that's something new for this company. It's not compared to the traditional IT players where they have BFSI combined and that's roughly 50-60%. They actually give a split of that. The third vertical is manufacturing. This also includes the consumer vertical, which is essentially retail for all other companies. And finally, the last three verticals, high tech and professional services is one. And banking is separately another vertical that they have. So this has been fastest growing.
So it's 58%, sorry to interrupt, but it's 58% banking, financial services, insurance.
Similar.
That's broadly.
The key aspect is that insurance is linked with a slow growing sector of healthcare, which is affected because of Dodge funding as well as we spoke about. And that is one key aspect. It's not the traditional IT play. Banking share has been lower versus other US consumers, and while this will be the highest growing vertical is what the management says. And finally, in terms of travel as well as transportation, another segment that's growing, but this year is expected to be slow. So that's what I wanted to highlight, a very differential segmental performance versus the peers.
Very interesting. Okay, so that's all about the business, and we hope that kind of gives you a good flavor as to what it does. But let's quickly move on to factors, because we'll try and break this down, and as always give you a KYC rating at the end of the breakdown that we'll do. That's how it all stacks up: income statement, balance sheet, cash flow and return ratios. Those are 4 of the parameters. Then we look at shareholding. Street cred, very limited in that sense. Street coverage, also limited, but we'll talk about it. And then Puneet hopefully gives us better perspective on the valuation to help us decide whether it's a good time to buy or not, or what kind of valuation to wait for, if at all that's the case. Let's look at the income statement, Puneet. Why don't you start with that?
Well, definitely. It's a company that's recently listed again, but definitely the 3-year CAGR of the company has been growing at a 19%. That's a good rate in terms of growth. In September 2020 is where the company delisted from the stock exchange. We had the transaction then come up in the next 8 to 12 months in that time itself. And then we've seen the last 3 years very strong for the company in terms of revenue. EBIT margins of the company has been at around 13 to 14%. That's largely in line with its mid-cap players as well. And profits have grown at a 16% CAGR for calendar year 24. And that's another thing. The company follows a January to December calendar time frame in terms of financial performance. That between January to December 2024, the PAT was at 1174 crores. That's grown at a 16% CAGR over the last 3 years. So definitely we've given this a thumbs up. Strong performance over the last 3 years and expecting it to continue in this year as well, Harsh.
Very interesting. So that's with regard to top line. While top line growth is good, Puneet, PAT is just 16% versus the EBIT growth of 20%. Would you reckon that there is some item which has seen a bit of a spike, which is why you're not seeing the 20% growth on PAT?
So there are two things. One is the higher employee expenses, which has of course been recalibrated after acquisition. The second, you highlighted the AI part. That has led to investments by the company over the last 3 years. For TCS, just for example, they are investing 5,500 crores again this year. Last year also was similar, and that was double from FY23. So they have been investing in line with industry towards AI and incorporating that already with the current services they provide.
So interesting. So that's where the company is putting in money and investing, and some of that will come up in the cash flow as well. But let's talk a little bit first about the balance sheet of the company. It's a clean balance sheet, as is the case generally with IT. There's equity shareholders funds roughly sits at around 5,700 odd crore, and when you're looking at the market cap of the company, it's around 43,000 crores. So in that sense, the price to book is steep. But look at the cash bank balances, around 2,000 crore of cash bank balance. There's a slight increase with regard to debt. There's a slight increase. It's around 500 to 600 crore, but nothing significant yet with regard to where the debt is concerned. And that debt is not even significantly impacting, frankly, the P&L account. The interest cost is super low. So a clear thumbs up with regard to that, and that's what you would expect from an IT company as well.
Yes, definitely. Just some expenses in P&L like we spoke about, in cash flow as well. Essentially very clean. A 16% CAGR seeing over the last 3 years, 1,500 crores for calendar year 24. They will be looking to build on this in this year as well. And the net cash flow essentially, and that's largely because the cash flow from investment has seen an outflow of 600 crores. That's from investment that we were talking about. So they have been building on the investment side. CFO has been okay. So largely another big thumbs up again.
Yeah, I think last couple of years it's reflecting in the numbers that the cash flow from investing activity has actually gone up. It's maybe 800 odd crore negative in the last couple of years itself. So maybe some bit of drag with regard to that on the net cash flow that we are seeing. Now let's quickly look at return ratios, because that's the other piece. Where is it that the company is expecting, or what is it that it's expecting in terms of return ratios on the investments it's making? Again, fairly healthy overall. You're seeing 23.5% ROE in FY25 and ROC also fairly healthy, largely on the same number, in around the same number. So clear thumbs up. Please keep in mind that some of these ROE, ROC numbers improve very dramatically when it comes to IT companies, because you have, in comparison, a very low amount of investment that goes into the platforms and the businesses that they build. But you have recurring revenue which keeps coming in year after year, and you have new clients which keep utilizing the same services and the same platforms, and therefore your ROCE goes up. For example, a TCS has an ROCE significantly north of 40, ROE significantly north of 40, and therefore this has further legs to move up and move up quickly if growth were to kick through. Right, Puneet?
Yes, definitely. And that's reflected in the ROEs as well, as you rightly mentioned. Strong ROE numbers in this particular year as well. But Harsh, what's largely been the shareholding like?
Yeah, this is an interesting one. So delisting happened, and I'll take you through that journey a little bit. There was in 2020 there was delisting which happened. Hexaware delisted from exchanges. Baring Private Equity took over and bought Hexaware. Thereafter, we had Carlyle buy Hexaware from Baring Private Equity, and currently Carlyle continues to hold around a 75% stake in Hexaware Technologies. So Carlyle is currently the promoter of Hexaware, and Carlyle is what has helped Hexaware list as well, again on exchanges. Likely they have a pipeline to monetize the asset, but that's how the shareholding is playing out. Clearly a strong promoter in Carlyle. It's not an individual promoter or an promoter entity or a promoter group, and that kind of gives Hexaware that level of independence to operate, and gives it also the push and the recognition required to go global in a big fashion. So both of those are positive when it comes to how one looks at the shareholding.
Definitely, and the street coverage and the street cred, here's a little tricky part. I'll just take the street coverage first. There's 3 analysts, JP Morgan, JM Financial and Axis Securities have coverage. They are anticipating, if we can move on to the next graphic, they are anticipating, and all 3 have buy calls, of course. They are looking at a return potential of 22%. So that's definitely a positive. The only reason we've given it a neutral rating essentially is because of the limited analyst coverage, but the company has essentially, in terms of, it's just been a very recent listing, just a couple of quarters in terms of results. So definitely a neutral is what we're giving. And also, the JP Morgan was also the banker for the IPO. So they have coverage. That's something that we see as a trend as well. But Harsh, overall, street cred, what do you make of it?
Yeah, so again, not looking very pretty from a perspective that one, you already have a large private equity investor who has divested from the company in a big fashion. Again, I'll take you through that journey. September 2020, they delisted, their plans materialized, Baring took over. Thereafter, you had relisting, which happened on the 19th of February 2025. In around the price at which it's trading right now. So it's trading at around 700 rupees a share. That was the IPO price as well. The IPO opened at a slight bit of premium. So at 760 odd rupees is the IPO open. So return since listing, the stock is down around 7 to 8%. But so therefore very muted returns on listing and very muted returns even on IPO. And this is from February to now. When you have seen a reasonable amount of returns that we've seen, even generally from markets, given that we bottomed somewhere at the end of February and March, we started to see a bit of an uptick. Of course, April was the major one, but we've not seen that from a Hexaware yet. So no IPO returns per se for investors. Not much money left on the table is generally how one would look at it. If one were to look at the kind of returns that we've seen. But valuations, Puneet.
Yeah, and valuations here, we put a list of a few companies, and while this is not comprehensive, we've largely compared it with the listed mid-cap players, and how does it fare with someone like the largest player, which is TCS. Currently, valuations at 26 times price to earnings, while not very on that front it looks expensive compared to its large cap players, but growth also higher than the company. And when you compare with the other players like Persistent, which is at 48 times price to earning, they are also anticipating a good year over the next couple of years. That's one. We've also added a couple of other players, Coforge, which is another big one in terms of a top mid cap company in the IT space. That's one, trading at 35 times price to earnings. And finally, in terms of LTIM as well. Now, LTIM, again, an IT services company. We have LTTS, which is L&T Technologies, is more of a product company. So hence, we've compared it with LTIM. largely trading in the 26 to 27 times price to earnings, but definitely cheaper to the two biggest mid-cap companies, which are very well known, both Coforge and Persistent, but not too far away in terms of comparing with the large cap IT players as well.
So neutral and fair call on that. One more thing that one needs to note is whether money was actually raised in the IPO or not and actually put to use by the company, and that's not happened. Something I just want to quickly flag off and clarify, because if it's an OFS, it means that the existing holder, which is Carlyle, has actually sold in the IPO. And that's something that you may want to bear in mind while you're making a decision on this company. Let's see how the rating stacks up actually as a result of all of this. You have 4 thumbs ups to start off. Clearly growth is decent on the income side of things. Balance sheet is clean, no doubt. Cash flow largely following the profit after tax. 16% growth on PAT, 16% growth on cash flow from operations. Return ratios also were fairly decent, 20% plus with scope for upside. We spoke about that. Shareholding is the other piece where you have 75% held by Carlyle, so thumbs up there. Street cred, nothing much left for investors, frankly, at least on IPO debut to now, you've not seen any returns for investors. Street coverage was a neutral and valuations are neutral because street coverage is low and valuations are largely in line with their larger cap peers and slightly at a discount to some of the medium-sized IT players. 6 out of 8 is what Hexaware Tech gets on our KYC rating. Now, in terms of outlook, Puneet, why don't you take us through what the company has guided for and what to expect therefore?
Definitely, and this will be very quick because we spoke to the management as well on very detailed in terms of outlook, and the reason why I wanted to highlight is that the company actually has given a very detailed outlook in terms of both revenue and EBITDA. So if we can show that graphic as well, because in terms of revenue, they are anticipating in terms of Q2 to be moderate, but the Q3 is expected to be decent. This is again calendar year, so Q2 will be April to June, and post that will be Q3. They are expecting strong Q3 as well as Q4 for the company in terms of EBITDA as well. Very quickly, if I can highlight, they mentioned that in terms of EBITDA margin, this is EBITDA. We don't generally see it, but they've given the guidance on EBITDA specifically. That is expected to be between 17.1 to 17.4% range. They're currently at 16.7, so not very far off. And essentially, I asked the management on this, and they've said that they will be starting to invest in terms of growth going forward as well. But largely, very positive guidance, Harsh, overall as well.
Okay, so positive guidance overall, but let's quickly hear it from the management themselves. We spoke with the management of Hexaware. Here's a slice of that conversation.
I'll say at a broadest level, it was a surprisingly normal quarter for us, right? Notwithstanding all the uncertainty that is happening, it was a normal quarter for us. Like you said, the revenue profile was as expected. We actually improved our margins. But the best thing that happened was we won a number of deals that positions us really strongly for the remaining quarters in the year. We also added quite a bit to our large deal pipeline. So between the two, there's just a lot of confidence about the future for us.
And is there any kind of essentially any cancellation or project delays that you see in March, or as you rightly mentioned, it was just a normal quarter, so you didn't see any of that post, the President Trump swearing in February, nothing as of that sort in March? Would that be a safe assumption to make?
Well, I'll say actually we had two that, one happened at the end of Q1, one actually happened in early part of Q2, but since it's material, we already spoke about it. In spite of that, we will have a good Q2. Now, without that, we would have had a great Q2, but in spite of that, we will have a decent Q2. And actually, those quarter-on-quarter headwinds will go away in Q3. So actually, Q3 will accelerate growth.
Now, just wanted to get into the segmental performance of the company. You have separately financial services, you have insurance, which is with healthcare, as well as banking as a separate segment. Just wanted to start off, essentially with first with how are you viewing these segments, because we are expecting most IT companies to do well in BFSI. In terms of banking, was there any kind of one-off in this particular quarter, and how are you viewing the current conversation with the client on the ground? Because a lot of subcontracting costs have slightly inched up, while a lot of companies also insourcing it now. We saw one of the biggest US banks come out with that in this particular quarter. So if you could start us off with banking first, and how are you viewing that segment currently for Hexaware Technologies?
So we operate on a calendar year basis. By end of this calendar year, banking will be at a point where we are banking is outgrowing company average on growth. Now, this is in spite of having, like you said, a negative start. Now, the negative start is a consequence of a number of projects and programs that ended, but we have a fairly large number of deal wins here, and we have a large pipeline. So even as early as Q2, you will see a very sharp turnaround. We may actually end up having double-digit quarter-on-quarter growth for the banking sector. By end of the year, we will certainly be at a point where we are growing better than company average. That's on banking. Now, you mentioned earlier that a lot of companies in our sector are expected to do well in banking and financial services. That is correct, because these industries are not first-order impact from tariffs. And actually, between banking, financial services, and insurance is a part of another vertical, it's well in excess of 50% of our revenue. So, and these are not industries that are directly impacted by tariffs.
And, sir, I just want to take the point forward. As you mentioned, it's not banking as well as BFSI essentially not seeing first order effect, but we've seen a lot of essentially some effect on the healthcare vertical for the IT space as a whole. We've seen some cuts for research organizations in the US because of DOGE, and those were essentially funding a lot of IT spends, at least for the mid-tier IT companies. I want to understand your outlook for it, because you also have the insurance vertical that, and as you rightly said, healthcare and insurance is roughly 20%. Banking being at 8% could grow faster, and that's a very positive outlook coming from you. But for healthcare and insurance, if you can just give us some separate commentary for the two. Seeing some pressure in healthcare because that's been something that's been echoed around, and insurance as well because the costs have gone up materially. How are you viewing these two segments, at least for this year? And I know it's a very uncertain environment, so in terms of guidance, you don't give guidance, but currently on the ground, what are you seeing and what do you expect for the next couple of quarters at least?
So first is at an aggregate level between those two segments that we report together, we actually expect that we will have a decent performance for the year. It won't be a driver of growth, as in it won't outgrow the company, but it'll grow at roughly at company average. Now, between the two, I think insurance will do better for the reasons you mentioned. Now, we don't have kind of work directly from agencies that get funding, but we do have life sciences customers. There is a general downward kind of sentiment on vaccines and drug manufacturers. So I'll say kind of life sciences part of the healthcare part will do somewhat worse than what it could have otherwise. But in aggregate, like I said, we will actually still do company average performance for these two sectors. We announced a number of deal wins in Q1. One of them was actually in the insurance sector and in an interesting segment with a company that is actually the world's largest pet insurance company. And, that's an area of decent spend for consumers in a lot of countries. And it's a growing segment in pet insurance. And we we became a strategic vendor for a pet insurance company in Q1.
And just one question last on the segmental side. Manufacturing, you have it with consumer, that's roughly 15% of your revenues. Again, a segment that's been rocked because of tariffs. Anything that you can quantify in terms of conversations, any kind of delays that you saw, or customers taking a little longer to plan out their IT spends for this year?
Definitely, yes. Unfortunately, it has already been kind of a segment that is not done as well as company average for us. But I think that weakness is going to continue. they're definitely kind of first order impacted. Fortunately for us, it's only 15% of our revenues.
And so you've given a very detailed, in terms of not guidance but outlook as you're calling it, and I just want to get into that a bit, because you said that Q2 you're expecting to deliver reasonable but not sharp growth, but Q3 will have accelerated growth. What's giving you the confidence as of now? Because it's still some time away for you, but 6 months down the line in such an uncertain environment, what are you seeing currently? Is it the confidence of deal wins or something that you can tell us?
So three things I'll say. First, again, I want to reiterate, we operate on a calendar year. So Q3 for us begins from July. So it's not 6 months away. Two, we had some we called out specific headwinds for Q2. Now, actually, but for those, Q2 would have actually been a very good quarter. It'll still be a good quarter. Okay? And those kind of quarter-on-quarter headwinds will go away. So that is going to kind of be additive to the growth from Q2 to Q3.
All right. So hope we've tried to, or rather we've tried our best to break this down as comprehensively as possible. Thanks so much for joining us, Puneet. And thank you, viewers, for staying with us. For now, it's a goodbye. Stay tuned. More action on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
Hello and welcome to Markets at 12. I am Puneet Zaveri, and let's first look at how the markets are doing, because it's been a very interesting day after a holiday yesterday. Coming in at Friday, we spoke about the implied open being very minimal, just about 20-30 points, and while we did hit a high of about 24,589 on the Nifty, we've seen some pullback from those levels now. Very close to the day's low. We did touch the day's low and now up just about 50 points from that at roughly about 24,350. Let's first look at the key contributors of the Nifty, because we've seen banking and IT mostly drive the Nifty both on the upside and the downside. Today we are seeing banking again, with ICICI Bank being one of the key ones in terms of contribution. Reliance as well is contributing in the green, And Adani Ports, after a stellar quarter for earnings, also providing positive pivot to the Nifty. On the other side, seeing some pressure on JSW Steel, and that's largely, because of, what's coming in terms of news flow affecting the acquisition after Supreme Court has, essentially rejected the resolution for Bhushan Power. That was seeing a lot of cuts right now in terms of trading and prices. Kotak Bank as well on the downside. We are expecting Kotak Bank earnings sometime this week, so that's another key aspect. Apart from that, let's look at the mid cap and the small cap as well. If it is outperforming the benchmarks or no. Currently, not so much. 0.25% down in terms of mid cap 150. The small cap as well, it's slightly in the green, so at least outperforming the mid cap index. And finally, in terms of BSE 500, let's see how that is doing in some key stocks, because again, it's been one of the markets where stocks are reacting heavily in terms of news flow as well as results. Sonata Software, another day of being in the green. The company post announcing that they'll see some pressure in Q4 in terms of revenue degrowth. It's taken off after the company's multiple deal wins. That's another one, another 6% on the stock. Credit Access also seeing something in the green today as well. Another one is Novoco Vistas based on earnings, and on the downside, seeing some pressure essentially on something like a Godrej Agrovet, Phoenix Mills, as well as Indus Towers as well. Let's also quickly pull up something like a Paras Defense as well, see how it is doing in trade, because the company did come out with its earnings. Earnings largely, were a decent set of numbers, and we have Anushi now joining in as well to talk about it, and we also have the management joining in. But before we go, Anushi, how were the earnings essentially for Paras Defense in Q4?
Right, it's a strong growth numbers that we are looking at. Now, in terms of where the revenue was concerned, we are looking at a 36% of a growth, while margins have expanded to 26% as compared to the 15% mark that we are looking at last year. Other than that, the company has also approved splitting of each share into two, so that's the ratio that we are seeing. But it's the FY25 performance which is a standout. Now, your revenue is up over 44%. Now, in line with this is again with the company's guidance of 40 to 50% of growth that they have targeted for FY25 and 26. But to discuss more, let's welcome in Amit Mahajan, the Director of Paras Defense and Space Technologies, to discuss how the quarter and how the year had gone by. Firstly, now, if you look at the FY25 performance, we are looking at a 44% of a growth. I want to understand the outlook from you for FY25. Is this the trajectory that we'll continue to see for the near term, the 2 to 3 years picture, the 40 to 50% growth? To talk to us about the fourth quarter and the outlook forward for the next 2 years.
Good afternoon. Actually, thank you so much for having me on the show. Yes, the growth is something that we provided guidance for. We expect ourselves to continue with this trajectory for the next couple of years for sure, because this is primarily fueled by the order book that we have, very, very strong order book that we have, and a very, very nice developing, evolving and growing opportunity funnel that we see, which is today in excess of 2,000 crores.
Okay, so if we see the last update on the order book, we are looking at an order book of around 835 crore. If you can just give us an update on what's the current order book standing like, what were the kind of inflows that you saw in the previous quarter, and what is the expected growth that you see from here onwards in terms of the order book which is there?
So we, when you say 835, that was Q3. Post that, we also delivered in Q4, which was a good delivery from our side. And in spite of that, we are maintaining an order book of in excess of 900 crores. Now, moving forward, we will always have I would rather mention that it is 2.5x of the revenues that we will maintain our order book. We will cross 1,000 crores very, very soon, and we're looking at a 1,500 crores order book. So that's the kind of a steady order inflow is something that we are expecting. And the good part is the opportunity funnel is swelling. And when I say opportunity funnel, these are opportunities which are largely more than 60%. We have an opportunity to get that business. So that particular is swelling now beyond 2,000 crores.
So the opportunity funnel that you're talking about for this order book to reach to the 1,500 crore level that you're seeing, most of it, if we see, is from the optical system, wherein you're eyeing at a higher market share. Talk to us about this segment. What is the kind of contribution that you expect going forward from the optic side of the business as compared to a defense engineering? Because even if we see in the fourth quarter, while we did see about a 22% of a dip in the defense engineering mix, it's the optic segment which has led to this kind of a strong growth trajectory that we've seen.
So order book always is skewed in favor of optics and optronic systems. Defense engineering orders, they come in and they get executed much faster as well. So although the order book will be 60-40 or 65-35, eventually you are seeing that the revenue mix defense engineering catches up and takes it closer to 50% of our revenues. The profitability is largely influenced by optics and optronic systems, and that's where the company would always look at focusing. Moving forward, we would want to take the revenues in favor of optics and optronic system, going into 55%, where 45% will come from defense engineering. And moving forward, the same trend will continue. The opportunities that we see are in the area of submarine periscope. They are in the area of border defense system, which actually is a defense engineering product. But space cameras, then Controp, the systems that we develop along with Controp, these are the products that will see a good amount of growth in the coming years. Along with that, the optical systems for space applications and high energy lasers for air defense applications. So these are the areas that we look at moving forward to give us the necessary growth that we anticipate.
Amit, just a follow-up on this. Can you just give us an execution timeline now of this 900 crore also, if you're seeing, if you have to divide it between the two segments, which is the defense engineering and the optics and optronics segments, what is the difference in the timeline that you are seeing for the execution? Because as you mentioned, that defense engineering orders are executed more quickly. So if you can give us details on that, and what's the kind of optimal mix also that we'll be seeing for FY26?
So defense engineering execution timelines would vary from 4 months to 9 months, and optics would vary from 6 months to 18 months at areas where we are delivering for space applications. So because in optics, we are covering the whole gamut of not just defense, but also avionics and space. And that's where the range is very, very wide. Moving forward, the order book that we have on hand is on an average executable within a year's time.
1 year is the kind of execution period that we are seeing for the overall picture that we are seeing for the 900 crore order book. Also want to understand the margin profile going forward. Now this year we've clocked in about 26% of our margin. Want to understand FY30, is this the kind of number that we expect to maintain, or because in the past we've seen that you expect a higher profitability going forward. So what's the kind of margin profile that you see for the business?
We would like to believe that we will, at the minimum, sustain these margins, because we are happy with the margins that we've been able to derive out of the business. At the same time, there are certain favorable conditions which we hope will improve our margins, because the quantity per system is increasing. So in the same particular order, now I'm delivering larger quantity of the same particular unit. Now this will have a positive impact on not just on the cash flow or the working capital requirements of the company, but will also result into an optimization of the manufacturing process, resulting directly positively on the profitability of the system. So we are looking at slightly bettering the profitability from here on.
Now, Amit, now this update, we've spoken about it before, which is the MOU that you've signed with the Maharashtra government for the proposed optics park, 10,000 crore of an investment required for the same. Want to understand, considering this development which is there, it's a long-term picture that we are looking at. So considering this development and other more project in pipeline, what's the kind of capex that you look at? And also, if you are seeing more of fundraising options as well from equity or debt, what's the kind of picture that we are building from that front?
So I think the capex requirement of the company is going to be very, very minimal. Whatever capex, a little bit here and there, utilization or better utilization of assets that we already have, that those capex can be done by self-accrual purposes. But moving forward, the company can scale up to a 4-digit revenue without doing a major capex. And that was evident from our last fundraising that we did. We did not put any of that fundraising for capital expenditure. We continue to do that because now we are consolidating. We are coming out with more value-added product, moving up the tier when it comes to our products and solutions. So that answers that. When it comes to optics park that we are looking at, we are working with the government of Maharashtra. Government of Maharashtra has been very, very proactive. I have to give a lot of credit to them. They're being very proactive in facilitating that for us. And there, the capex requirements will have its own. It will depend upon the plan that we execute, how we gradually ramp up, what we gradually ramp up, what we take it on the priority, and what we do it later. That's something that we will have to work out that plan, and the capex requirement for that will be satisfied by the plan that we come out with.
Okay, so that was quite understandable, and thank you for that detailed answer. But my final question to you is about the recent update on one of the reports that kind of stood out, which was the Cabinet Committee has approved the launch of 52 surveillance satellites, and this presents about a $250 billion of a program. Now, being in this space, this is a key opportunity that we are seeing for Paras Defense. So what is the kind of scale or development that you're seeing from this kind of an opportunity which is there?
Precisely, as I told you, the 5 pillars of our growth revenue, one of that is going to be space programs. All the optical payloads that are going to be a part of these space missions that are launched, Paras will have a significant role to play. And we are hoping that, our value per offering only goes up from here. I have to again credit my customers and my partners, I would call it the space agencies of the country. Have been very, very supportive. They have handheld an industry like Paras and developed us into a more and more value-added partner of theirs. And we are hoping, today we are doing space cameras, we are doing space telescopes, we're doing a large amount of that. We would hope that we are doing more and more work for these agencies, and we are extremely satisfied with the opportunities that they want us to be a part of. This can be seen in our presentation, which is public, that the kind of programs that we are aiming to be a part of.
Okay, well, thank you, Amit, for joining in and sharing your perspective on what the future holds for Paras Defense. Again, very interesting to look at. 900 crore is the kind of order book that we can expect over the company. But another stock which is in focus, Puneet, is something like an Adani Enterprises, right?
Definitely, and the defense conversation, definitely something that, and Anushi, thanks so much for being part of that. Has been one of the key aspects for the private defense companies as well. But let's move on to Adani Enterprises now. It's gaining over 0.5% after the company announced its quarterly earnings yesterday. Net profit jumped almost 7.5 times versus last year to over 3,800 odd crores, which was boosted by a one-time gain from the sale of a 13.5% stake in Adani Wilmar. Now, Group CFO, Mr. Singh, breaks down the key numbers for us. Listen in.
Good afternoon, everyone. Thank you for joining us today for Adani Enterprise results for the quarter and year ended March 31st, 25. The financial year 25 results once again validate AEL's position as one of India's leading business incubators, focused on developing large-scale utility and infrastructure platforms through timely project execution and consistent growth. AEL's portfolio is categorized into incubating and established businesses, spanning energy and utilities, transport and logistics, consumer services, and primary industries. Key incubating businesses include the Adani New Industries ecosystem, data centers, airports, and roads. The established segment consists of primary industries vertical comprising mining, services, metals and materials, commercial mining, and industrials. The consistent higher growth of incubating assets boosted overall consolidated results for financial year 25. Consolidated income up 2% to rupees 1,365 crore. Consolidated EBITDA up 26% to 16,722 crore. Consolidated PBT up 16% to 6,533 crore. In addition, AEL realized a gain of 3,946 crore from the sale of 13.5% stake in Adani Wilmar Limited, disclosed as an exceptional item. We are pleased to share that within just 2 years, the EBITDA and PBT of our incubating infrastructure businesses have surpassed AEL's consolidated 23 numbers. Incubating business financials for 25 and major updates. Income up 42% to 34,546 crore. EBITDA up 68% to 10,025 crore versus AEL's financial 23 EBITDA of 10,012 crore. PBT up 87% to 4,996 crore. This is versus AEL's FY23 total PBT of 3,607 crores. Anil Green Hydrogen Ecosystem EBITDA increased by over 100% to 4,776 crore. Module sales have consistently achieved run rate of 1 gigawatt per quarter, and expansion work has started for additional capacity of 6 gigawatt cell and module line. Wind turbine capacity has now been expanded to 2.25 gigawatt from 1.5 gigawatt per annum. Adani Airports business EBITDA grew by 43% to 3,480 crore, with run rate EBITDA tracking 1,000 per quarter. Airport business recorded 94.4 million passenger movements during the year, which is a 7% year-on-year increase. AEL also got a credit rating upgrades due to strong financial profile, resulting in credit upgrade from A+ to AA- by CARE and ICRA. Our commitment to ESG. The Carbon Disclosure Project Climate Change, CDP-CC, has upgraded AEL rating to A- for 2024, which denotes leadership category, indicating AEL's dedication and commitment to lowering GHG emissions and their overall impact. Thank you.
Well, that was the CFO of Adani Enterprises. But let's quickly look at the Nifty Auto and how the stocks are performing. Because we have seen the April auto numbers come in, and it's a very interesting trend now, because within segments as well, like two-wheelers, we are seeing some key outperformers and some key losers, and that's prevalent across the four segments. So when you look at the two-wheeler space, as visible on your screen, there are two key trends that prevailed in this particular quarter. One was definitely the scooter share outperforming the growth of motorcycle, and that's visible in the growth of something like a TVS. The other aspect is the export growth of companies, which has actually been higher in this particular quarter. Both TVS and Eicher benefit from that as well. The other key aspect is on the passenger vehicle side. We've seen while the SUVs has continued to grow, for someone like a Mahindra and Mahindra, the growth and the outperformance is quite stark versus the peers, as well as in terms of estimates as well. For estimates were roughly about 48,250 for Mahindra and Mahindra. It's coming at over 52,000 in terms of vehicles sold, and SUVs is the complete portfolio for Mahindra. So definitely seeing there. Maruti was also a very interesting trend, because while the small car share has fallen, SUVs haven't grown as much, but the export growth has been very explosive in this month, continuing its trend from FY25. Also, when you look at the commercial vehicle sales, another month where VECV has continued to outperform, largely in terms of a favorable base as well, that it's the smallest player among the three listed ones, but definitely a growth nonetheless for the company. The bus segment across the three players have been doing very well, but in terms of MHCV, which is the majority of sales for someone like a Tata Motors, that's been another month where the company's sales have actually fallen. Now, that's one of the key negatives as well for Tata Motors. And finally, in terms of the tractor space, again a fact where it's a stark outperformance for someone like a Mahindra and Mahindra versus its other listed peer, which is of course Escorts. For Mahindra, the Rabi crop has been doing very well, and that's expected to boost sentiment for both the companies. But the West region again continuing to outperform versus the northern one as well. But that's largely on the outer players, and we are seeing some. Let's put up the Maruti Suzuki very quickly, because at one point of time the stock was almost up 3% in trade, while largely opening flat. It has gained in terms of stock price, and continuing at least at 1.5% now. Let's also look at the Hero, because that was the major difference. 42% fall in terms of sales in this particular month, despite a couple of days where the company had mentioned that plants were shut down. Stocks not reacting as negatively as you would expect after a 42% YY fall as well. But the other pack and the other stocks I want to talk about is the Nifty IT. Let's pull that up as well, because we see generally that on numbers from Accenture as well as Cognizant, the stock are quite reactive. Today down about 0.2%, and the key reason is that Cognizant's results were largely in line with what estimates had from brokerages, and essentially the company has said commentary which is in line with its peers as well. They mentioned that the demand environment is slightly slower in this particular time frame, but they are seeing strong deal wins in this particular quarter as well. Deal wins were at $26 billion, which is a growth of 3% on a YY basis, and that represents a book-to-bill ratio of 1.3 times, which is quite stable in terms of visibility going forward. And finally, in terms of guidance, I just wanted to mention, they've mentioned that calendar year 25 is what they follow. Growth guidance will be between 3.5% to 6% for the company, and that includes a 250 basis points from the inorganic acquisitions as well. Management is also anticipating some margin expansion going forward, and that will be seen primarily driven by cost discipline as well. So that's largely on the IT pack as well, because Cognizant definitely reporting its results on Wednesday has some impact definitely on the IT pack as well. But let's move on to some national news. Prime Minister Narendra Modi inaugurated the Vizhinjam port in Kerala and dedicated it to the nation. He spoke about how shipping industry had contributed in the past 10 years towards economic growth, taking the country to new heights as well. Listening to what he had to say.
साथियों, भारत की सफलता के पीछे पिछले एक दशक की मेहनत और विजन है। पिछले 10 वर्षों में हमने अपने पोर्ट्स की क्षमता को 2 गुना किया है। हमारे नेशनल वाटरवेज का भी 8 गुना विस्तार हुआ है। आज ग्लोबल टॉप 30 पोर्ट्स में हमारे 2 भारतीय पोर्ट्स हैं। लॉजिस्टिक परफॉर्मेंस इंडेक्स में भी हमारी रैंकिंग बेहतर हुई है। ग्लोबल शिप बिल्डिंग में हम टॉप 20 देशों में शामिल हो चुके हैं।
But in an exclusive conversation with NDTV Profit, SEBI chairperson Tuin Kanta Pandey says that the market regulator is actively working on fine-tuning regulations related to the F&O market in a bid to protect small retail investors. Pandey also said that the SEBI has released a consultation paper for changes which has received over 800 public comments, and a final decision should be taken. Listen in.
Talking about the regulation, one regulation around F&Os, the derivative markets. Everybody is talking about that whether it's a over regulation or not. But one thing the experts are saying about that, this could hurt volumes because the way it is designed, it's skewed in favor of large institutional investors. But of course, SEBI is coming from the point of view of retail investors, because you have studies talking about 90% retail investor losing money. How are you seeing this? What is your assessment at this point of time? And do you see that it's an over-regulation when it comes to derivative segment?
In the derivative segment, we had some issues around it when we studied this matter, and we put it out as this report also in public domain, where we said is at least 9 out of 10 small investors were actually losing money. The question is that whether the particular methodology which they were deploying was good enough, whether there was proper education. And we found that there was a particular problem in terms of, index options on the expiry day. I think that is where we find it was truly distortionary. The purpose of F&O market, which is also a very important market, is to hedge risks and also help price discovery. So to that extent, I think the market does that job. The derivative market is really important market. But sometimes I think if the distortions come in form of a particular way that we are looking at it. So therefore, we put out a consultation paper saying that, when we need to change the metrics, the risk metrics, where for options, in terms of risk metrics, we were having apples and oranges issue. We were, summing up, different components like futures and options. They're slightly different. And options, we were not counting the delta. And that delta is now, we intend to bring in so that we know exactly, how the everyone understands what the risks are.
But speaking on the Gensol scam also to NDTV Profit, Mr. Pandey did say that the case of Gensol Engineering underlines an example of egregious behavior. He further said that in the market that warrants closer scrutiny by all stakeholders involved in the IPO ecosystem as well. The Gensol-like issues may happen if supervision are inadequate, even if there were more regulations and stricter guidelines. Pandey told NDTV Profit in an interview as well. Listen to that chunk.
On the corporate governance part of it, when a Gensol kind of incident happens, it affects the sentiments of investors, particularly in the startup IPO. perhaps, more than drop in a price after listing, it's more about the trust factor gets shaken after such instances. Do you think it's one of a case where, promoters are at fraud, or you think that there's some steps or measure has to be taken to avoid the reoccurrence of such instances?
Well, I think it's a case of egregious behavior by a few. And I think no matter what kind of regulations you do, no matter what kind of laws you pass, there will be, if there is an egregious greed, and if there is, in my opinion, also inadequate supervision, because we can't be there in every boardroom. You have auditors, you have independent directors, you have people who should ask questions, key questions, and there is quarterly results. There are people who are informing in the exchanges. So as a regulator, we can only do as much. In fact, you would be asking that we ask too much.
So of course,
but still, if there is a certain, like if there is a, false information, if there is a, fraud, or if it is a moving of funds which is not correct, I think in the order, forensic audit also has been ordered. So I think these are the kind of egregious behavior which, nobody likes them, but they do happen, and I think they should be penalized for that, whosoever is responsible.
Well, that's all the time we have on this show. Stay tuned to NDTV Profit for more. Profit Buzzers comes up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.
Welcome to Profit Buzzers. I am Mahima Vachajani. With me is Varsha. Before we move on with the show, let's take a quick look as to how the markets are panning out to be right now. Well, the Nifty 50 is currently trading at its day's lows, trading around 0.3%, 0.4% lower. In terms of the Sensex as well, the Sensex also trading at its day's low point right now, down by about 0.06 odd percent. In terms of the benchmark indices, the charts for them also have kind of reversed. In terms of the mid cap 150, it's down by about 0.9 odd percent. The small cap 250 is down by about 0.3%. So all four indices, that's your benchmarks as well as your broader markets, are trading at its day's low point. In terms of the Nifty 50, let's pull up the heat map and see as to what counters are seeing a significant amount of moves. There you go. Pressure continues in something like an Eicher Motors, JSW Steel on the back of the update with respect to the resolution. Nestle down by about 2 odd percent. Bajaj also not doing very well, down by about 2 odd percent. Something that's doing well in terms of earnings, well, Adani Ports is the leading pack on the Nifty 50 today. There are counters like Maruti also doing fairly well in trade today, up by about 1 odd percent. IndusInd Bank seeing gains of about 1%. ICICI Bank also seeing gains of about 0.6%. Let's also quickly pull up the sectoral heat map and see as to how sectors are panning out in trade today. Well, the picture at the start of the trade today was that almost all sectors were trading in green, but today, right now in fact, the picture has reversed. There's Nifty Metal, which is down by about 1.3 odd percent, Nifty Pharma down by about 1 odd percent, Nifty FMCG also down by about 1 odd percent. Nifty Defense is down by about 0.5 odd percent. Nifty Realty seeing the heat, it's down by about 0.9 odd percent. Something that's only in green is Nifty Oil and Gas, up by about 0.18%. Let's also pull up the BSE 500 and see as to what stocks and counters are still upholding their gains. Railtel is something that's given off some of its gains, but still trading around 9% higher. There's Sonata Software leading the pack, up by about 7 odd percent. Crisil up by 7 odd percent. Jubilant also upholding its gain by about 6 odd percent. But something that's not doing well, there's Godrej Agrovet down by about 12 odd percent. Phoenix Mills down by 7 odd percent. There's Indus Towers down by about 6 odd percent. And there's Data Patterns, Sterling Wilson and Equitas Small Finance Bank also seeing cuts of about 4 to 5 odd percent. But with that, let's also welcome in our guest for the day, Asa Jain, Senior Research Analyst at HEM Securities, joining us now. Asa, good afternoon and welcome to the show. In terms of multiple stocks that are buzzing in trade today post their Q4 earnings, there are counters like Nuvoco, Moil as well as Railtel, Varsha, which are buzzing in trade today. Give us, in fact, a brief overview as to how earnings have panned out and as to how the stocks are doing in trade today.
Yeah, so Mahima, let us start with Nuvoco Vistas. The stock is up almost 6-7% if I'm not wrong. This is on the back of Q4 numbers. There you go. The stock is up on the back of Q4 numbers. So if I were to give the key highlights, so you have top line growth on 8%. Which was led by volumes of 5.7% MMT, and EBITDA that you're seeing is helped by 12% lower blended fuel cost. For the capacity details, if I were to talk about, they have 25 MMTPA of combined installed capacity, and company is now the 5th largest cement group in India, and they are on track to achieve 31 MMTPA cement capacity by Q3 FY27. Also, if I were to talk about the net debt, FY25 net debt stands at around 22%, which is lower at 3,640 crores. So good numbers when it comes to Nuvoco Vistas. Next on the list is Moil. So if I were to talk about the key highlights, so the stock is up almost 8%. What went right for Moil? So their margin has been expanded on better realizations and lower costs, and the company produced 0.47 metric tons of manganese ore, which is down 2% year on year, and the sales volume for the quarter was up 3% year on year, and they aim to achieve 2.5 metric ton production in FY26. Last on my list is Railtel. If you see, good set of numbers by the company. If I were to talk about the key highlights, the stock is up almost 10%. So good numbers when it comes to Railtel. Revenue was up 57%, EBITDA was up 54%, margins were at 13.7% versus 14%, and net profit was up almost 46%. So good numbers when it comes to Railtel. Let us speak to our guest Astha. So Railtel, MOIL and Novoco, all these companies have posted good results, and we are seeing these are buzzing on the back of it. Which one is your favorite pick?
Hi, good afternoon to both of you. See, talking about these three numbers, the numbers are really very, very strong. Now, if I talk about, first of all, regarding MOIL, yes, what we have seen and what was the key highlight for me in the number is that their mining ore production, I mean, it has shown growth. And in fact, their sales of ore is also has increased. In fact, ferromanganese sales has also shown a strong rise. So I think the good volume growth is what we have seen in the MOIL, and the markets are rewarding that growth. So MOIL results are looking fantastic to me, and right now it is quoting already 8% higher. But my idea here is that this stock has a potential to move still upside from here. And our next possible target on this counter is 370 to 375. So MOIL is looking good to us, followed by Railtel. In fact, Railtel is also one of the counter in which we were positive since the last few days. And hence what we have seen that the results which have come are according to our expectation. On this counter also, we believe that this counter has a potential to move move northwards from here. What targets which we are giving to our clients in this counter is at around 370 and 380 odd levels. So again, Railtel is also looking good to us, and we still believe that there is more potential of around 10 to 15% upside from here. The third one, which you have talked about, is the Novoco Vista. That was on our list, but it is the last candidate. So among these three, we are really liking MOIL and Railtel. And then third is Novoco Vista. Here also, the stock is looking good, but we are recommending hold on this counter. But for Railtel and MOIL, it's again a buy on dip strategy, which can be applied to these counters.
Okay, so that's the view with regards to where all of these counters stand. But quickly, numbers of Godrej Properties have come out, and in terms of the EBITDA, it's down by about 10 odd percent. Margins have slid to around 5.2 odd percent versus that of 8.6%. Revenue is up in fact 49%, and in terms of net profit, that is also down by about 19 odd percent. Of course, we'll wait and watch out for as to how the pre-sales numbers and launches have been in terms of this quarter once the press release is out. But this is as far as how the numbers stand for Godrej Properties. There you go, profit down by 19 odd percent, but revenue up by 49 odd percent. That's with regards to where Godrej Properties stands. Astha, any quick look on the numbers for Godrej Properties by any chance?
Right now, we believe that yes, net profit is showing a dip, and in fact, we are also looking for some fundraising plan, because what we believe that in fact management was supposed to declare something on the fundraising plan also. So we really need to look that up also. But here, prima facie, although top line has surpassed our expectations, but right now on the EBITDA as well as bottom line front, it seems to be a little miss. In fact, margin is also not looking that great as compared to last year on year basis.
Okay, so that's the view with regards to where Godrej Properties stand. Now, moving on to the next earnings. Zomato did come out with its earnings yesterday, and in terms of how the numbers fared, well, numbers were a slight miss in terms of what the street was estimating. In terms of food delivery growth, it was yet another quarter of a food delivery growth where it slowed down. Management did indicate that the overall competition in terms of quick commerce is going to weigh on them, and going forward might be impacting the business as well. In terms of quick delivery, the management did come out and announce saying that they are going to shut their quick 10 minutes to 15 minutes delivery platform. In terms of numbers, QOQ revenue is up around 8 odd percent, EBITDA down 55 odd percent, margins at 1.2% versus that of 3%, net profit down by 34 odd percent. In terms of YY numbers, revenue was up 63%, EBITDA down 16 odd percent, margins slid at 1.2% versus that of 2.4%, and net profit was down by about 78 odd percent. In terms of segmental performance, food delivery gross order value did see a 16% growth in terms of YOY terms, but Q on Q it did fall by around 1.4 odd percent. In terms of average gross order value per day per store, that also fell by about 3 odd percent. The overall average order value was down by about 6% QOQ and up 8% YOY. The contribution margin, however, rose by 10 basis points, and this was despite of the kind of lower average value order as well. In terms of other businesses, the losses excluding food delivery and quick commerce stood at around 63 odd crores, and this was on the back of Bistro. In terms of management, they did indicate that innovation and investments will continue at these levels. In terms of key con call takeaways, the management, as I mentioned earlier, also expects competition to pan out in a pretty unfavorable manner, and it might intensify and also kind of impact their overall business. 1/3 of the total going out gross order value was transacted via the District app, but District app also saw an outflow in terms of working capital of around 400 odd crores. Cash was down to 188 billion rupees, and an overall long-term EBITDA margin guidance remained at 4 to 5% of the gross order value and 5 to 6% of the net order value. In terms of what brokerages are penciling in, Citi has maintained buy and hiked the target price to 290. Cash burn is likely peaked out is what they're saying. They remain pole positioned in terms of a large total addressable market, that is Zomato of course, and OPEX increases are largely focused on sustainable growth is what they are saying. Jefferies rates hold with a target price of 232, good Q4, but cautious outlooks is something that is making them cautious as well. They cut their EBITDA estimates by 5 to 15% and want to stay on the sidelines. Nomura retains buy but cuts the target price to 280. They expect food delivery to deliver a 17% YOY gross order value growth, which is not very far away from the 16% that they've done this quarter. And company is not overall burning cash at EBITDA level is what Nomura believes. JP Morgan maintains overweight but cuts the target price to 290. They are saying that they are expecting a sharp ramp up of profit in FY26, but QC losses will extend a tad further than what they were expecting. And overall monthly transacting users might go up by 17%. CLSA lastly maintains outperforming the target price of 295. They've cut EBITDA as well as PAT estimates by 25% and 36% respectively, and they believe that it's hitting all the right milestones, and this is with respect to where quick commerce is concerned. So that's the view with regards to where brokerages stand on Eternal, that is Zomato. Now, in terms of what the management said about the 10-minute delivery, they said that it's not viable for the business. That's one of the major takeaways from the Zomato con call post their Q4 results. Listen in as the management talks about what's working and what needs to change in the quick delivery space.
Bring down the delivery time from the average, let's say 30 minutes for the platform to 10 minutes. Right. So I think what we've realized is, I think that is extremely hard, and we don't see any incrementality in demand if we do that on the business, given that customer experience is poor. Right. But of course, there's a wide range between 10 and 30 minutes. So I think our view is that we should try and bring that 30 minutes down to maybe 20, 25 minutes over time by sort of making our overall logistic fleet delivery system more efficient. And I think those are the gains we want to chase now, rather than trying to build an extremely quick service, which, without end-to-end control on the supply chain, we think is extremely hard to do.
All right, so that was the commentary coming in from Zomato's management or Eternal's management. It's very difficult to keep a track of the name. Asta, I'll come to you on this one. How did you read the numbers for Eternal Limited, and do you still think that if one wants to make an entry right now in the counter, it's the right time?
I think some dip can be seen before making an entry. This is what we believe, and hence we are recommending to buy on dip rather than at current point of time. Now, talking about the results were quite a mixed bag sort of, because what we have seen is their EBITDA margin, especially as a percentage of GOV, has increased by 10 bips. But now in the bottom line, what we have seen was a drop, and it is mainly due to the accelerated investments in the dark store openings and basically in the quick commerce business also. So I think these results are not very, very attractive, but yes, they are looking to be decent. And we believe that going forward, definitely the management will walk the talk, and we can see strong numbers from them going ahead. So right now we are just recommending hold rather than buy, and our price target which we are keeping for it is around 260 odd levels.
Well, let's shift our focus from Eternal to Vedanta, which is in focus. The company posted its Q4 earnings. The revenue is flat and the net profit also fell. We spoke to Ajay Goel, who's the CFO of the company, about the quarter gone by and the revenue and the growth guidance overall for the FY26. Listen in.
See, in the current year, given the pricing environment, I will appreciate we are not giving any EBITDA guidance. But what we are right now managing and controlling is volume and the cost. So what we are guiding the market with in the current fiscal, overall volume growth by almost 10% and better off positioning in terms of cost. So 20% higher operations, it lead to same value in terms of profitability.
Well, Astha, coming to you, when it comes to Vedanta, they've given a volume growth guidance of almost 10%. Any view on that? How are you tracking this? Good time to entry?
So we are finding this to be quite decent volume growth guidance of 10%. In fact, we also, liking the fact that what we have seen in the Vedanta result is their performance came across the board or in all the segments. It is not any particular segment. And in fact, whatever CapEx plan they have discussed previously, that is also progressing well. So I think with all these factors keeping in mind, we believe that Vedanta can show more upside from here. But right now, only a hold is a strategy which we would like to recommend for this counter, not a buy. Maybe buying at the lower level of around 400 or 395 seems to be better choice. So right now, our strategy is to hold the counter with the initial price target which we are setting is 470.
You coming in on Vedanta. Now, let's also shift focus and take a look at some of the banking counters that are in focus, and this is on the back of course, its Q4 earnings. Harsh is joining us with details on Bandhan Bank, Home First Finance, as well as Federal Bank. Harsh, what are you picking up?
A mixed bag in the sense the way in which financials have panned out, and the first one with regard to Federal Bank. Now, in terms of margins, they were absolutely flat off a low base. 3.11% was the margin that Federal Bank clocked Q3 FY25, 3.12% this time around. So really no end with regard to the margin pressure inside, especially for Federal. In that sense, a negative. But your profit, which is your ROA number, surprised on the positive side because recoveries came through and aided the credit cost number. And therefore, while the numbers are a mixed bag, we're giving it a thumbs up because the ROA number was a 1.2+%, and that has held up fairly well, and that essentially is what matters in the medium to long term. The management reiterated the way in which they see the journey with regard to growth. They're going to do higher margin product. Asset quality is not a concern, is what they reiterated, and some key positives are the fact that the ROAs are holding up. So the way in which they're seeing this, growth might taper a bit, but will be expected to be 1.2 to 1.5x of the system growth. So not bad on that count either. Growth expected, margins hopefully will pick up, but may take some amount of time given the kind of pressure that we're seeing from the rate cuts. Now, Bandhan Bank. This is where you're starting to see more pressure, higher credit cost, higher slippages, and therefore, again, from an asset quality standpoint, not seeing an end at this point. You're seeing muted margins because of the pressure that we're seeing with regard to margins. Another 21 bips fall, and going forward as well, the margin visibility doesn't look good at all. The only possible positive here is the advance and deposit growth, which remained resilient in this quarter. 4% growth sequentially on the advances. On a YOY basis, again, the number was muted because the first half was a difficult first half. The NPA ratios, they managed to maintain flattish kind of NPA ratios, but with great difficulty with the kind of provisions that they've been doing. The last one is with regard to Home First. There's strong growth, 6% sequential. NII growth was 8% sequential, so very impressive. Credit costs were depressed on a low base and were extremely low, which aided the profit after tax number. The PAT number was up 27% YOY, 8% QOQ, crossed the 100 crore mark. So strong growth in terms of profit after tax. Your ROAs on a high base continued to be maintained there. So 3.5% ROA, as good as it can get, a clear thumbs up.
As good as it can get for Home First Finance. Thank you so much for breaking that down for us, Harsh. We also, in fact, spoke to Mr. Venkat Raman, the Group President and CFO of Federal Bank, about the company's growth picture and the outlook going forward. Listen in.
See, Federal Bank has always demonstrated solid growth even in the past years and has been growing faster than the industry growth. Having said that, with the leadership change, what we are looking at is tweaking of some of the parameters to ensure that the growth which we get continues to be quality growth, profitable growth, and in the areas where we have chosen to grow. In the analyst meet in February, our new MD and CEO Manian had given an outline of areas where we want to focus, especially on the growth aspect on the medium yielding assets. And what we have seen play out in this quarter is exactly the growth in the chosen areas. Now, with that backdrop, we will continue to grow in the chosen areas, and the growth will happen both on the assets and liability side. For example, on liability, we clearly spelled out that our focus will be on CASA. And I'm happy to report that CASA has grown close to 7% QOQ, and CA specifically, I want to call out CA, 27% QOQ growth, and the number of accounts we have onboarded in CA is significantly higher than what we have seen in the past. So there will be focus on the chosen areas, and we'll continue to grow. And we have absolutely, in terms of ready in terms of capital, in terms of CD ratio, LCR. So we will capitalize on the growth opportunities.
Okay, so that's with regards to where Federal Bank stands. Astha, I'll come to you on this one. A lot of banks have come out with their earnings. We're expecting Kotak as well as SBI to come out with its earnings tomorrow. So far, how are you reading the entire banking space earnings? Has there been a trend that is being observed? And secondly, what's your view with regards to how SBI and Kotak will fare?
So what I have observed from the earnings till now is that asset quality has started showing improvement. This is, I find, in most of the banks. Now, in case of Federal Bank also, if we see the numbers are not very encouraging. But what is encouraging is that their GNP and NNPA ratios are at a decadal low. So they are low in around 10 years. What we have seen such kind of a number. If I talk about NNPA, it is 0.44% and GNP is also 1.23%. So I think these ratios are looking quite strong for Federal Bank. But talking about the other banking counters like Bandhan Bank, we are still not very much convinced, because we all knew that there is a problem of the slippages, especially in their MFI segment, and asset quality was also of a concern, and still we are not able to get any sort of relief on those parts. So Bandhan Bank and Federal Bank, these two banks are right now not looking very attractive to buy. Yes, regarding Home First Finance, I can say that yes, they have raised fund recently of around 12 billion, I suppose, that is at rupees 970 per share. They have raised the fund, and that raising of the funds helped them in reducing their leverage. In fact, they have shown the 33% CAGR growth in the AUM also. So among these three counters, I'm very much positive on Home First Finance. But if I talk about banking space, we still would like to go with the leaders, which are ICICI Bank and Axis Bank.
Okay, ICICI Bank and Axis Bank are the top picks in the banking space from Astha. All right, we have Dinesh Agrawal, founder and CEO of India Mart Intermesh, joining us now. The stock is in focus, of course, on the back of its earning. Dinesh, a very good afternoon to you. In terms of the Q4 numbers, it's been a great set of quarter for you. In terms of revenue, it was up 13%, EBITDA was up 47%, margins also significantly improved year on year, and your net profit was also up 81%. Now, from what I understand is your overall top line as well as margins were aided by the kind of subscriber addition that has taken place, and plus your overall net profit was also aided on the back of other income. Just wanted your understanding as to how the quarter has panned out as per your expectations, and overall what's the view like?
So we have been able to grow collections by about double digits and revenue by about 12-13%. despite the fact that the number of customers have grown only 1% year on year. So most of the collection growth or most of the revenue growth has come in from the previous customers, which are gold and platinum customers. As I have been highlighting earlier also, that our 50% gold and platinum customers continue to do very healthy business on IndiaMart platform, and their average revenue per customer has been increasing year on year as well as quarter on quarter.
Right. Okay, got your point, Mr. Dinesh. We'll be right back with you in just a tad bit. Let's also cut across to Karan Adani, MD of Adani Ports. He's addressing the press conference in Virinium. Listen in.
No operator. That is today it is, we have operator doing the last 1.5 feet of picking up and dropping, just the last 1.5 feet. In full automation, we don't even have that.
You will not be able to do it here?
I don't think so we need to do that. I don't think so we need to go to that level. We don't have issues like other countries of not having labor, or trained labor, I would say, skilled manpower. But yeah.
So how much of the cargo that being about 6 lakh TEUs, how much of that has been carried by MSC?
Predominantly MSC. Yeah, predominantly started with MSC. So predominantly almost 90% is MSC right now.
Who are the others?
Others were Maersk, which these are the two big ones.
And out of the number of vessels, mostly it is MSC, like 200 and what?
Yeah, something.
What is the country of origin, like of the vessels that have been here? Country of origin for the vessels and the cargo?
So these are predominantly international transshipment. So basically, volume which moves from east to west. So basically from China or Southeast Asia to, I would say, to Europe and US. So predominantly that is the cargo. We also have started few feed rings from Indian ports coming into Vizhinjam and then getting onto the larger ships for the transshipment. But predominantly it's the international transshipment which happens.
Is there some impact on the tariffs? Like what do you feel? What is coming as a result of the tariffs?
In terms of trade?
Yeah, in terms of trade, transshipment as well.
So any disruption in trade routes definitely impacts shipping lines and impacts the I would say the movement of cargo. In that way, some of the transshipment points actually benefit from disruptions because end of the day shipping lines will have to reroute some of the cargo. I think so. That is from transshipment perspective, but I think from a trade perspective, what we are seeing is a lot of manufacturing moving into India and the export boxes increasing from India to US, I would say.
So the primary reason for setting up this terminal is to get Indian transshipment container that was going via Colombo to be tanked here. So has that really materialized in the sense that out of the 6 lakh TEUs, how much of it has been Indian transshipment cargo?
We've just started, but in our view, it give us another year. I think you will actually see the full blown effect of transshipment, Indian cargo getting transshipped over here. We're still in a starting stage.
Right.
We're still in a startup stage.
Right.
So my request is don't take the startup stage as an extrapolated going forward. It is give us a year. We will see. Actually, eventually, you will see that all Indian cargo will get transshipped over here rather than predominantly international cargo.
What is the kind of capacity you're looking at, like TEUs?
In phase 1, phase 2.
When it comes to 2028?
So we are targeting 5 million TEUs of capacity. By when? 2028. 28.
And what is your plan if you're going at, what is your ultimate goal and what you're trying to achieve from here?
Sorry?
What is the ultimate plan for the sport? And where do you see it?
So our target is we want to reach not just the capacity but the volume to hit that, and I think more importantly we want ultimate goal is it has to help in terms of reducing the shipping cost for the Indian exporters and importers, and that is our ultimate goal. That how do you help in reducing the transit time? How do you help in terms of reducing the logistics cost for the end consumer? Because once that happens, the volume will keep increasing, our competitiveness in the global scale will keep increasing. So that's the ultimate goal.
What is your capacity ultimate when it is in full flow?
It will right now what we have approval is up to 5 million TEUs, which is the environment clearance, and then as in we will put for phase 3 as and when it's the right time. Then that is a further subject to.
What it will be?
We don't know yet. We're still studying that.
So how much this cost could be reduced to say the ultimate target is reducing the cost?
Our target is to reduce by 30%.
30%. By
No, it's very hard to give you a timeline, but ultimate goal is, because see, this is all a network, right? You have to work with shipping lines, you have to work with other ports, you have to work with shippers to make sure that there are a lot of stakeholders who are involved, which we have to convince them and to show that value creation and the value proposition that we are proposing. So it is a let me put it this way: it took us 20 years to make Bandra. So give us some time to make Vizinja.
So what are the major capital projects left out here? Major capex?
In phase 1, nothing left. Phase 2, now we have to extend the breakwater by another roughly 900 meters, and then we have to build a berth, extend the berth by another 1200 meters, and the backup area, corresponding backup area, as well as the equipments.
So the extension of the breakwater will be funded by you or the government?
By us. By us.
Everything will be you?
Yes.
No, government, state, Kerala's done.
And it's from internal accruals, or are you borrowing this?
Internal accruals.
So what is the average cost of calling up a ship in Vizhinjam at the moment?
So roughly it would be what, if I have to divide this by, let me just work it out. I'll give you. So roughly $40.
$40
per box.
Okay.
Compared to
other Colombo, Salalah, Singapore.
Same.
Okay, and then you're aiming at further reducing shipping costs by 30% in India.
Of course.
By 2020.
It's not. It's reducing cost for the shippers can happen through better turnaround time, better efficiency, less stay for the ships, and indirectly it is because from the same vessel, if they are able to give a better throughput, it automatically helps in reducing. So that is what we are aiming. So just to give you an idea, if a ship is staying 24 hours, our target is how do you bring it down to 12 hours. So how do you do exchange instead of 24 hours? How do you break it down to 12 hours? So that automatically helps in terms of improving the efficiency and bringing the cost down.
So what is the average turnaround time at this moment since you started operations?
So the question is depending on the
volume.
Generally, it turns out within if it is 1,000 box, we are doing about 30 moves a crate. If you decide the side, it's like 10 hours if it is 1,000 box, like 5 hours, 8 hours, 10 hours.
What sort of revenue you expect by 2028 from this?
Do I have an answer? I've not even calculated that.
But you've calculated numbers in terms of capacity and other things.
Yeah, but so our focus is not revenue. Okay, end of the day we have to look at how much I would say in terms of what is the utilization factor. So generally we are targeting 90% utilization, and generally if you take even $40, margins are roughly 70%. You can calculate based on that.
Should be minimum 4-digit.
Yeah.
So both Viridium and Colombo put together ultimately will have a little more than 8 million TU capacity of transshipment, right?
More.
Okay.
More.
So what does that mean for Adani ports and SEZ?
What do you mean?
In the sense that how are you going to leverage that? And it's a different kind of business.
It's a growing. It's the end of the day trade. We are still at a very nascent stage at the trade. If country needs to move to $5 trillion economy, trade has to increase. If trade has to increase, where is the capacity? Where is the capacity in the country? At the end of the day, our trade growth has to be twice that of what the country's GDP growth is. And today we don't have that capacity, and that is what we are not worried about that. I think in our view this will get filled up much faster than what we anticipate. So we have to be enabler of the growth in the country, and we do believe that end of the day whatever we are building today, it's not enough. Even today what we are building is not enough. There is much. I mean, when we built this, everybody were questioning whether this will be filled up or not. Today we are clocking almost 100,000 moves every month.
You will hit 1 million.
We are already full. No, we are already full. We are already full. Our run rate is already at 1.2 million.
New projects like Andaman, do you think that can cause? Is it a concern, or is it like a?
I don't think so. It's a concern. I don't think so. It's a concern. Country needs more. As I said, country needs more infrastructure, more points. It has to hedge its bets as much as possible. Less concentration is always better. I always believe that. So I think it will all of this will enable the growth of the country, help in reducing the trade cost, and that is what we have to aim for.
You were at the board meeting yesterday. What is the capex that you have for the year?
12,000?
12,000.
12,000.
11,000 to 12,000 is the guidance. 12,000. And this will be broadly be used for what?
So first is ports, where we are talking about 6,000, but ports mainly capacity expansion in Mundra, Colombo, and Dhamra, all the major ports where we are doing the capacity expansion. Then we have second pillar, which is the logistics. In logistics, we are investing, of course, in the rail network and so on, but most important, trucking and the warehousing. The third pillar for us is the marine, which is now a very distinctive business unit. So we are going to invest in marine. And the fourth one is what we have started is technology and decarbonization. So approximately 1,380 crores will be on technology and the decarbonization, which includes renewable energy and what you have seen technology here. We would like to copy paste these kind of technologies in our ports to improve the efficiency and effectiveness.
This will not include inorganic expansions. This 12,000
Sorry?
crores will be over and above that if at all you identify
M&As.
a target company and then all that.
So that will be opportunistic. Not something that we have on our something which we can predict and say.
Similar opportunities see in other states.
Sorry?
Similar opportunities in other states for transshipment.
No, transshipment, see, you have to see this, that transshipment only works on major trade routes. Why Vizhinjam works is because it is 10 nautical miles away from the major trade route. So any major deviation, if you ask shipping lines to make, it does not work, because for them it's a cost. As long as you are on the major trade route, it's very difficult to replicate this kind of asset anywhere else in the country. Very, very difficult.
So any opportunities in ports you see other states?
In ports?
Yeah.
So ports, we obviously see Vadhavan as a big opportunity as and when it happens. We do see organic growth in our ports already, because the ports that we already have, 16 ports in the country, there we see a huge opportunity for further growth and expansion. So yeah.
Well, when do you see the multimodal connectivity actually coming to fruition?
In Vizhinjam, it would be what government is talking
Sir,
about?
we have temporary connectivity road will happen in the next 3 to 4 months time.
Yeah.
The clover leaf between 18 to 24, full-fledged clover leaf on road.
Yeah.
28 there is the commitment. By the time we do the expansion, they will bring the rail also.
Governments, because railway has to be brought by government, so their commitment is 2028.
What further innovation are you planning for the bank?
What further innovation? So, as Ashwini mentioned, a lot of focus on decarbonization. So a lot of focus on usage of EV, usage of renewable energy. You will see, next time when you guys come, you will see that most of the trailers over here, which are right now diesel run, they will be all running on electric. So a lot of focus on that. A lot of focus on how do you bring in automation and robotics to help in terms of not reducing, but how do you improve efficiency even more than what it is. So, traditionally, when you look at when we start comparing ourselves with global players, we are stuck with the traditional method, and I think world has moved on quite ahead in terms of usage of automation and robotics, and we as a country we have an opportunity to leapfrog that, because we've seen that leapfrog because of two aspects. Because we are building new infrastructure, so that allows us to build in from day one, and second, we are not we don't have the overhang of our past, so that allows us to move quickly on adoption of these technologies, and I do believe that that will help in terms of drastically improving the productivity, efficiency, cost at an unimaginable level.
So Adani, what is the total investment done so far, and out of that, how much is your part, and when do you plan to recover that investment?
So roughly we've invested 7,000 crores right now, or what? Oh yeah, total invested is 7,000, right? 7,000 by government as well as by us, and by government of India as well. I think from that our part would be roughly 4,300.
Have you received the VGF after the signing of the agreement recently? Have you actually received it?
No, we will receive it in this month.
From Government of India?
Both Government of India and Government of Kerala.
For how much? 816, 17?
816 from Government of India, for 400 something from Government of Kerala.
In lump sum, not in phases, right?
Yeah, that lump sum.
Okay. And in the context of global tariff war, this container traffic is like slightly depressing. Do you see any impact in at least short term for Vizhinjam?
No, actually we are not seeing. It's a little bit of misnomer, because we assume that because of trade war, Europe is getting affected and China is getting affected, so India is getting affected. Actually, it's the other way around. For us, the trade is actually increasing more than double digit. I'm talking about as a country. I'm not talking about as APSEZ. It's a bit of misnomer when we believe that because of trade war there is a depression in the trade of container. You're right. It is a little bit of depression when you look at from Europe and from China perspective, but for India is in a very sweet spot in that way.
Sir,
Yeah, please.
सर गवर्नमेंट की जो आईमेक प्रोजेक्ट को बढ़ा रहे हैं, आज मोदी जी ने भी इसका जिक्र किया, आपकी कंपनी इसको किस तरह से अपॉर्चुनिटी के तौर पे देख रही है?
So IMEC again, it's a great opportunity when you look at how do you as a country de-risk from one particular choke point, right? Suez Canal today is a all said and done, is a choke point. If one ship gets grounded, the whole global supply chain gets disrupted. So, end of the day, it is all about self-reliance, right? So how do you create alternate routes possible? And I think IMEC is one of the great opportunity of creating that alternate route. That being said, I'm not saying it is going to be easy. You have almost 4 countries which are involved in this. So there are practical problems of customs, there are practical problems of paperwork. But I think if governments put their mind to it and if there's a will, I think there's definitely they will find a solution. And in our view, from our perspective as a company, we have Mundra, we have Vizhinjam, so all our western ports that can be a gateway to the IMEC corridor, and then the exit of the IMEC corridor, which is Haifa port, again in Israel, that is also operated by us. So we believe that we are in a good position to try to find a solution, giving end-to-end solution to consumers, to give them one-stop solution of the total transport of the total logistics movement on the IMEC corridor.
So for NQST acquisition, do you have any roadmap in place, like how you plan to utilize the synergies?
Thank you. I think at first our focus is to unleash all the potential we have in NQXT, right? So we are doing 37 million metric ton. At first we have to go to 50 million metric ton with the new customer acquisitions which are already in the pipeline. That itself will give us a significant increase on the margins, which are in dollar terms more than 15%, which is higher than what normally APSZ should see in the coming years, and then to take it from 50 to 60 million metric ton. Then because we have got space, now the government of Australia, especially Queensland, have already identified this port as one of the potential green port, as a green hydrogen hub. And as you know that India is also in a good position for the green ammonia and the ammonia derivatives exports to South Asian countries. Australia is also has been identified to export that to Japan, Korea, Taiwan, Hawaii, and so on. So those kind of synergies we see, that is one of the opportunity to take that port from 60 million metric ton to 120 million metric ton. So that's what is a long-term roadmap for us. The short-term, mid-term, and the long-term.
And sir, for this quarter, the exports were really good. The growth was really good. So do we see this continuing the trend?
In terms of the overall?
Like the international volume business, that part I saw. I think it was a triple-digit growth this quarter.
Triple-digit this quarter? Yeah, because we didn't have the quarter 4. We didn't have Colombo starting, right?
Yeah.
Last year, Colombo in quarter 4. So that's why you would have seen, because new assets are coming on stream.
So how do you see the international business growing? The domestic volume are good.
So international business, we have fired. Fired means our engines are fired in Sri Lanka, and we see a big ramp up over there. And answering to your question before, in Colombo, Colombo has got a capacity of 7.5, and today they need more than 8. So if we add 3.2, it will go up to 10. So which means Colombo is short of capacity, and with our coming in, we are already booked, same as Vizhinjam. So that's why Colombo's engine is fired for the future growth, and now we will go for the expansion of it, as we explained in the capex. Haifa is doing extremely well. That's what, to answer your question. Last quarter they grew more than 30%, and as Israel is going for the reconstruction, the steel, the cement, the automotive, everything comes to our port, so we see a big demand over there. Tanzania, we are getting full, and we are starting the expansion of the berth by 100 meters, so we already started that. And NQXT I just explained. So international, we said 2030 we should be 1 billion, out of which 150 was approximately international. We have clear visibility as on today, without any inorganic growth, to hit 148 by 2030. So I think we are done for that roadmap ambition which we had What will come from now will be a bonus for us, which is any inorganic opportunity which comes in, which again, top line and bottom line growth.
Yeah. In Colombo has also got expansion plans, right?
Yeah.
I mean, on the other side they are. Your second phase of Colombo is already on?
Yeah, we've started. Yeah, we started.
Okay. And for that, I mean, since this US FDA loan didn't, you're backed out of that. So are you looking at refinancing because you did it internally from your own?
We don't need. Actually, we have another issue where we have more cash flow than what we can utilize for. So that's why if you see our net debt to EBITDA is, which used to be historically at 3.13, is right now at 1.9, and it will further come down to 1.5, which is not a good sign for us as a company. So we have. I don't see that as a big issue.
So the parent company lend money as debt.
Yes.
For the project.
So in the morning, Chief Minister was saying very interesting, anecdote rather. All the fishermen community, women are crane operators. And when we met last time, also you said you will ensure that.
Have you guys got a chance to see the crane operation below?
We could not even go inside. So that's a different story.
So we should take you guys downstairs, and you will see live. You don't need to ask me that question. You will see there are 5 women operators right now operating the whole backup yard. So today we have 50% of our operators are women. 70% of our operators. Yeah, I'm talking about crane operators. 70% of our operators are from the state. 60% are from Trivandrum, and almost 40% are within the 10-kilometer radius.
Not just operators. Overall.
Yeah, overall.
All strength put together, 70% is from the state.
When will you have a women CEO at one of your terminals?
Ask him.
So the day, I was explaining before also. For us, as Mr. Karandani has said, technology is an enabler. Technology is not the objective. So technology is an enabler which is creating inclusiveness to drive every diversity, irrespective of age, gender, competency, and so on. With just 3 months of training, you can shift 40 feet of container, which used to be a job for some specific competency. I do believe Dhamra, if you are going, Krishnapatnam, you will see the women supervisors now. But I do believe at least the container one, our target is to go up to 50% by 2030 in terms of female. But yes, for CEO, that's a good advice. Let me work on it and come back. But that's a good feedback.
Cruise terminal का क्या? Cruise terminal का? There is some discussion, right? I don't know who.
Last time that's what was discussed.
By?
Last time when we visited, there was a possibility for cruise terminal.
There's a possibility. Because environment clearance allows us to do a cruise terminal. Right now we have not planned. So
what is the capital outlay for the second phase?
Roughly 13,000 crores. 1-3, roughly. 12 to 13,000 crores.
How much will be your part?
That's 100% our part. There's nothing from government.
So the factory is in plan in near future?
No. As I said, we have more high cash generating than what we know what to do with. So, huh?
Give dividends.
Or any plans for buybacks or?
So we've announced dividend as part of the board after the board has approved.
So even after the dividends also your cash is still high?
Yeah, even after dividends, you want to maybe talk about the cash?
Yeah, I mean, at first, what's important for us is how we are creating long-term wealth for our shareholders instead of distributing short-term, right? So that's why we are increasing our presence and spending of capex on mid to long-term growth. That's why now we are strengthening our logistics and marine pillar, right? 10 years, 15 years before, Mundra was like 1% ROCE, right? Now today we are talking about more than 20% ROCE on our domestic ports. So on one side, we have to put our money on efficiency and effectiveness improvement on the existing capacities, but then we have to expand the existing capacities, but most important, start building the new capacities, not only in ports, but the other business units. That's why marine and this thing is important. So this is, right? Now, when we say 7, it is in line with short-term and mid-term and long-term cash and wealth creation for our shareholders. Now, if you look at our cash flow for the next year, right, if you take out depreciation and so on, right, so we still have some cash available, which definitely first opportunity we get on the inorganic capex, would like to go for it. Again, condition is top line and bottom line growth. So I think it's too early to say that we have an option for buyback, but we do believe, as Mr. Adani has said, that we have huge potential, especially, talked about IMAC between Southeast Asia, India, Middle East and Africa. We have huge potential.
In continuation to that, strategically for international expansion, which area would you be looking at? Which country would you be looking at?
So, as mentioned earlier also, Southeast Asia is an area of interest, and obviously East Africa is also of interest. So we keep looking at opportunities as and when it comes up.
Have you identified any ports?
Transshipment, so how many more transshipment ports is Adani Ports looking to build?
Right now, nothing. Other than Colombo and Virinjam, what we have, nothing right
What
now.
about terminals? Are you looking at any terminal projects anywhere?
In India?
Anywhere, like?
Not actively. I think we are as and when opportunity comes, because right now in India, at least what we see is for the next 2 years there are no new terminals which are coming up. I think after 2 years all the biddings will start when the concession are coming to the end of life, and so that's the time, that's the opportunity to. Sorry?
The Bhagavan and all that are coming.
So that it's all two years down the line.
Well, that's Karan Adani talking about first semi-automated port in Virinjam. But sources told NDTV Profit that a 31-member panel will meet today to examine the income tax bill of 2025. Shrimi joins us with more details.
Yeah, so the income tax bill 2025, which was introduced by the government during the budget session in February and subsequently referred to the select committee for further examination. The panel is meeting today is what we have been given to understand to continue discussion on the draft legislation which was proposed during the budget. So panel has apparently sought specific input from the income tax department, including a detailed list of prominent charitable trusts and the rationale behind for classifying them as such. I mean, why they have actually classified as prominent charitable trusts is what the information sought by this select committee. So as per the latest official data, around 3.5 lakh charitable trusts registered with tax department under 12A. According to that, they get tax exemption at this point of time. So there is no as such threshold on whether the size of the institution or the amount of donation which they receive define the prominence part. But tax department learned to have given the list of names to the select committee of all those institutions on the amount of donation they receive. So source indicated that committee is scrutinizing all those provisions related to tax exemption and compliance framework involving the charitable entities across the country. And the request for clarity actually comes amid growing focus on the transparency and the need to ensure equitable treatment under the new tax regime. So far, the select committee is meeting today to scrutinize the charitable institution and the prominence of those, trying to understand that how much amount they receive and why we are giving those tax exemption to them.
Thank you so much, Rimi, for all the details. Well, viewers, it's time to wrap the show. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's on.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Do you know where is India's largest single location air conditioning system? Well, it's not in an air conditioning plant. It's at the cell plant of Vari Energies. And join me as I enter that facility, the newly started facility, and speak to the promoter, Mr. Hitesh Doshi, to try and get a sense of the company and the enigma that is Vari Energies. If you thought Vari Energies was about modules, you have to think again. Because when you stand in this fascinating manufacturing facility in Chikli in Gujarat, you realize the scale of ambition that the promoters have for taking Vari from being a module manufacturer to what it can be. And that is precisely what I'm going to quiz the founder and promoter, Mr. Hitesh Doshi, on about what is the journey of Vari been thus far and where does he envisage to take Vari over the course of the next decade and a half and probably beyond. With me on this very special show is Mr. Hitesh Doshi. Mr. Doshi, thank you so much for being with us today. And thank you for having us here.
First of all, thank you very much for coming and giving your time. It takes long time to come and visit. But thank you. Thank you very much and welcome to the latest technology solar cell factory in the country.
Oh yeah, it certainly seems cutting edge for sure. But Mr. Doshi, let's start with the basic question, right? What is Vari Energies? Could you describe Vari to us as it stands now and as you see Vari to be like, let's say maybe towards the end of the decade or maybe 10 years from now?
Vari started with the mission, I will say, can we change the energy we are using? And that has from normal electricity to solar way back in 2007 with that idea. Can I use a solar power? And this, what I saw 16, 17 years back, and today it is alive. Now, the technologies are coming up constantly. The new things are coming up. So we'll continue to work on the direction, the way we use the energy, and the new name for it, the energy transition. So in that it comes an energy transition company. Of course, we have been selling a solar for a long time, and company knows as a solar company, but internally we are not a solar company. Internally we are the energy transition company, and we'll continue to work in that direction. And that is a vision for the company, that how we keep on changing the way the people are using the energy in this transition.
Okay, so Mr. Doshi, the belief is that Vari or you are executing a long-term strategy to be both a vertically and horizontally integrated company.
Right.
Could you describe or could you tell us about it?
See, to answer, like on the horizontal side, solar panels, batteries, inverters, right? Hydrogen electrolyzers. And if you go vertically, to make a solar panels, we'll need a glass, aluminum, solar cells where we are today now, solar wafer, solar ingots. Same things will come up in a batteries, electrolyzers, and other products. But this product range is going to increase. It is not going to stop at the electrolyzer or at the solar panels. So product will increase. Same way, vertically, downward side and upward side. We are talking about developing a solar farms, power generations, EPC. So whatever you name it, going ahead till we generate the power and going backward till we make all the components for it. This will continue in entire business chain.
Okay, so as I understand, sir, the main product right now is modules.
Right.
And on modules now you're going vertical wherein you do, let's say the cells or the ingots, etc. and stuff like that. You are adding more product lines, you are saying?
We are in the solar panels also, we are adding a lot of product lines. And same way to make a solar panels, we have gone to the solar cells. Now we are going for a ingot and wafers.
Okay.
So that backward integration is going on.
Wow. Okay, please help me understand this. So from where Vari is right now, and I have some numbers here, right? Your module capacity is going up from 13.5 gigawatts right now, if I'm not wrong,
Right.
to maybe 21 gigawatts by FY27. Then you have 11.5 gigawatts of cell capacity, 6 gigawatts of wafer capacity. Now, is this a part of diversification in the near term? And do you expand upon this meaningfully? And from where Vari is right now, what do all of these capacities become 5 years or 10 years down the line?
Okay, first of all, in this financial year, which is started now, we'll reach a module capacity globally, including the United States and all, will be the 26 gigawatt.
26.
6 gigawatt, not a 21.
Okay.
And cells will increase above 15 gigawatt
Okay.
altogether. So 6 is a PLI, 11 gigawatt. So cells will be above 11 gigawatt. Ingot and wafers will be the 6 gigawatt each.
Right.
And this is already we have announced during our IPO. Apart from this, we have also taken the various approvals from the board. For example, for investing into the batteries, investing into the electrolyzers, investing into the infrastructure. And this has been in a progress. So when we travel to the Mumbai, from here, you will see the battery plant, civil work has already started.
Yeah.
Electrolyzer plant work has started. So all these expansions are going up and coming up in this financial year.
From a revenue perspective, will Vari remain largely a module and a wafer company, or could there be other line items which could be very large?
Well, a larger perspective, Vari will be an energy transition company.
Okay.
What are the products will require in that transition? We'll try to manufacture them. To manufacture that products, whatever the raw material will require, we'll try to work in that direction.
Okay.
So that comes on the manufacturing side.
Right.
But now customer needs the services.
Yeah.
That can be the EPC, that can be the power generation and cell, maintenance of the plants. All such things will come up in the entire value chain.
Sure.
So energy transition is not just to manufacture, it will be a supply services and it will be the final operation and maintenance for the plant also.
So, Mr. Doshi, usually for a smaller company with a smaller revenue base, a growth number, CAGR growth number for multiple years, which is very high, is thought to be possible. You are saying because of the size of the opportunity that you've spoken to me about and battery energy storage system, you are saying could be at par with solar.
Right.
You at your size, would it be safe to say that you can actually grow at a very high percentage CAGR number for a long period of time?
Let us talk about the recent numbers, right?
Sure.
We were 13 gigawatt and today we are discussing about a 26 gigawatt.
Right.
We were only in India. We are now expanding to the US and other markets also.
Got it.
So what this means? This means that if my production capacity is going to increase from X to Y level, there is an opportunity for me to increase my turnover in that way also.
Got it, sir. And you would believe that the ecosystem that India is creating around solar is supportive enough for promoters like you to do this, to fund growth for your shareholders and stakeholders, but also for the nation at large?
Absolutely. We see the various schemes the government has brought here. It may be the Kusum Yojana, Pradhan Mantri, Surya Ghar Mukti, Bijli Mukti Yojana. We call the various schemes. These are just so large. And when they will be completely implemented, we'll see. For example, we talk about the rooftop, right? And any rooftop, wherever we are using the power under that roof, it can be a potentially solar power generator rooftop. Okay. You go to any terrace and you will see not even a 5% roof anywhere in the country are not covered.
Agree.
Right? Now it comes why somebody will put it. Solar is the cheapest solar power. Government is giving you a lot of facilities, right? banks are financing it. Even the solar installers or the suppliers are financing it. So why the user will not go? And if we go from 5% roof, which is not there today, but let us say there are 5% theoretically. If we go from 5% to even 10% roof, we are talking about doubling the market size for the rooftop.
But this massive capex for the next couple of years that you're undertaking,
right?
Would you undertake it via the internal accruals and the cash on books, or would you pile up on some bit of debt in the near term? Because I saw projections from some analysts that for the next 2-3 years, after FY27, your free cash flow really zooms. But until then,
right,
it does go down.
As a company, we have been always a conservative for debt. If you look to last 35 years of the company,
right.
But same time, we have the bank limits available with us. If it is really required, on the need base, we'll use the debt. We are open to take a debt. With the grace of God, so far the need has not arisen. But if it arises, we will go for it.
Now, I have some near-term questions, Mr. Doshi. And viewers, I'll explain this as well. But one of the notes stated that a shift from moderate margin ALMM modules to high margin DCR modules will lift realization and margins. I believe ALMM means import and sell, and DCR is make in India and sell. Now, can you explain this to us, sir?
I think you started capturing the solar names at the ecosystem. Now we are importing the solar cells,
okay,
and making a solar panels. We are completely dependent on the other countries.
Okay.
Government of India, as well as some export market like United States, they want cells to be made not in a 1 or 2 specific countries, but in India also. And Make in India mission is also there. So in that, we need a solar cell to be produced in India.
Your module capacity is much higher than your cell manufacturing capacity. So will you go on a heightened capex drive for cells in the future, or will you need to buy cells from somebody in India?
At present, we'll need to buy the solar cell in India. As soon as have the more visibility on the market, we'll keep on expanding our solar cell and other items also, whatever it needs to make the solar modules.
In a disjointed world like this, wherein everybody is turning inward looking, there are tariffs, etc., what are the risks to the Waaree business, sir?
So globally, the tariffs or incentives or IRA or you name it, that will come and go. But last 10 years or 15 years, I'll put, the use or installation of the solar power has been constantly growing at least by 30% globally year on year. Till we have something different to meet our growing energy demand globally, I don't think the solar power demand will come down.
If I were to fast forward the time to 2035, what percentage of your revenues will come from India? Maybe, ballpark.
Right.
And what percentage would be export driven or global?
What we aspire, that I can tell you, because future nobody knows, our aspiration will be always a 50-50.
Okay.
So as a company, we believe in a lot of de-risking. It may be the product manufacturing, it may be the supply chain, it may be our sales and distribution, it may be the geography or market or application. So when you look to the entire portfolio, we believe in that, how much we are getting from the retail business, how much we are getting from the large market. And that will implement straightforward to the export also.
My question to you would be, how does a large company like you, which will become larger and will have a large global presence, compete or get that technological edge? We'll need to let this robot go, I presume. So let it go on its own way. Off you go. But yes, please give me the answer to that, sir.
China is definitely the largest in the manufacturing. Companies like us, we aspire how we became a competitive by technology, because price game doesn't work longer time. The product and services. And that has helped the Waaree. Not only today, for last 35 years, and if I take the solar from 2008, so we are talking about 17 years. So 97+% market share is with the Chinas. Right?
Sure.
Still, the company like Wari has not only survived, but constantly made a profits and grown.
Sure.
And increased the capacity.
Sure.
And that differentiation we could do for last 17 years and will continue to do that with our technologies, product and services.
But would this require a very large investment in research and development, etc.? And a lot. And Indian corporates are gearing up for that?
As Wari, I can tell you, we have been constantly expanding our investments in R&D, and we are increasing our budgets more and more on the R&D side. Today, due to that, we have the largest range of the products globally for any solar manufacturing company have. Or we talk about the applications. In number of the applications, probably we are the largest number of applications we have to do.
Oh, interesting. Okay. Now, there are some reports which speak about, like there is a Nuvama note, it's a brokerage, which has brought out some risks for your company, which they call imponderable risks. And they say that there are eventual import tariff cuts, technological upgrades, and potential modules over capacity. Could you dwell on these?
Any industry, when it comes, a lot of people jumps in.
Right.
At this, you must have seen in last 30 years in our country, in many industries. And naturally, this is going to happen in the solar also. So more and more people will jump in. But setting up the capacity is not like you will get a success immediately in the market. Because the customer is buying the product for 25 years. Bankers are landing for 25 years. Right? So the bankers or lenders or the customers, they want to make sure that what are the products they are buying, this product will work for 25 years.
Sure.
So they need a lot of approval, they need a lot of certification, they need a huge on-ground performance of your product. So I can set up my manufacturing facility today, but can I give the 5 years, 10 years performance of my panels for last 10 years? I cannot give that. So overcapacity will come, but whether the customer will get a product with a large, I will say the track records, certification, quality, bankers approval, I don't think they will not get for 5 years.
Got it. Okay.
Now coming back to the technology risk, the business we are in, I have seen now this is a 6th cycle of change in technology. So we believe that any technology we have today, the shelf life is maximum 3 years.
3 years.
And that is the reason in a Wari's balance sheet, we depreciate all our machineries every 3 years.
Okay.
All right? Because we are ready for the new technology, new machineries to get in all the time. And our R&D team continuously works on what will be the next technology and where we have to work on that.
Very interesting. Okay. So you told me about the modules overcapacity risk. You don't believe it's that big a risk. But if there is overcapacity, does it impede operational metrics for the near term?
And near term, there will be some competition.
Okay.
But as I said that if you want to buy the solar panels, and you'll definitely see you are buying a product for 25 years. So what is the 5 years at least generation data of these companies? I buy the panels and after 1 year, if my generation degrades or if I don't get the, I will say the required power generation, why I will buy it?
So you think winners will survive and a lot of other companies which are setting, some companies which are setting up capacities may not be able to thrive?
That has been happen across the industries in 30 years, right? We have seen only a handful companies have survived.
Yes.
It may be you name any large industry today.
Yeah.
And that will continue in the solar also.
Got it. Any thoughts, sir, on this whole set of tariff regulations that have come in, and what does this do to your ability to perform on the global arena?
So during the COVID, what we learned and understand that every country now they want energy security. Every country wants to stop the export of the job.
Right.
And naturally, the United States was a top on that. So immediately after the COVID, we planned to start thinking of setting up the factories in these countries, and United States was on the top of it. So we started our manufacturing in US. Our 2 lines are operational. We are putting up now 2 more lines. So as a company, we are at unique position. Of course, first, the India is at the unique position.
Yeah.
So first of all, I strongly believe under the leadership of our Honorable Prime Minister Modi ji, India will negotiate a very good deal in this tariff region. That I am absolutely confident. So we are in a position where we have the facility in India. They want a made in India self. We are here, not only module. And if they want made in India solar panels, made in America solar panels, our factories are running there and we have the products there. So as a country, as a company, against these all the tariff issues, we are uniquely positioned, and that speaks about the order book. The customers also trust us that our organization is at the right place, right time, and they're placing the order to us.
Has it sweetened the deal for you? Because you talk about twice in this conversation itself, upping the capacity in the US. One would think that with all of these tariff wars and the IRA benefits going away, you would want to go slow, but you're not going slow.
No, tell me any other option. Any country needs the energy. If we are talking about $500 billion investment, let us say in a data centers and semiconductors, what is the amount of energy this will need?
Got it. Okay, so you do believe that there is merit in continuing. Okay. A few people have said, or few corporations have told us that in the last few days or years, actually, in the last couple of years, meeting talent requirement has become a bit of an issue. There are probably enough jobs available, but there is not the right skill set. The matching of skill set and the positions is not happening. Is that true for you as well? Because you are growing at a rapid pace.
For us, the 2 things. One is the growth. The other is the industry we are in. For example, TopCon technology or other technologies or batteries, these are all new in the country. So we don't have the people who knows this industry or who has some experience on this. That's number 1. Number 2 is you need a talent who is ready to accept this growth speed. And third is the style, moving from the family-driven, family-managed organization to the professional. So here again, you need a talent who understands this, the transition. So the position we are, I think there is a lot of scarcity of the talent which we are looking for. And I agree what you asked, that when you have 3-4 things which are completely different than the large pool available in the market, and you are looking for a very niche talent, there is a shortage of them.
Got it. You already told us, how do you imagine Vari to be like in a few years? Multiple business or multiple product lines within this same ecosystem and growing vertically and horizontally as well. Do you reckon that with technological changes or other, because you are an energy transition company and not a solar company, that you might also move into some other power source businesses as well? There is wind, there is nuclear, there's a lot others. Would you want to do that as well, or is solar giving you enough opportunity?
No. We will continue to focus on the energy transition.
Throughout?
Throughout. For example, which we have working now for the NL acquisition, there are a lot of assets on the wind side. Batteries we have already started. Our team is looking to the opportunities if there are any good for the nuclear power also.
Okay.
So we will keep on seeking the new opportunities, new technologies, because we strongly believe that the energy source, way it is done, manufacturing, distribution, uses, this is going to change. And what will change, how it will change, we have to just keep on seeking, just keep on looking, and whatever we feel that this is a right, we have to get in there.
My final question, sir. What excites the young promoter in you now? You achieved so much in the last few years.
Right.
You made a name as being the pioneer or the front runner in energy transition. Now, from here on, what excites you? Is it the size of the company? Is it a particular run rate that you want to reach on growth? Is it something else? What is it that excites Mr. Hitesh Doshi now, from here on for the next 5-7 years?
What is a new thing or new solutions I am giving to the customer? And that is not helping only the customer, but global impact in terms of environments or whatever you name it, employment, R&D, anything. It's whether it is a giving a proper impact to all the things what I can imagine. If that kind of the technologies, that kind of the products, as soon as I see it, I get very much excited, and I think why we cannot do them. Let us try it. It's not a turnover, it's not a numbers, because that you know that after a certain amount, you don't work for it. You know you are not going to stay here forever, right? So the excitement is always about the product, technology, solution, which really gives the impact, overall impact.
Fascinating. You know, Mr. Doshi, I've been through some of the parts of your plant, some of the machinery and the automation, and was able to interact with some of your employees who explain very beautifully what each of these things are. I mean, you have a fabulous team here, as I experienced before this conversation that we did, and when they explained everything to me, and this whole journey of what a solar power facility could look like has been truly a rewarding experience for me. So thank you for having us out here in your facility, in this world-class facility, and all the best for the future ahead.
Thank you very much coming for all the way and spending so much time.
No, the pleasure
Really
was
appreciate all your support. Thank you.
The pleasure was entirely yours, I must say. And viewers, thanks for tuning into
Thank
this
you.
amazing conversation with this amazing entrepreneur.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you
Now
have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. In the last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,000.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Hiral Dadia. We'll take you through the last hour and a half of trade. Let's look at the Nifty 50. And we're off the highs, but it's another flattish kind of a day and a flattish kind of a move from the Nifty. Let's look at the Nifty 50 in terms of the intraday chart. The Nifty Bank also up just about 0.25%. There you go. So we're considerably lower from the highs. We've dropped maybe 1% or thereabouts. Broadly, maybe 220 odd points from the day's high. So that's how it's playing out. Let's look at the heat map on the Nifty, and you'll see a couple of names really standing out. Adani Ports on the back of those very solid numbers that they clocked in Q4. Bajaj Finance doing well. IndusInd, but then Maruti shining on the back of or after the auto sales numbers have been disclosed. So some names from the auto pack, Eternal up 1% as well, despite the kind of difficult set of numbers that it saw. So some of those pockets doing well, and SBI will be in focus. Kotak will also be in focus as they declare their numbers tomorrow, and you'll also have an Avenue Supermarts which will declare numbers. JSW Steel down 6% on the back of that Supreme Court ruling on Bhushan Steel. Stock taking a knock in trade today. But outside of that, again, auto, Aisha, Bajaj Auto, some bit of FMCG, Nestle is there, Hero Moto as well from the auto pack. The numbers were disappointing where Hero is concerned. Let's look at the sectors which are the sectoral heat map and how is that one shaping up. And we've spoken a little bit about some of this. IT up around 0.25%, bank just flattish, maybe slight positive bias. You have realty, metals, pharma. Again, no major losers, no major gainers, and that I'm not sure whether you should take that positively or not, but that's how it's playing out at this point. Let's look at the breadth of the market, the advanced decline, and how that one has shaped up. Choppy, very, very choppy, as has been the case for quite a few times this week, and at the moment it's even Steven with regard to the breadth. Let's look at the mid cap and small cap because that's where some of the action is. 0.5% lower on the Nifty mid cap, well off the highs. The Nifty small cap as well. Absolutely flat on the Nifty small cap. It's as flat as you can get, and fairly range bound as well for a better part of the last couple of hours or so. So the Nifty small cap largely flat. Last off, I want to zoom in to maybe a sector or two. Actually, you know what we'll do? We'll quickly take views. Let me go across to Hiral. Hiral, any stocks that you want to quickly highlight?
Yeah, I think one, thanks Harsh for that, but one that is just in front of me right now is what's happened with a latent view. The numbers have just come in. The stock has seen a good spike as we speak. If we can just quickly pull up that counter on the screens. There you go, at the day's highest levels. And this is again on the way the numbers have panned out right now. So a strong one coming in there. The revenue number is at around somewhere around 230 odd crores. If you see in terms of the margins as well, somewhere there is that stability coming in terms of the margins on a latent. There you go, 27% up move in terms of profitability at 53 odd crores versus a 42 crores. So a good number coming in there on a slight margin expansion is what is seen as well. So that's one that you're watching out for, as well as a IOB right now. The NI, the net interest income, is up around 13% with regards to where IOB goes. Overall, that stock also on the back of earnings is seeing a short spike. Net profits have seen a growth of around 30% at 1,051 odd crores. So two stocks that are on my radar right now, and this is mainly in terms of what's happening with regards to where earnings go. Apart from this, Godrej Agrovat is another one that has also been an interesting counter so far. So let's just quickly pull up a Godrej Agrovat on the screens. 11 to 12% is the kind of cuts that you're seeing on this one, and this is again reacting to numbers. Phoenix again reacting to a weak set of numbers, trading under pressure. Indus Tower again on a weak set of numbers is trading with cuts in trade. JSW Steel, that's a stock we should be talking about as well on the back of the NCLT details, data patterns. Over 6% is the kind of cuts in today's session. Force Motors, 13% up move is what this counter is seeing, and this is again on the back of the auto sales numbers that have trickled in at the day's highest levels. Go Colors, we will be speaking to the management soon, 8.5% up move on the back of numbers. Railtail, again on the back of numbers, seeing some smart moves in today's day of trade, 7.5% up move coming in from the broader market. So Harsh, the key over here is a lot of stock-specific action is what is continued.
Yeah.
Markets have continued to remain range-bound. That consolidation is what is on the cards. And as we were highlighting this morning as well, buy on support, sell on resistance. That's the strategy I think what investors are watching out for, and the volumes overall are pretty thin right now.
Absolutely, Hiral, but it's also very stock specific because
Yes.
of all the numbers that are trickling in. Something like a Newgen is up 6% on the back of numbers, has been up since the morning, and even post the numbers. No cool off
And you're not
there.
seeing any sector-specific breakouts that are
Absolutely.
happening. It's absolutely range-bound in terms of sectors as
Yes,
well.
it is.
And individual pockets within sectors are seeing that upside or downside. But let's also welcome in our guest, Ruchit Jain, Vice President, Equity Technical Research at Wealth Management, Motilal Oswal Financial Services. Ruchit, good afternoon and welcome to the show, and thank you for speaking to us at NDTV Profit. My first question coming to you is the kind of range-bound trade that we've seen in terms of Nifty. Wednesday session, it was a 100-point range. Today as well, if you see the highs and the lows, if you can just have the Nifty 50 chart and see the kind of levels that we're tracking. Similar trend with regards to Bank Nifty, 2,000-point range in the last couple of trading sessions. What is the sense that you're picking up? Do you think there is fear? And if so, what should the support and the resistance be in terms of both these indices?
Yeah, hi, very good afternoon, Hiral. Well, in last 20 days, we have seen markets have rallied mainly, because of the fall in the dollar index, which has, which is still hovering around 100 levels. FI is turning buyers in the cash segment. Even INR has seen good appreciation. So I think the factors, which were negative for a market since October to start of April, I think those factors have now turned positive for our markets, and hence we have seen this recent up move. But at current levels, the market breadth is giving some sort of divergences because two things are there. One is if we put retracements on this entire previous correction, when Nifty made all-time high and corrected towards that 21,700 mark. So if you put retracements on that, then 61.8% retracement level is coming around 24,550. So ideally, there is a major hurdle for the markets right now, which is around 24,550 being that important retracement level. Secondly, if you look at the market breadth of NSE 500 stocks, Nifty 500 stocks, last 5 trading sessions, although index has consolidation, as you say, have consolidated, as you said, but in last 5 trading sessions, only one day was there where the market breadth was very healthy and in favor of advances. Otherwise, 4 out of 5 trading sessions, market breadth has not seen any kind of significant positivity or any much advances over there. So we believe that since overall trend remains positive because the factors which have contributed to the recent up move still remains in favor of our equities, FI is buying, whether you see dollar index, USD, INR. But because of the divergences of market breadth, that too around the 61.8% retracement level, this seems that market may see some pause before starting the next leg of up move. So I think 24,550, 24,600 remains an immediate hurdle until today's high exactly around that zone. So until we see this range getting surpassed, I think better to wait on the sidelines for the index as the risk reward ratio does not seem to be that favorable for fresh longs. But certainly because the overall trend remains positive, so it is more of a buy on dip market where in the index front, if we get any dip towards 24,200, which is the first support, followed by 23,800, 23,900 range. These are 2 immediate supports going ahead. So I think if we get dip towards the support level, then the risk reward ratio could become favorable to take fresh longs again. So for now, we are advising to focus more on a sector or stock specific way.
Point again. Ruchit, quick follow-up. So what are those factors you're looking for to basically understand whether we're going to break the levels which you're already looking at, 24,200 and 24,600? Any material break either side, what are the factors that you're looking for?
So I think major thing should come with price breakout supported by healthy advanced decline ratio. So if you look at if we manage to surpass at 24,600, along with the broader market participation. Last few days, the markets have been moving up mainly because of few of the heavyweights, such as if you see Reliance have moved up. A couple of other heavyweights such as Maruti and others have moved up, but no, the broader markets have not done that well when we see such kind of up move.
Sure.
So I think a breakout above 24,600, if accompanied by a broad market participation, then those would be signs that we are going to continue this trend.
Correct. Got it. And what are the levels you're looking at on the Bank Nifty, Ruchit?
Yeah, so overall the banking space has done quite well in this leg of up move where it has shown more of a relative outperformance. Now on the higher side, 56,200 is the immediate hurdle for Bank Nifty index, and on the lower side, 54,400, which is the swing low, remains an important support. So if you look at last 7 or 8 trading sessions, the banking index has rather seen a consolidation within this range only. So let's wait for a breakout on the either side for banking index as well.
Right. So, Ruchit, that's the level that you're tracking in terms of Bank Nifty. What would your top picks be, taking into consideration it's a Friday? Any calls?
Yeah, so I have a couple of recommendations on the long side. Now, one thing is that we are not yet open for any short positions because, as I said, the broader trend is not negative, right? So, stock-specific approach, when you have to look for relative outperformers where volumes are good. First name would be IOC, where we have clearly seen when the numbers were posted day before yesterday. After that, a follow buying is quite strong. The volumes are quite good, and also the stock has surpassed the 200-day moving average after a long period of time. So I think this should result into a good trended phase for IOC in the short term. Short-term traders can still buy at current levels with stop below 137 for potential targets around 154. And a bit low beta name, Sun Pharma, within the pharma space is looking positive to us. The stock has given a breakout from a falling trendline resistance. Last 3 or 4 trading sessions, the volumes have started gradually picking up. Although price-wise, we have not seen much action still. But looking at the volume, I think it's good to preempt at current levels till the risk-reward ratio is favorable. So Sun Pharma traders can buy with stop below 1780 for potential up move towards 1920.
Ruchit, just tell us this, give us perspective. Would you square off or suggest that the traders square off today, or would you be okay with waiting till Monday also for hitting some of these target prices? How would you strategize it?
So what we would look at, if you are looking for more stock-specific positions, if anyone has, then one should look whether the stocks are participating now in this leg of up move in the last 4 or 5 days or not. So last 4-5 days where the index is consolidation, if any stock that you are holding from a trading perspective, if that is participating in this up move or that is showing a good strength, then it's better to hold on and take that risk that if we get a breakout on the index as well. But if the stock is not participating along with the up move in the market or a relative underperformance is there, then I think that should be a good sign to cut off those positions.
So that's with regards to what you should be doing ahead of as well, whether squaring in or not. Thank you so much, Ruchit, for joining us on the show and sharing your views so far. But let's shift focus to some corporate action. You have Go Fashion India. That's a stock to focus on, and this is on the back of earnings. 8.5% up move is what you're seeing on the counter. Joining us on the show to discuss more in terms of what's in store, Gautam Saraogi, Executive Director and CEO at Go Fashion India, joins in. Gautam, good afternoon and welcome to the show, and thank you for speaking to us at NDTV Profit. Overall, I mean, clearly the fourth quarter was something where expectation was the demand would be muted. However, we've seen a beat that's come in terms of the company. You've piloted new categories as well during the quarter. What's the sense that you're picking up for the coming quarters? Is this kind of trend expected to continue?
Yeah, so thank you for having me on the show. So Q4 was a decent quarter for us. I think from an SSG perspective, for the last 6-7 quarters, our SSG has been flat, and Q4, after a very long period of time, in Q4 we delivered about 2.1% of SSG on a YOY basis. So I think there is some recovery of demand we did see in quarter 4. And we are hopeful that probably this kind of recovery should continue in the coming quarters, so we can have a good FY26. As far as new categories are concerned, yes, we have ventured into new categories of ladies everyday wear, but we are yet to launch the category yet. So probably in the coming months, we will be launching it in some of our existing stores.
Okay, Gautam, this is Harsh also joining in. So these new product launches and these new segment launches, which quarter do you expect in terms of these launches to impact your numbers? That's point number one. And second is, what's the quantum you're expecting in terms of impact in that quarter, and how quickly are you looking to ramp it up, and where would it be at a normalized level?
See, I think the new categories are a pilot internally, and we are planning to. So in the first phase, we are planning to launch about 15 stores in the next 6 months window, and these 15 stores will be coming out of our existing network. So probably by end of Q1, we should be having a couple of stores live. But because this is a pilot and we are doing it in a very few set of stores, I don't think it will have a very big impact on the overall company numbers yet, because this is fairly a very small pilot. But as far as guidance is concerned, right now we are not in a position to give guidance for these new categories because this is purely a pilot. We'll have to wait and watch how they perform on the shelf. So fingers crossed that it should do well.
So Gautam, in terms of your volumes, you've seen a 8 to 9% volume growth. What has led to that? Because if you have to look at the same stores level, it seems to be absolutely flat. So is it mainly led by new store additions? And if so, how would you put that in terms of demand?
See, I think, look, I think at a volume level, we've had the number you just mentioned, 8 to 9% of volume growth, because we've obviously added new stores, right? So for a company like us, we get growth from same store sales growth and from new store additions. So our idea in a normalized market, we intend to grow at more than 15%, where we are able to get mid-single digit type of SSG and the balanced type of growth coming in from network expansion. That is more in a normalized market when demand is good. Right now, since demand has been weak, our SSG has been little flattish. So hopefully as the SSG improves, the overall company level revenue also should grow greater than 12% or grow even beyond 15%.
And Gautam, commentary seems to suggest that you're more focused with regard to the company-owned, company-operated model at this point. You're planning to grow by around 120 to 150 stores. Give us the thought process behind that, because that will require a more intense amount of capex, right? So what's the sense and what's the thought process?
See, I think, look, for us, the company-owned, company-operated model, the COCO model has always worked very well for us. So we built a very strong operations team which drives the business in all these stores across tier 1, tier 2, tier 3. So we've never felt the need of franchising our network. So for us, company-owned, company-operated is going to be the way forward. Yes, there might be some exceptions. Certain towns which are beyond our operational reach and we are getting a good franchise partner, we would definitely even explore that as well. But we are largely going to be a company-owned, company-operated model. But as far as CapEx is concerned, I think, look, the business's balance sheet health is good. So we've been generating strong operating cash flow, which is far higher than the CapEx we would require for opening new stores. So I think the cash flows in the business are strong enough to support that kind of CapEx.
Yeah. And overall, when you talk about CapEx as well, your large store format, that is the one which is leading to the growth. 25% of your revenues come in from there. Are you expecting a change in mix, taking into consideration the 120 to 130 new store additions that you will be seeing in FY26?
No, I think in FY26, the channel mix will be very similar to what we delivered in FY25. 71 to 72% of our business we see coming from EBOs, and the balance 24-25% coming from LFS. That's because as we are adding 120 plus stores in EBOs, we are also going to be adding a good number of large format stores also in FY26 as well. So I think from a channel mix perspective, I think the channel mix is going to be very similar to what we've had in FY25.
And Gautam, just with regard to the outlook for FY26, how are you seeing demand trends play out? December was a tough quarter for you. What's the likelihood or risk of this not sustaining, this kind of bounce back that you're seeing?
See, I think, look, the bounce back, what we've seen also has been very gradual, right? I mean, we were flattish SSSG for many quarters. We reported a 2.1% SSSG. in Q4. So it's obviously recovering slowly, right? So I'm very optimistic and I'm hopeful that this continues. I mean, look, it's very difficult to predict the future, obviously, but I'm hopeful that this gradual improvement continues, and probably by the end of FY26, a lot of recovery should have happened compared to how FY24 or FY25 was.
And Gautam, is there a plan to change the mix in terms of sales mix? So currently heavily skewed towards EBO. You've suggested that you want that strategy to continue to play out. But what about online? What about MBO? Are those other opportunities and pockets in terms of distribution working well for you? And how will that mix change? Or more or less you're expecting that mix to be as is?
See, I think very interestingly you asked, right? So online and MBO have been doing really well for us. So on a YY basis, the growth what we see in online, what we see in MBO has been very encouraging. But having said that, because the absolute numbers of online and MBO are still small, they won't really impact, those two channels wouldn't really impact the channel split as such, because EBOs and LFS also are continuing to grow. So yes, online and MBO are very important channels for us. But from an overall scheme of things, because EBO and LFS also have been seeing encouraging growth, the mix is going to be very much skewed towards EBO and LFS from a contribution perspective.
Okay. And in terms of everyday wear as well, you mentioned about, I mean, that's the new category, right? Overall, no margin picture that you can share, but what's the kind of price point and what's the kind of revenue expectation out of this category?
So I think from an average selling price perspective, I think we see ourselves anywhere between 800, starting from 800 rupees a unit to going to even 2000 rupees a unit, depending on the style and the product. From a sales perspective, it's very difficult to give a guidance yet, because we haven't even opened our first pilot store. So that's a little difficult for me to comment on. But from a average selling price perspective, we see ourselves pricing the product starting from 800 and going up to 2000 rupees a unit.
Okay. One quick question, Harsh, I have with Gautam is on the margin picture. You've mentioned about stability in FY26. What would that number be? Are you saying it will be stable as per what you've seen right now? Because FY25, we were at around 17%. So where are you seeing 26 numbers stabilize at?
I think FY26 should be in the lines of FY25. I think we would maintain margins at a gross margin and EBITDA level. So I think from a margin outlook perspective, I think we are going to be looking at probably delivering similar type of margins what we have delivered in FY25.
And Gautam, you know, these new products that you're looking to grow, I mean, very encouraging, right? Because you've always done bottom wear, you're now moving up the chain likely. What about competition there? You know, you have the Zudios and the like which are competing. All this time you've been saying that, you know, they aren't really competition for you. What do you make of that? And how are you going to try and compete against them?
See, I think, look, Software, definitely we would be having competition. I would not say that there's no competition. There would definitely be competition. But look, because we are introducing it in our current bottom wear stores, I think it's a very good complementary product to add with our current bottom wear essentials. So the prospective customer who's walking into the store buying bottoms, she will also end up buying an everyday wear, top wear as well. So I think we are basically tapping into the existing footfalls in our stores and under the same brand umbrella. So I think our first target and aspiration is going to be to, you know, really capitalize on our existing customer network. So I think from a competition perspective, yes, you know, there is competition and we have to be very careful. But our first priority would be to capitalize on our existing customer network through our existing stores.
And despite all of this, you expect margins to be range bound in that sense. Don't you believe that this opens up better margin opportunities in terms of gaining or?
Yeah, I think because this is a pilot and this impacting the overall company margins might not happen in FY26 because this is solely a pilot. See, because if you're going to be introducing it, right, we will be introducing it in 15 stores in the first 6 months and probably 10 stores in the second 6 months. So if you're doing it across 25 stores where we have a network of 776 stores, so I think 26 stores making a really big impact on the overall company margins? I don't think so yet. We'll probably have to see how FY27 plays out, but that's some time away. From an FY26 perspective, I think we'll end up maintaining decent margins.
Right, so decent set of margins, maintaining at levels of FY25 is what you should be watching out for. But thank you, Gautam, so much for joining us on the show and sharing the views. So that's the management of Go Fashion. Harsh, interesting moves in today's day.
Yeah.
Stock, I mean, almost,
8%.
I mean, you can call it's an upper circuit, though it's not an upper circuit because it's maintained those kind of levels since the time the numbers have come in. But there you go, 8 to 9% kind of up move coming in on that count.
Yeah, in fact, Hiral, sorry, I was just quickly looking at the graph as well. The 1 month, stocks up 21.5%. 6 months, it's down 27%. So you're starting to see a bit of recovery here from the pressure that we've seen on the stock.
So if you think about it, the entire industry, not only Go Fashion, you look at a V-Mart, you look at Vishal Mega Mart, all of these retailers have done fabulous in terms of numbers and in terms of the way stock prices have performed as well. We'll just come back to all those names immediately after a short break. But before that, we leave you with an interesting word from the NSE, from Ashish Chauhan, CEO at NSE. He spoke on the sidelines of the Waves Summit about the newly launched Nifty Waves Index. Let's listen in and then we'll be right back.
Waves Index is an index created to represent the creative industry in India. And there are, when the Waves conference was being conceptualized by the CM's office, they had at that time called us up saying, would you be able to launch a Waves Index because it's going to be a growth industry? And we said, yeah, we have many types of sectoral indices and we will also be able to create one. That is where we had promised them, and today we have fulfilled our promise of launching the Waves Index. The way I look at it is the Waves conference has kick-started the thinking about how big the creative industry in India can be. But at some point in time, Waves conference will get over. But Waves Index will remain forever, and that's where it's going to be a legacy of this conference, where you will highlight only on the creative industry of India, which is going to go up leaps and bounds, and this index is going to anyway give people an idea of what kind of performance those companies have done over the last 1, 3, 5, 10 years.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. the last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March.
Welcome back. Thanks for staying with us on India Market Close. Now, that time of the show when we get you all insights and chatter from dealing rooms. You know, it's been a range-bound market, Somit, and thanks for joining us. But it's been a range-bound market. What's the sense like? The second time in 2 trading sessions that I've asked you the same question on Heard on the Street. So, I'm running out of ideas. You give us new ones.
It has not changed. People are still not that keen on carrying trades. In fact, even if you look at how volatile it has been, stock-specific actions that we have been looking, it's quite volatile, and people are literally not in any mood to carry anything long whenever there's a holiday that is coming up, at least given the geopolitical issues that we are facing right now. Correct. But stock-specific action in multiple names. Firstly, it's Avenue Supermarts. The company will be reporting its numbers tomorrow, but dealers are indicating that large HNIs have been selling this counter just ahead of the numbers, which is coming on May 3rd. So keep an eye out for Avenue Supermarts. Second stock on the list is AU Small Finance Bank. Now, dealers are indicating that there is a potential block deal that could come in AU Small Finance Bank as soon as next week. Capri Global, it's around 14,000 crore market cap company. The NBFC might launch its QIP soon, is what dealers are indicating. It could be announced. It might as well be announced with its earnings. Is the sense that dealers are telling. Then a bunch of plastic pipe manufacturers, they are buzzing in trade, like Astral, Supreme Industries and Finolex Industries. Now, dealers are indicating that there has been a price cut on PVC yet again. This time it has been effective from 1st of May, and the price cut is around 2.5 rupees per kg. Since the start of 2025, prices have been cut by around 12 rupees per kg, and since the start of this quarter, prices have been cut by around 6.5 rupees per kg. And the current prices are is the lowest that we have seen since May 2020, and these kind of price cuts could impact the margins, and there could be inventory losses for plastic pipe manufacturers like Astral, Supreme Industries and Finolex Industries. Keep an eye out for these stocks.
This is an interesting one because there's a full possibility taking into consideration crude is sitting at 60-61.
Right.
So if you have to take the average price of the last couple of
in fact, they are also indicating there could be another price cut of around 2 to 3.
Absolutely possible, because PVC prices are directly linked to the way crude moves, right? And they averaged out on that perspective. So an absolute possibility from what Somit is mentioning. So these three names.
Chemplast as well on the back of that, because directly on PVC, Chemplast and Mar.
If you can guys have a Chemplast on the screens and see what that stock is doing, as Harsh is indicating, they go 0.5% cut. Can we have a 1 week chart? Because these are things which already get priced in much earlier in anticipation of the cut, because that's usually the trend. If you can just have a 1 week chart or a 5-day chart for Chemplast, there you go, 6 to 7% is the kind of cuts that you've already seen. But interesting names here. I think these are companies we should be calling as well, and understanding as to what's the trend that they're picking up. If there are any further price cuts that could be on the anvil as well from all of these names. And Avenue Supermart will be something we should be watching out for. But Soman, that you're with us. OMCs, again, what are you looking at? Because crude, we just spoke about $61 per barrel. Singapore GRMs are also interesting right now. Where are you seeing OMCs move from here on? Because a key positive.
Well, yes, multiple analysts whom I spoke to are suggesting that these are kind of key positives coming in for the oil marketing companies. Firstly, they reported a very strong fourth quarter numbers. Apart from that, Q1 is also shaping up to be strong, given the fact that Singapore gross refining margin, which averaged at around $3 per barrel in the fourth quarter, has now moved to around $7 per barrel. Now, this is the highest level that we have seen since March 2024. And coupled with this, if you look at Brent crude prices, they have come down to around $61 per barrel. Now, the reasons why crude prices have come down is because of poor demand commentary coming in by World Bank, Kepler. Apart from that, the commentary by Saudi was to increase oil production, and there are reports which suggest that Saudi is comfortable with lower oil prices as well. So these factors could keep oil prices lower, and this could actually be very much beneficial for the oil marketing companies, given the fact that lower oil prices boost the marketing margin for the oil marketing companies, and every 0.5 rupees per litre change in the marketing margin increases the EBITDA of IOCL, BPCL and HPCL by anywhere between 7 to 11%. This, coupled with the fact that Singapore gross refining margins are averaging higher, this can also increase the EBITDA. Now, for every $1 per barrel change in the gross refining margin, that increases IOCL, BPCL and HPCL's EBITDA by around 14 to 16%. So, dual benefit coming in for the oil marketing companies. Obviously, there is one negative that is coming in, given the fact that oil prices have fallen so sharply. There could be some inventory losses that could come in for the oil marketing companies. So, that is something that we need to watch out for. But obviously, not all of the inventory losses that would come in the first quarter of FY26 would be actual. Most of that could be just notional. So, inventory loss is the only negative, but on the positive side, the refining margins and the marketing margins are trending higher.
Excellent. Thank you so much, Amit, for that very comprehensive breakdown as well as giving us those nuggets from dealing rooms. But let me quickly take it across. We have two guests joining us, and let me take a cue from that conversation. Neeraj Diwan, independent market expert, and we also have Kunal Shah, senior technical and derivative analyst at Sharekhan, joining us. Neeraj, let me come to you first with regard to these OMCs. Decent set of numbers from IOCL on Wednesday as well. And yes, there is an expectation that crude will remain depressed given the current environment geopolitically, as well as the need for US to suppress inflation. Good time to play OMCs at this point?
Yeah, good afternoon.
Good afternoon.
Yeah, actually, the trade has been there, because crude prices have been inching down and expected to stay down. And those, the benefits that we're seeing in the results also have been coming from the oil marketing companies. I feel that for a trade, definitely one can stay with the oil marketing companies, and valuation, because of the extraordinary profit that they are generating right now, seems very reasonable. But the only thing is that there is expectation that there will be oil price cut. That should also happen for the petrol pump price cut. That should also happen. So that will happen sometime. We've been expecting that for quite some time, and but it's not come through as yet. But that should come through, and that may be some short-term impact which may happen in these companies because of that. But otherwise, I think as far as crude prices are concerned, there's definitely a play in the oil marketing company.
Okay. Kunal, let me bring you into the conversation. First, give us your views with regard to what you see in terms of how the market's expected to move. What are levels you're keeping a track of? I think the consensus view at this point is that 24,600 is the resistance and 24,200 could be the buy on dips at this point. Is your view the same? And how are you reading things? And the Bank Nifty as well.
Good afternoon, everyone. Definitely, the kind of rally what we have seen in Nifty from 21,800 to 24,500, 600 mark. So this basically was a entire pullback rally for the September fall. The fall we had from September from 26,200 to 21,700 on the downside. On a technical terms, if we take a retracement, that is 61.8% retracement what the market has done, and that was placed at 24,550. So now 61.8% retracement, that is the Fibonacci retracement, has been done. And generally, after such a fall, a market retraces to these marks, and then we witness some profit booking at these levels. So the larger term trend still remains on a positive side, but we need to close about 24,500 decisively. In today's trading session, we had a breakout above that, but we are not able to sustain that mark. So we might again go into a consolidation mode where 24,200 will be now the immediate support on the downside, which is again 24,050 mark, which is where the 200 DMA for the Nifty is also played. So there are cluster of supports on the downside. First is 24,200, second is 24,000, and on the higher end now the resistance is confirmed at 24,500. So this is probably a 500-point range in which Nifty could consolidate even in the next week as well. So we are expecting Nifty to consolidate only on a break above 24,500 on a closing basis. One can look for positional targets of 24,800 on the higher end. Within this range, the view remains positive. Utilize dips to buy the index. We are expecting a positional target of 24,800 on the upside. Coming to the Bank Nifty index, again, this was the leader in this entire rally. And again, Bank Nifty is also consolidating at higher levels. Now 55,500, 56,000 is acting as a strong resistance for the market. And on the lower end, 54,500 is a support. So even we expect Bank Nifty to consolidate at these levels. Within this consolidation phase, buy on dip approach is advisable. Till the time we are not reaching 54,500 on the downside, the view remains positive. Dip needs to be utilized. Upside target would be 56,200 to 56,400.
Right, so that's what the strategy with Nifty and Bank Nifty. Kunal, clearly in terms of the top picks as well, what would they be for today?
Yeah, I think there will be two stocks, and both the stocks I'll be looking out to on the long side. First will be from the FMCG pack, and that is ITC. I think in a weak market, it is looking extremely strong, where it has given us a strong reversal on the daily chart. And ITC could continue its momentum on the higher end, so that's a buy for me. Stop loss on the downside will be 420, and targets will be 440 to 445 on the higher end for ITC. So that's the first buy. Second is IOC, again looks extremely bullish on the chart. Great volumes what we have seen post the results, and again the structure was already positive with high top, high bottom formations were there. So now the stock is poised to go towards its 200 daily moving average, which is placed at 146 on the higher end. So we expect this momentum to continue. Keep a stop loss of 139 on the downside, and one can expect targets of 146 to 150 on the higher end.
Kunal, that's with regards to where the strategies go. In fact, let's also welcome in Neeraj Diwan, independent market expert. Neeraj, good afternoon and welcome to the show, and thank you for speaking to us at NDTV Profit. Firstly, let me talk to you about a couple of stocks that are in focus today. Somit, our colleague, just got to us names like Finolex, Supreme, all your pipe companies, that PVC price cuts is on the anvil. If that is the case, what would your view be on all of these pipe companies?
Yeah, good afternoon. Yeah, I think because the stocks had corrected over the last 4-5 months, the valuation is also not expensive now. If they're going to get this benefit because of raw material prices coming down, definitely it is positive. Plus, the other thing would also be that, we are positive on CapEx, we're positive on infrastructure, we are positive on real estate. So all that also, augurs well for these kind of companies. So I think if one is looking at a long-term investment, I think they should be looking at investing in these companies. Plus, you get this added advantage now with the raw material cut, which may also happen. So I think it's positive for the sector as a whole.
Stock of the day, one which has been doing very well in trade on the back of its numbers, Adani Ports. Anushi here with a heads up on what the quarter was like, and also how Adani Ports has commenced operations at the Viranium port today, which is a major positive. First, Anushi, first off, with regard to the numbers itself.
Right, so let's talk about the quarter which went by. Now it's a robust set of numbers that we are looking at for the fourth quarter. Key highlights, some of them, the fourth quarter in the net profit, we saw a significant growth which was aided by higher profit from their joint ventures along with the lower exceptional loss that it had incurred. What was a standout for the quarter was the FY25 revenue and the revised EBITDA guidance. Now the company beat the revenue guidance, which was around 30,000 crore as well, and even revised EBITDA guidance, it crossed that mark as well. Now this revenue growth that we are seeing was led by the company's logistics and marine revenue, wherein in marine revenue they expect a 2 to 3x growth going forward. Even if you look at the market share of the company, that has improved to 27% as compared to 26.5% of last year. So that is something that we can see forward. Along with that, for FY26, now the company expects a 16 to 22% of a revenue growth in FY26 pictures. Quickly walking through the numbers, if you look at how the numbers have shaped up, revenue was up around 23% in the quarter, while margins saw about a 33 basis points of an improvement to 59%, and net profit, as mentioned earlier, saw about a 48% of a jump. Now, if you talk about the FY26 guidance which is given, it is a steady sort of a guidance that we are looking at, in line with what FY25 also saw in terms of how the growth numbers have panned out. So 16 to 22% is the kind of revenue growth that is expected over next year. Along with that, EBITDA, we are seeing around 10 to 16% of a growth. Do note that the company had revised its EBITDA guidance for this following year, which had exceeded. Capex is now expected to be in the range of 11,000 to 12,000 crore, while net debt to EBITDA, which improved to 1.9 times this level, is expected to remain below the 2.5 times of level that is seen next year. Now, coming to some of the key operational metrics that is expected over FY26, port cargo volume, if we see, that is expected to rise 12 to 14% for the year, while trucking revenue is something which should be in focus, especially after the kind of for growth that the company expects in trucking revenue, which is seeing about a 3x to 4x jump over FY26, and marine revenue expected to grow over 2 times. Now, what is also important to note for the company is how it has commenced its operation at Viringham Port. Of course, the inaugural in focus today as well. Now, this is India's first fully automated shipment port that we are looking at, 8,600 crore worth of a project. That is what we are looking for this port, and it is expected, it has already crossed the milestone of 1 lakh monthly TEUs, that's 20 equivalent units in March itself. So something that is in focus in trade today. So it's a good set of Q4 numbers, FY26 steady guidance that we are looking at, along with the operationalization of this port is that we are seeing.
Right. Thank you so much, Anushi, for that. That very comprehensive perspective with regard to Adani Port stock perked up 4%. One of the top gainers on the Nifty today. Neeraj, let me come to you with regard to Adani Port's numbers. You believe this one, are you positive on it, given the kind of growth guidance that they have, the kind of pipeline that they have, and the kind of aspiration that they have?
Yeah, actually, I've been positive on Adani Ports. I think that they've been delivering whatever number they've been saying and whatever guidance they've been getting as far as the debt is concerned. So they've been very conservative there also, and they've been trying to, stick to the guidance even on debt. Plus, they've been outperforming the EBITDA guidance for the last couple of years. So now again, if you're looking at a further upside of, 10% odd on the EBITDA for the coming year.
What's your view?
The stock is not really expensive, but 270,000 account market cap, and they are talking about 22,000 of EBITDA. I think it's even on valuation, this is attractive. So I think one should be investing in this stock if one is a little long-term investor.
Clearly positive. Kunal, your view?
Yeah, I think technically the stock looks good. The stock in today's trading session had given us a breakout about the 200 DMA, which was placed at 1289, and we expect this momentum to continue on the higher end. Overall, the chart setup on the long-term chart also looks attractive, and I'm looking for positional targets of 1400 on the high.
Okay, Kunal, quick take on Maruti, because that's the other one that's buzzing in trade, up 5%.
So Maruti again, from that resistance zone, what it had around 12,000, it has given us a breakout. On the higher end, the resistance is now placed at 13,000. So this is probably a 1,000-point range in which the stock is stuck. Within this range, the view remains bullish. If you get around the mark of 12,100, that would be an ideal opportunity to go on the long side.
Okay, apologies, I have been seeing the wrong number with regard to Maruti. And Neeraj, view with regard to auto sales, do you have a view as to how you would play auto at this time? Discretionary is the one space and one basket which everyone has their eyes out on, given that 1 lakh crore has been freed up. Would auto be that sector where you'd like to place your bets?
Yeah, as far as the numbers are concerned and performance is concerned, 2 auto companies have really stood out for the last few quarters. One is Mahindra & Mahindra, and other is TVS Motor. I think these two will continue doing well because TVS Motor, even the numbers now are good. Mahindra & Mahindra has been able to do a very good acquisition. Tractor sales are doing well. Plus, there's a good monsoon forecast, so that augurs well for Mahindra & Mahindra. So these two companies, I feel, should go keep on doing well. But if one really needs to take a chance and look at stocks which have corrected a lot, in the last few months and after the last quarter results, I think Bajaj Auto would be one where I think even the management was surprised with the kind of fall they'd seen in the last quarter, and there should be some improvement visible there as far as numbers are concerned. And the stock has corrected a lot, so I think one can even take a chance and invest in a stock like Bajaj Auto, which I think after the fall looks attractive on valuation. So this would be one. But otherwise, if one wants to play it safe and stay with the performers, then I think Mahindra & Mahindra and TV should continue doing well over the next couple of quarters or even 4 to 5 quarters.
With regards to where auto names go, Kunal, very quickly, your view in terms of auto as well as auto ancillaries as well. Any stocks that are looking interesting in terms of buy calls?
Yeah, I think Nifty Auto as a sector has witnessed a sharp correction from the level of 27,500 towards the mark of almost 19,000 on the downside. And now we have witnessed a pullback towards the mark of 22,300. Now this is where today we are not able to surpass the resistance of 22,600. A break above that will help the index move higher towards 23,000, which is the gap area on the technical chart. So on stock specific, I think M&M still looks attractive to me. Even at the current levels, the chart structure has been positive, and this could continue the momentum on the higher end. So M&M continues to be on the buy list. The resistance which was placed at 2850 has been taken out, and we need to just sustain above this mark. So any dips towards that support of 2850 would be a good opportunity to go on the long side. You can expect targets of 3,100 on the side.
Okay, now, all right, let's switch focus. We earlier spoke to Sharan Bansal, Director of Skipper, who talked about the company's growth outlook going forward. Stock is perked up 3-odd%. It's a strong set of numbers as well, I must say. Listen to a slice of that conversation.
Yes, we have achieved 41% growth in the year that just ended. And the previous year, FY24, we had delivered a 60% plus growth. And of course, the market remains extremely buoyant. The company is having an order book of 7,000 crores plus, and a bidding pipeline is plus of 20,000 crores right now. So all of it definitely point towards better and better market scenario. We are at about capacity utilization of roughly 85% as of now. So most of the new growth from here on is going to be coming with the capacity expansion that we have taken on last year. And of course, we will be having further capacity expansion in this year as well. So that's something which will be a continuous feature in the company. So we believe that achieving 20 to 25% growth, even on this elevated base, is very much possible.
It's possible, but so I'm guessing it is under promise and over deliver. Quick answer, is that the case or no, FY26?
Well, that's always the objective and that's always the intent. Definitely be conservative while promising, and certainly hope to achieve more than that.
Okay, so let's talk about the improvement in margins which you've managed to do, and that seemingly is because of the mix and both exports as well as the increasing transmission and distribution mix. Last few years, the margins have been in a range 9.7, 9.8%. Does that continue? Does that change? How does that work with the new capacities and the new investments that you're doing?
Long term, Alex, we certainly believe that there is opportunity to move our margins eventually to a range of 11%, and then our long term aspiration is to move to 12%. So there is further a lot of headroom for the margins to grow, and the market situation is certainly conducive towards that. We currently do have a lot of non-T&D business as well, which was part of the revenue of the year that just ended. And non-T&D typically has come at a lower margin compared to our traditional T&D business. However, most of the revenue in the subsequent years is going to be largely driven by T&D. So I think we can expect better margin performance from the company and also better working capital, optimization. So I believe that yes, it will, both the parameters will be on the positive trend.
Okay, so as I understand it, non-T&D was at about 17% of the overall order book. Does that change materially this year itself, and what is the trajectory that you anticipate?
Yes, currently the non-T&D revenue, I believe, is below 10% now.
Sure. Okay.
So I think certainly that will have a positive effect on the margins. And of course, look, our exports are also growing. Exports have also traditionally come at better margins. And more and more the company is looking at more developed country exports as well, which come with even better margins. So it's certainly, like I said, there's plenty of headroom for the margins to grow in the future.
Okay. You mentioned 85% capacity utilization. You have 75,000 MT of additional engineering capacities that are coming on stream, as I understand it, in May. And so that's very substantial. Where does that take one utilization to? What are the implications for revenue? I'm guessing scale up will be something that you do, or how quickly will you be able to utilize that additional capacity?
So thanks to the order book that exists, we hope to utilize this capacity within Q2 and Q3 itself, fully utilize this capacity, I mean. And with this additional capacity, our total capacity will become 375,000 tons. Our long-term aspiration is to take it from our earlier capacity of 300 to a double number of 600,000 tons over the next 4 years, because our long-term aspiration is to become the largest T&D structure manufacturer globally, and at 600,000 tons, we'll certainly be able to achieve that.
That's the management of Skipper stock seeing gains of nearly 3% in trade as we speak. But let's quickly pull up a JSW Steel. It's a setback coming in for JSW Steel as the Supreme Court has directed liquidation of Bhushan Power and Steel. In fact, they've said that the firm's IBC plan for Bhushan Power was illegal. The JSW Steel has come out with a statement as saying that they will be awaiting the Supreme Court final decision. But in an order, they've said that the resolution plan that was submitted by JSW Steel back then in 2019 has been rejected. JSW Steel had won the bid to acquire Bhushan Power and Steel, which was under the Insolvency and Bankruptcy Code for a little less than around 20,000 odd crores. It had beaten Tata Group and UK-based Liberty Group to win the asset, and the acquisition was later concluded in 2021. At the time, this was the second largest acquisition that was done under IBC. In fact, Bhushan Power and Steel was one of the 12 companies that were shortlisted by the Reserve Bank of India in 2017 for insolvency proceedings, and it owed lenders more than 47,000 odd crores and over 780 odd crores to operational creditors at that point in time. In fact, the unwinding of the insolvency transaction will likely hit major banks. You have likes of SBI, Punjab National Bank, which led the committee of creditors in the Bhushan Power case. The resolution proceedings faced inordinate delays, first due to promoter Sanjay Singhal, who proposed to buy out the company, and then later due to investigations by the Enforcement Directorate. In December 2024 as well, the Supreme Court had ordered the ED to restitute over 4,000 crore worth of assets the agency had attached as a part of its investigations. So lots developing there, but ED had also argued that JSW Steel is a related party and it held a minority stake in a separate company alongside Bhushan Power. So that's the update with JSW resolution plan. And the woes do continue with regards to JSW Steel. The stock is trading under pressure. And I'm sure you saw all the list of banks that have the exposure in terms of the numbers. If we can just quickly have that one back on the screen, from a Bank of Maharashtra to a Canara Bank, Union Bank, UCO Bank, GNK. This is in ascending order. Bank of Maharashtra, these are the names you should be watching out for as well, and the kind of impact it could have, taking its net worth into consideration. Very quickly, Neeraj, your view on this entire saga right now, which is unearthed. What would you have to say in terms of JSW Steel and the kind of exposure the banks are sitting on?
Yeah, definitely, it's really disappointing. It's happened, after this thing was approved quite some years back, and the Supreme Court rejected it today. So this will not be positive either for the banks or JSW Steel. And I hope this is just a one-off case, and this is just not something which may happen in other such resolutions also. So that, there's an alarm bell which may come because of that. So it's just a one-off case. It will definitely have impact on JSW Steel and the lenders to Bhushan Steel, the one which have a major exposure. So, but I'm just worried that this should not be in other cases also.
Raj, is this an opportunity for a Tata Steel or other steel players to probably come in and close this?
Yeah, it will be actually, because there was good interest in this company that time also, and JSW got this, and I think there will be, of course, bidders which will come in now, and they may lap it up pretty soon. But then that's again a process which may not happen, which may take some time. Let's see how fast this is done now after it's been rejected by Supreme Court.
A great opportunity probably on the anvil for a Liberty or a Tata. But thank you, Neeraj, so much for joining us on the show and sharing your views. We'll quickly step into a short break. Once we are back, we will be addressing VMART numbers looking spectacular. Stock is seeing gains of 6%.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. In the last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March.
Welcome back. Thanks for staying with us here on NDTV Profit. Now, Sudeep joining us, Sudeep Bandyopadhyay, Group Chairman at IndiTrade. Now, Sudeep, just speaking to Skipper a few minutes ago, and what a strong set of numbers from the T&D space that we are getting. That strong set continuing. You expect this to peak out, or you expect this strength to remain resilient in terms of how the power theme is playing out, as well as how T&D specifically is playing out? And is there a preference you have within the power theme?
Well, Harsh, I've been positive on the power sector for more than a year now, and I believe there is a structural positive in this sector in India. And this is going to continue for the next 5-10 years. The power demand has been so robust that every segment of this power value chain is benefiting out of that, whether it's the generators, the transmitters, the power financiers, the ancillary guys, T&D guys. I think it's an entire ecosystem which is benefiting from this upswing, and this, as I'm saying, is going to continue. So I have no doubt that this momentum will continue. Specific company valuation, one has to see whether that's sustainable or not. But overall, the power sector is going to, for lack of better words, going to rock for many more years in the future. I personally like NTPC because I think that's a fantastic company. They have done great job, and the order book is very, very strong. The pipeline of new capacities coming up is strong. The forward-backward integration in terms of coal linkages as well as PPAs is absolutely fantastic. I think the subsidiary, green energy subsidiary, is doing well, so that can be looked at. If I have to go beyond that, I think I'll look at the power financiers. Considering the amount of capacity which is expected to come up, the financing has to be done by the specific power financiers. So REC, PFC, even IREDA can be looked at from a long-term perspective.
Very interesting. Very interesting you bring these names up because it's been a while since we spoke about some of the power financiers as well. And it's been a while since they buzzed as well, frankly. Sudeep, Kunal, if I can quickly take your view on the three power financiers, PFC, REC as well as IREDA, and your view with regard to an NTPC.
I think firstly I'll start with the power finance REC PFC. So overall, if you look at the monthly chart or the long-term chart for REC, the rally, the bull run which started for the stock in the year 2023. We saw the stock going from the levels of 125 towards the levels of 600. So that was a steep rally what we got. Now we entered into the second phase, where it is the correction phase. So from 650, the stock corrected towards the mark of 350 on the downside. Now the third leg, which will start on the stock, that will be above the level of 450. So once 450 is taken off, it gives us a confirmation of the third leg, and generally the third leg is the fastest. And you can expect this 450 to eventually go towards the mark of 780, 800 on the higher end. So it could be a doubler in the next 1 year or so. That is what the charts are indicating at the current level. The risk to reward ratio is also very favorable at the current level. So 420 is where it is trading. So 375 should be a stop loss on the downside. And I'm expecting at least positional targets. Firstly, that is 570. And second, what I talked about, 650, 670 on the higher end. So I think this is a good bet. Even for PFC, I think the structure is similar. That also looks attractive. And IREDA, I think, again, after the steep correction what we had in the recent times, that is from the levels of 300 towards the levels of 150. So the stock had almost corrected by 50%. And now it's becoming a buy at the current levels where there are cluster of support. So now 155, 156 is a very strong support on the downside. One can expect at least targets of 200 on the high end.
Right, so that's with regards to IREDA, PFC, REC. Sudeep, one quick question on PFC with you. In fact, they've gone ahead and scrapped 2 bond issuances lately worth around 6,000 odd crores. What does this tell you? I mean, the demand is lackluster. Does this mean anything with regards to the sector or the money flowing in there?
Well, I think these are temporary issues, Hiral. I think these will be ironed out over a period of time. I would also say this is probably a good financial decision because interest rates in the economy are coming up. So overall cost of funds will come down. So instead of locking in at higher rates, if they wait, and I'm assuming they don't have immediate demand, so it's better for them to wait and raise at an opportune time when the interest rates have further come down. We all know that interest rates have to come down. Whether it will be 3 more cuts or 2 more cuts, we'll have to wait and watch. But the cuts are definitely going to come based on the inflation numbers and based on the need for the economy to get, boost. So I think it's a wise decision to hold back the bond issuances because there was no immediate demand, and I think it will come back. They will raise money, and if you look at the gigawattage which the power sector needs to add, it will become obvious that there will be financing demand going forward of a significant amount.
So that's with regards to PFC. In fact, Sudeep, thank you for that. Harsh was also telling me the same thing that, they will be waiting it out now for the interest rate cuts to kick in as well. But moving on to our bull versus bear segment, today we put the spotlight on Eternal. What's interesting is Mahima actually and the research team, we had a consensus that this would be a negative, but there is some faith that the investors are having on the counter because the stock is up almost 0.8%, and that's the reason why we've picked this one for the bull and bear case. Mahima, over to you.
Right. So in fact, as you rightly mentioned, the stock also had a very topsy-turvy move today. It was down 5% in pre-open, then it opened negative 2%. Right now it's trading at around 0.75% higher. In terms of Q4 numbers, they were a slight miss. PAT was down, however, 34%. But probably what the street is liking is that maybe the kind of losses in quick commerce were better than what was expected. Now, in terms of bull versus bear case in the food delivery space, the overall gross order value grew at 16% year on year. But if we see sequentially, gross order value, the growth has been slowing down since the past 3 quarters now. And in terms of quarter-on-quarter performance, gross order value for food delivery growth was a negative 1.4%. In terms of quick commerce, the monthly transacting users was the highest in terms of additions this particular quarter. Over 3 million were added. But in terms of the average gross order value, and this is per day per store, that has fallen 3% for quick commerce. This is of course on the back of the number of dark store additions that the company has done on a higher rate as well. In terms of margins, the EBITDA margin guidance they've maintained so far, but in terms of the overall competition that is coming in from quick commerce, management has come out and indicated that the competition intensity is going up, and that could probably hurt their margins and profitability as well, because the discounting rate will certainly go up in terms of quick commerce, and cash burn also might go up. In terms of the District app, overall, around 1/3 of the total going out gross order value was transacted via District, but now that District is picking up, working capital requirement for the that segment of the company is going up. This quarter, around 400 crores worth of rupees was used as working capital. So in that fashion as well, cash is being deployed, plus that might overall have an overhang on margins as well. Lastly, in terms of what brokerages are penciling in, Jefferies has rated it hold with a target price of 232, and in terms of Citi, they've maintained buy and of course hiked the target price just by 10 odd rupees to around 290 versus that of 280 earlier. So this is the overall view as to what the bull versus bear case for something like an Eternal looks like.
Thank you so much for that, Mahima. Good perspective. Sudeep, let me come to you with regard to Eternal. Mahima spelled it out actually, so I'm not going to get into the nuances. What side of the fence do you sit on?
Well, if somebody has a short-term horizon or even a medium-term horizon, I'll tell them to stay away. If somebody is looking at long-term, maybe it's worth picking up. Look, they are expanding the business, and for that, they are kind of forgetting the margin. I think that's a right thing to do from a long-term perspective. The opportunity is huge. They need to take head-on the competition, and that's pretty much what they're planning to do. From a long-term perspective, you can't fault this strategy. But from a short, medium term, I think there is some pain going ahead, particularly considering the Blinkit, the quick commerce space where the big boys, including Amazon, is getting ready for a providing them a stiff competition. So I will be watching the space, but I won't venture into this space unless I have a very long-term horizon.
So that's with regards to where Zomato goes. In fact, Kunal, if I come to you in terms of Zomato as well as Eternal, I would say, and a DMart, before Mahima comes back with the expectation on the DMart, what are charts indicating for both these counters and what would your view be?
I think for Eternal, the view remains sideways. It has been facing strong resistance under 200 DMA, which is placed at 245 to 46. So that's a resistance zone. On the lower end, the support is placed at 200. So this is probably a 50-point range in which the stock is stuck, and I expect it to consolidate in this broad range only. So I'm neither seeing major significant upside or significant downside in the stock at the current levels. Second is DMart. DMart again had witnessed a sharp correction, then we witnessed a rally on the higher end. Now again we are witnessing correction from the higher levels. So overall, if I look at the larger term trend, it is still sideways. The support for the stock on the downside is at 3,500, and the resistance on the higher end is placed at 4,600. So again, this is a 1,000-point range in which the stock is stuck. Probably a buy on dip candidate towards the 100 DMA, which is placed at 3,800. So wait for a dip towards 3,800. Probably there one can look to go on the long side.
And Sudeep, two large banks expected to come out with numbers tomorrow. Actually, you know what we'll do? We'll take your view on that one on the other side of this very short break. Let's get into that break. Let's get beyond it. And thereafter, take your BTST, Kunal, as well as...
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. The last 1 month, if you see the share prices of Genzol.
Welcome back. Yeah, so two big banks expected to declare numbers tomorrow. Results to be, reacted upon only on Monday. So we'll have to wait and watch for that one. But quickly, SBI, what we'll be looking out for is margins. How much of that margin number can they hold? Mind you, margins have dropped to 3.01% last quarter. Can they hold on, and how much of that, and what the expectation will be going forward in terms of margins? They're also anticipating a fundraise to come through, an equity fundraise. Mind you, the capital adequacy of SBI is the lowest among all the larger banks. And therefore, that fundraise, long awaited, is now going to come. What's the impact of that on ROA? Can they hold the 1% ROA? Will be the other big question. Where the OPEX will go, will there be growth there? And what's the visibility with regard to asset quality? Sudeep, what are the top 2-3 factors, and that's with regard to SBI, that you'll be looking out for?
Well, I will be looking at the margin very, very carefully. I think, otherwise the bank, in terms of growth, in terms of asset quality, in terms of the subsidiary performances, is absolutely doing well. Margin is what we need to monitor. And of course, because the fundraise is imminent, we have to figure out, as you rightly said, return on asset. How will they maintain the return on equity, return on asset, and the likes? So the return ratios and the margin is what we need to look at. We would also like to know the commentary which they come up with regarding the credit growth potential, what they are looking at, and also, there's some commentary on their asset quality as well as the deposit franchise.
With regard to Kotak, what is it that you look out for? What is it that will disappoint you with regard to Kotak? Let me frame this differently. What is it that will disappoint you, if at all something were to go off, in terms of what number?
Well, of course, the margin is what we will be looking at. We know the loan growth hasn't been anything great as far as Kotak is concerned. They're by and large around the industry number, but nothing exceptional. The deposit franchise also has been doing so-so, nothing exceptional. So we will be very careful about the margin. Of course, asset quality, I think, will be by and large in order. So the margin number is what we will look at. And if the margin disappoints, I think, we'll be worried.
Kunal, any possible trade on Kotak and SBI ahead of the numbers?
I think overall both the stocks after a sharp rally have been consolidating at high levels. SBI is taking a support at the 20 DMA, but we need to wait for further confirmation. Probably a break above 810 will open up the room for 840, 850 on the higher end for SBI.
Right. And what would your BTST, STBT calls be?
Mine would be from the fertilizer space, and that is PI Industries. I think the stock is on the verge of a breakout, and this momentum could continue on the higher end in the upcoming week. So that's a buy for me at the current levels. 3,700 is where the stock is trading. Keep a stop loss of 36.40 and look for targets of 37.40 to 37.80 on the higher end.
Right, so that's with regards to BTST, STBT calls from Kunal. But shifting focus, you have a DMart that we have been watching out for, apart from SBI and Kotak Mahindra Bank. My colleague Mahima is standing by with more details in terms of what are the key expectations from Avenue Supermart. Mahima, over to you.
Right. So in terms of Avenue Supermarts, double-digit growth across the key metrics is something that you can expect, but there might be a slight miss in terms of revenue as compared to the estimates. Revenue is expected to rise around 17%, EBITDA around 12%. Margins could be slightly lower at 7.3%, and net profit may rise around 12%. In terms of its Q3 business update, the total number of stores stood at 415. The store count has, however, surged to highest in the last 4 years. In terms of what to expect, throughput to be better this quarter as compared to last quarter. Revenue may rise on account of store additions. Costs, however, may weigh on profits. What the street is also expecting is that it might be possible that the revenue from apparel might go up, which could also impact the margins. Margin expansion could remain elusive, and this could be due to overall added retail cost as well. They're expecting the street is expecting a mid to high same-store sales growth in terms of the overall metrics, operational metrics. Revenue per square feet might be impacted due to higher store additions plus inferior product mix and store additions in smaller towns as well. So this is the overall view of what you can expect once from Q4 earnings of Avenue Supermarts.
Very interesting. Thanks for that, Mahima. Of course, stock down 3% on the eve of those numbers. Sudeep, With regard to Avenue, what's your view? It's a difficult one, and therefore, how would you look at it?
I think one thing about DMart is that they were a bit slow to get to this quick commerce game. And I think a lot of ground they have ceded to these quick commerce players. That's one point which I always felt about DMart. They are back in the game and they're trying to wrest the initiative. And that's the reason why the margin is getting sacrificed. Margins have been coming down. Now they're talking about 7.5 in this range, and probably they'll end up around 7.3, 7.35 kind of margin, which is, of course, very, very low. But we'll have to watch the same-store sales growth numbers, same-store progress. That will probably give us some idea as to how things are panning out. I am a little cautious on DMart because of this entire, the quick commerce initiative by multiple players, the way it's panning up, including the private labels and things like that. So I'll be a little cautious, and the valuation is not cheap. I mean, it's come down significantly from where it was. It's still under pressure, but still the valuation is not cheap. So I'll keep waiting and watching this space.
Wait and watch. Valuations are not cheap. That's an Avenue Supermart. And now we move to a India Mart Intermesh. The company posted inline set of numbers. We spoke to the management as well. Let's quickly hear out what they had to say. The stock is down nearly 2%.
Mr. Dinesh, it's been a good quarter for India Mart overall in terms of revenue growth. It's at 12%. EBITDA grew by 47%. Margins improved significantly year on year. The net profit was also up 81%. Now, as far as my understanding goes, the overall margins expanded on the back of higher subscribers going up, and the net profit was also aided on the back of other income going up. I just wanted your understanding as to how the quarter has panned out, what has worked and what has not worked.
If you really see, our deferred revenue has grown by 15%, which means the gold and platinum customers have upgraded more, and collections is more long-termish. Revenue has grown by 12-13%, while the collection has grown by about 9%. So effectively, the number of customers have also grown only by 1%. So number of paying subscriber growth is slowed because of the continuing problem with the early customer churn in the silver monthly bucket and silver annual bucket, while our gold and platinum customer continue to do robust business on the platform. About 50% customer base of 217,000 is gold and platinum, and they account for about 75% of the revenue. On the net profit side, yes, there is the extraordinary income of FVTPL that came in due to re-evaluation of M1 exchange, which got valued at upwards of 2,000 crores. And that is why we had to take the valuation gain with that. Also, there has been softening of the interest rate. So our treasury of 28,900 crores, that is deployed mostly in the debt funds and bond funds. There has been some softening, and there has been a mark-to-market gain on that side.
Right, so that's the management of India Mart Intermesh. Two stocks that I want to quickly talk about is a Godrej Agrovet. Let's quickly pull up that one on the screens, as well as a MOIL. Strong moves, Godrej Agrovet, 15% is the kind of cuts that you're seeing on this one, whereas MOIL, 7.5% is the kind of up move. Kunal, very quickly, what are charts indicating?
I think for MOIL, again, it's a fresh breakout, what we are seeing on the chart. So further upside is open. The stock can go towards the mark of 370 on the higher end. Godrej Agro, clear cut as a breakdown. The supports have been breached on the downside, so further room for downside is open. The stock can test the support zone of 600 on the downside.
Well, you know what, we'll let you go on that note, Kunal as well as Sudeep. Thank you so much, both of you gentlemen, for joining us this afternoon. Views and perspectives. Quickly, last minute or so to close, let's look at where the Nifty is settling in at. It's been bouncing between the red and the green. Actually, Nifty, it's down around 0.1% as we speak, and as we are closing for the day, third straight flattish kind of a move on the Nifty. So at least that's how we're closing. Flat on the bank nifty as well. So that's the other one you want to keep your eye out on. Let's quickly look at the intraday chart on the nifty. We've fallen considerably from the highs. Perhaps maybe 170, 180 points from the highs of the day is where we are now closing in at, more closer to the day's low than the day's high. And there you go, yes, around 170 odd points. Let's look at the bank nifty as well. Fascinated to know how that one is closing. Well, we're just about holding 55,000 on the bank nifty. That will be one crucial support that we'll be looking out for. Let's look at the constituents of the bank nifty as well, because you want to see what's creating that drag, and it's Federal Bank on the back of numbers. Kotak expected to declare numbers tomorrow. So those two are the key drags. HDFC really doing nothing on either side. IndusInd and IDFC actually helping the bank nifty index. That's how it's playing out. SBI as well, 1.4% higher. That also aiding the Nifty Bank. Those numbers also expected. We've closed for the day. Let's look at the advanced decline. I'm curious to know that because it's an extremely volatile day with regard to how the breadth has shaped up. But we've closed with an advanced decline of 3:2 in favor of the declines. And yes, it's definitely been a very, very choppy day, at least for the breadth. So something to look out for. Let's look at sectors, and it's been very, very range bound when it comes to sectors as well, just like the index. No major gainers or losers, but we started to see a couple of names within the broader markets dominate. So Nifty Defense, Nifty Consumer Durables, they've seen a bit of a squeeze today. But outside of that, it's fairly range bound. Just 0.8% in terms of the top gainer, 0.8% in terms of the top loser, in terms of sectors. Let's quickly focus in on the broader markets, the Nifty mid cap and small cap. Small cap absolutely flat, mid cap down around 0.7-ish. Certain names, and let's pull out the BSE 500, certain names which have dominated largely on the back of numbers as well as, just generally. Nuvoco was one of those which declared numbers. Phoenix Mills, disappointing set. Godrej Agro, Indus Towers on the back of no dividend. Data patterns, it's been difficult couple of days for the defense space. JSW Steel, of course, news-based. And Equitas, again, disappointing set of numbers. So a lot of the losers dominated by numbers. Quickly, on to what all to look out for. We have a weekend, and you'll have India Forex reserves, US non-farm payroll data, US unemployment rate, some macro, followed by some dividend announcements, followed by some earnings. And those are all that you'll have to look out for. Not too many, but a couple of significant ones. Completely out of time on this edition of India Market Close. Stay tuned to NDTV Profit.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. The last 1 month, if you see the share prices of Genzol
Hi, I'm Arun Singh and I come to you from Waves 2025. With me is, of course, very popular author Amish Tripathi. बहुत-बहुत स्वागत है आपका.
Hi, how are you?
बहुत बढ़िया. आपको कैसा लग रहा है Waves 2025 and also NDTV का ये खूबसूरत पवेलियन?
अरे बहुत बढ़िया. इतना विशाल कॉन्फ्रेंस मैंने कभी नहीं सोचा था कि भारत में देखने को मिलेगा. एंड दिस इज जस्ट द फर्स्ट एडिशन ऑफ इट. तो आप सोच सकते हैं दूसरी तीसरी सदी तक मतलब क्या माहौल हो जाएगा यहाँ पे. आपका स्टॉल भी काफ़ी अच्छा है.
भी काफी अच्छा है. ओके,
खींच रहा हूँ थोड़ी
अभी एक्चुअली हमने इन्हें डेमो दिया नहीं है कि कितनी कमाल की चीजें यहाँ पर हो रही है.
बताइए.
देखिए बहुत सारी चीजें आर्काइवल वीडियोस आप देख सकते हैं. एक दिन के लिए कोई एंकर बन सकता है, फेक न्यूज बस्ट कर सकते हैं.
बहुत सकते हैं.
आप तो एंकर से ऊपर वाली जो भी उपाधि है वो आपके लिए.
इतना चने के झाड़ पे चढ़ा दो.
तो देखिए एनडीटीवी का पवेलियन के ठीक सामने गेमिंग आर्केड भी है और आज आपसे जो बातचीत होने वाली है वो भी गेमिंग रिलेटेड होने वाली है. किसने सोचा था इतने पॉपुलर ऑथर जो है वो गेमिंग वर्ल्ड में एंटर करेंगे. द एज ऑफ भारत, इसके बारे में बताइए.
देखिए ऐसा है, दिस इज एक्चुअली द फर्स्ट AAA गेम, a role playing game, an action role playing game based on an Indian subject. क्योंकि ये जो बजट्स होते हैं ऐसे गेम्स के, दे आर बिगर देन हॉलीवुड मूवीज. टेक्स अ ह्यूज अमाउंट ऑफ इन्वेस्टमेंट. और ऐसा कभी भारतीय संस्कृति पर, भारतीय सब्जेक्ट पर कभी नहीं बना है. तो एक ब्रिटिश फ्रेंच कंपनी है तारा गेमिंग, जिन्होंने who started this, and अमिताभ बच्चन जी एंड आई वी जॉइंड इन एज फाउंडर्स. उसका जो सबसे पहला ट्रेलर जो है, पहला लुक, वो आज ही रिलीज हुआ है. आप लोग प्लीज जरूर देखें.
बेहद कमाल का वो ट्रेलर है. और अमिताभ बच्चन साहब का ऑफ कोर्स उसमें वॉइस ओवर एंड शिवा के क्लोज अप शॉट्स.
और ये देखिए गेम रिलीज होगा इन 2026 में. बिकॉज देखिए जो गेमिंग जो जगत है, अनलाइक मूवीज, मार्केटिंग 1-1.5 साल तक चलता है क्योंकि दिस आर रियली बिग. गेमिंग इज बिगर देन मूवीज, बुक्स, म्यूजिक एंड परफॉर्मेंसेस कंबाइंड. इट्स दैट बिग. और जो युवा पीढ़ी हैं और आप सब जो माँ बाप देख रहे हैं, आपको ज्ञात होगा आपके बच्चे ज़्यादातर गेम खेलते हैं. मेरा जो बेटा है उसके जो दोस्त लोग हैं मेरी पुस्तकें पढ़ते हैं. But for the first time, he thinks I'm very cool because मैं एक गेम डिजाइन कर रहा हूँ. He said, Dad, you're designing a game. How cool is that? नील मेरा 16 साल का बच्चा है. नील, I love you.
Hi Neil, and of course you're very proud of your dad. And देखिए आज यहाँ पर हम Waves 2025 में हैं और यूथ वाकई यहाँ पर पहुँच रहा है. They are also trying and experimenting new things. आपको क्या नया देखने को यहाँ पर मिला और आपने क्या कुछ यूनिक पाया यहाँ पर, अगर हमारे साथ शेयर कर पाएं?
देखिए मुझे जो सबसे ज़्यादा यूनिक जो दिख रहा है, और कल मैंने मंच पे भी देखा, मेरी पत्नी और मैं हम क्राउड में थे जब हमने मोदी जी को देखा. और उनके पहले, मोदी जी के भाषण के पहले जो परफॉर्मेंस हुआ था, I saw the best of India and the West out there. हमारी प्राचीन संस्कृति सब दर्शाया जा रहा था. ये एक संस्कृत चांट बिगनिंग में हुआ, but the performances, the way it was executed was so modern. एक तरह से एक बहुत सुंदर मिश्रण था आधुनिक माहौल का और हमारे प्राचीन संस्कृति का. That is actually what the opportunity is. That's what Indian entertainment industry needs to start putting out. और हमारे जो बच्चे हैं उन्हें यही पसंद आएगा.
राइट. और आपने एनडीटीवी के साथ एक और कोलैबोरेशन किया था महाकुंभ के दौरान. उसके बारे में आपके थॉट्स क्या हैं? कैसा वो सीरीज निकल कर आया, आप क्या कहना चाहेंगे?
अरे बहुत अच्छा था, बहुत अच्छा मेरा एक्सपीरियंस रहा उसमें. क्योंकि देखिए शूटिंग जो हुई थी आई थिंक लगभग 3.5-4 दिन में हुई. और 3.5-4 दिन में हमने 7 एपिसोड अंग्रेज़ी के, 7 एपिसोड हिंदी के रिकॉर्ड किए. आप टीवी जगत के हैं, आप जानते हैं भाई इस रफ्तार में तो कुछ नहीं होता है. लेकिन बहुत अच्छे एपिसोड्स आए। मैंने ये भी देखा कि वहाँ पे जो ऑर्गेनाइजेशन था यूपी सरकार का, काबिल तारीफ़ था। इतनी भीड़, इतनी आबादी, लेकिन एवरीथिंग वाज मूविंग स्मूथली। हम इतने भिन्न भिन्न जगह गए, इतनी दूसरी जगह गए, हमने बोटिंग पे शूटिंग की, हर जगह पे, लेकिन इतनी स्मूथली सब काम हो गया। ऐसा नहीं कि हमें कुछ स्पेशल कुछ अरेंजमेंट्स या ट्रीटमेंट मिले, क्योंकि उस समय सरकार ने कह दिया भाई किसी को कुछ स्पेशल ट्रीटमेंट नहीं मिलेगा, क्योंकि जो दुखद जो भगदड़ जो हुई थी वो एक्चुअली स्पेशल ट्रीटमेंट के कारण ही हुई थी। तो उन्होंने सब स्पेशल पासेस सब कैंसिल कर दिए थे। हम आम नागरिक की तरह हम हर जगह जाके शूट कर रहे थे, लेकिन फिर भी बड़ी आसानी से हमने 14 एपिसोड 7 हिंदी 7 अंग्रेजी शूट कर दिए। और ये मेरे हिसाब से यूपी सरकार इट्स एक्चुअली वर्थ कॉम्प्लीमेंटिंग व्हाट द यूपी गवर्नमेंट डिड। और उनके साथ साथ हमारे जो लोग हैं उनकी भी प्रशंसा करनी होगी, बिकॉज लोग कानून मान रहे थे। देखिए, ज़्यादातर लोग कहते हैं भारत, हमारे जो लोग हैं कानून नहीं मानेंगे, भाई कानून की धज्जियां उड़ाने में हमें मज़ा आता है। लोग हैं वैसे, ऐसा अनुमान लगाया जाता है, ऐसी एक धारणा है, लेकिन वहाँ पे सब लोग कानून मान रहे थे। तो मुझे बड़ा आनंद मिला वहाँ पे शूट करके।
बहुत बहुत शुक्रिया इस बातचीत के लिए। और वहीं I've actually got you here on this setup where of course Amish is going to test our anchor play game where you get to read, you get to be an anchor for a day.
Namaste, welcome to the NDTV Wave Summit. This is Amish Tripathi and I'm an anchor for 5 minutes on NDTV, and that is it, and now I'm resigning. Okay, bye.
Yeah, the budgets that he's quoted are quite high, so yeah, we'll close it here. But thank you very much, Amish. Bye. It was really nice talking to you. Bahut bahut shukriya.
As an industry veteran, what do you think should be the strategy when it comes to the tariffs on the pharma sector that are in the offing, and how do you think India is poised to deal with it?
So I personally believe that India is in the midst of bilateral trade agreement discussions, and I'm sure that they are basically negotiating their way out of many of the tariff areas, and of course pharmaceuticals is one of them. I believe that India is a very important part of their supply chain for generic medicines, and I think we provide a very huge backbone for health security. So I think we should see if tariffs are done away with, because it would mean that you will unnecessarily increase drug prices when you know that drug prices need to be contained. So I'm sure they are in discussion to see how they can minimize the impact of tariffs on a segment like pharmaceuticals.
Ma'am, using that as actually my next question, what policy interventions or trade strategies do you believe are probably the most effective to protect the sector's global competitiveness?
I think India is a very important part of the health supply chain. And I think if you look at the pharmaceutical supply chain, where even in the US, India provides 40% of their generic medicines, and we have a very large global share of generic medicines. And I think countries look to secure and reliable supply chains, and I think India has that reputation of being a very secure and robust and reliable supply chain. So from that point of view, I think when we are playing such an important role in providing global health security through affordable medicines, I think we should have a very strong position in being a very integral part of global healthcare.
And beyond tariffs, what are the most urgent regulatory or market access challenges that you think are facing India Pharma in the US and even in the EU in 2025?
I think we need to look at our own regulations, which I think need to speed up. I think regulatory reforms are coming in the US and in Europe, where we are clearly seeing that technology is playing a very important role to speed up drug approvals. You just heard, in the US, the new FDA commissioner saying that they're going to actually speed up drug approvals. He has actually called for a very different way of developing drugs for rare diseases. He's talked about doing away with animal testing and using organoids and, cell in vitro and in silico methods to establish drug safety. So I think we also need to really emulate that rapidly. We should not be taking so long to approve drugs. We should not go about it in a pedantic manner. We too need to use technology to rev up the drug development and drug approval processes.
I wanted to ask you about the promotion of more women in pharma and STEM specifically. What do you think are the kind of opportunities that await, and what are the changes that you'd like to see more women just like you?
So we are seeing a lot of women in STEM, and we are seeing a lot more women in the pharmaceutical sector. I, for one, know that there are a number of very strong women leaders in pharma. Mahima Datla at Biological E is one of them. In the past, Swati Piramal has played a very important role, and now her daughter, Nandini, is playing a very important role. So I think we are seeing a lot of women coming into the fray. I think what has kept women back in the pharmaceutical sector was really the fact that at a sort of worker level, we've seen that the regulation surrounding women working around the clock has been very difficult. But that's actually changed, and we are seeing a lot more women teams in manufacturing. Even in marketing, we are seeing a lot more women, and I think you will see a greater representation of women in at least the pharma world. But in the R&D world, you are seeing a lot of women.
Yeah.
Because every, I think, company will have a large representation of women in their R&D departments.
And my last question to you, ma'am. What has been your biggest takeaway from WAVES so far, and what are you really looking at in terms of expecting the expectations that you have from this summit?
I'm very excited with WAVES. I think it's a launch pad for creating a very large orange economy, as the Prime Minister describes it. It is a creative economy. And I think that's what the world is really looking to do. Because, when we are being faced with AI and other threats of technology, I think a creative economy can battle that and use AI and technology to further it. So to me, creating a creative universe is what the opportunity is. How do you look beyond just the film and creating a large universe, of a creative universe in which you create a large brand, a large franchise? And the example I give is how the Lord of the Rings has created a huge creative economy for New Zealand. If you look at Harry Potter, it's created a large universe for the UK creative economy. India needs to find those opportunities. Bahubali could be one of them. How do we create that into a bigger opportunity? But there are many other such opportunities. So every film that we think is a potential blockbuster, we need to think beyond the film. We need to create that universe beyond the film, and which creates the large creative opportunities in theme parks, in brands, in franchises. That's how we have to look at this creative economy.
Mr. Chauhan, to begin with, I'd like you to tell us more, our viewers more about what the WAVES index is and what sort of gave NSE the idea to launch an index which focuses on the media and entertainment industry.
WAVES index is an index created to represent the creative industry in India. And there are, when the WAVES conference was being conceptualized by the CM's office, they had at that time called us up saying, would you be able to launch a WAVES index because it's going to be a growth industry? And we said, yeah, we have many types of sectoral indices, and we will also be able to create one. That is where we had promised them, and today we have fulfilled our promise of launching the WAVES index. The way I look at it is the WAVES conference has kick-started the thinking about how big the creative industry in India can be. But at some point in time, WAVES conference will get over. But WAVES index will remain forever, and that's where it's going to be a legacy of this conference, where you will highlight only on the creative industry of India, which is going to go up leaps and bounds, and this index is going to anyway give people an idea of what kind of performance those companies have done over last 1, 3, 5, 10 years.
My next question would be to you, Mr. Chatterjee. So we know there are indices which already track the media space. So Nifty Media again has been a hit and miss with retail investors. So with the new Waves index, what kind of an inflow into Indian markets are we seeing through this particular index? And do you expect to add more companies beyond the 43?
Okay, just to clarify on that particular point, so the media index focuses only on the media universe, and it includes both print as well as digital media. The purpose of creating the web index is not to create another media index, but to kind of reflect, as Ashish was talking about, the content creating economy, right? So therefore we identified a completely separate set of industries that we have included in the Nifty web index. Of course, there will be some overlap between the media index as well as the web index. And we have kept it open. So there are, as and when more companies get listed or are permitted to trade on the National Stock Exchange, we will apply our own criteria, and then if they qualify to the criteria, we will be happy to include them in our index as well.
And sir, inflows, what kind of inflows will you?
Well, that is for the industry to kind of go and create. But of course, I think there is a lot of optimism about the inflow and the industry per se, and it is opportunities. I think that is one of the reasons that we have created the index. The index will also help us track and monitor that how investors are feeling about this new economy. And of course, it will also inspire the content creators to kind of join the web.
Mr. Chauhan, my next question to you would be, this morning there was news about, for the first time in 22 years, DII ownership in Indian markets, Indian companies rising beyond the foreign ownership. So do you think FII holdings in Indian stocks have peaked out, and do you think this is the time of DIIs going forward?
It is the other way around. When the country is able to fund its own growth, the foreigners also end up getting more confidence. What is talked about, that when you talk about percentages, you forget about the absolutes. The absolute funds from FIIs or FPIs are coming in droves. In fact, this month has been positive, right? And so, basis what they expect the economy to grow or not, even Indians and foreigners would invest. But largely speaking, the Indian institutions becoming large enough is actually a good sign that Indian investors are actually funding India's own companies and India's own growth.
Right, sir. Secondly, I wanted to ask you on a different topic. So, we had earlier reported that the market regulator is building a mechanism wherein it will monitor suspicious pump and dump activity like bulk deals and block deals, and a central repository system is also being worked upon. So, is this something that NSE is also a part of in the discussions that the regulator is having with the exchanges?
Naturally, as and when SEBI opens up discussions, NSE and other exchanges and other institutions are always part of that. That is how SEBI functions. It's a very consultative process and also collaborative process. So that's where, finally being frontline regulators, exchanges will also participate in whatever SEBI wants to do.
And sir, when can we see something concrete coming up?
Again, it depends on what are the ideas SEBI has, and we are yet to finalize, because this is the first time that it has been talked about, and so once it crystallizes, we will be able to see what is it that final outcomes would be.
Right, sir. Also, we know there's been a lot of media talk about the whole Gensol incident, and even SEBI's order on it focused on how NSE was on the front line going and seeing all the misreporting that is happening. So is that a focus area that the exchange is building upon now to ensure that there are good practices being followed by entities listed on the exchange?
In a way, if you look back for 30 years of NSE's history, NSE has been the frontline regulator, and most of the work in investigations, inspections, other things actually happen at NSE's end, including the disclosures. And that's why these things have to be done is because the bad practices have to be eliminated, the good practices have to be promoted in terms of the infrastructure, in terms of the information being given to the investors, and that's where NSE is always focused on that. That's where number of investors investing in India, Indian stocks, has gone up from 1 million to now 110 million. That is 10 lakh to 11 crore people over 30 years. And the market capitalization of India has gone up from 3 lakh 80,000 crore to now more than 400 lakh crore over last 30 years is largely because NSE has been trying to ensure that the best practices come in, and of course that all that information which NSE gathers is available to the regulator, and that will continue in terms of in some or other updated way basis consultation between the regulator, main regulator and the frontline regulator.
Sir, what kind of an updated system are we looking at? Because like you said, it's already been robust, but there are some cracks through which cases like your Gensols, your Bharat Globals keep slipping through. So what are the updated system that, can you give us a clue as to what you're talking about?
No, it's again SEBI would discuss with the market participants, including a larger consultation with the industry, what they can provide, what they cannot provide, and then they will, basis that, they will decide what kind of disclosures are required. Because ultimately, the Indian stock markets and across the world, it's not on prescription, it's on disclosure. And that's where the companies have to give disclosures, and it is assumed that the auditors and the managers and the board are fully doing it honestly and correctly in a transparent, fair way. And that's where basically you see this cracks, but it's also on disclosure basis across the world. And it's depending on the circumstances, the regulator would come out with additional regulations or also may tighten regulations at some point in time.
Right, so basically you are hinting at a more robust system of making timely disclosures, am I correct?
And also more integrated, more granular disclosures, so to say.
Right, so lastly, I know I keep touching on this topic every time we meet, but any updates on what's happening on the conversation between the regulator and the country's, the world's largest stock exchange regarding its market debut?
No, we have already market, so we don't have to do debut. But in terms of listing, if you are hinting towards listing, we have heard Honorable Chairman SEBI, I think 2 days back, in many interviews that he's very positive, and we have, of course, applied for the no objection certificate for preparing our DRHP. So once it comes, we will be able to go with our, and of course, our DRHP to be filed, and then there are processes. And that will take some time, but if effectively we are still awaiting the NOC.
And will you be probably looking for a confidential DRHP filing, or would it be a normal disclosure if at all it comes to that?
It would be basis the advisors and the investment bankers that are appointed, because largely speaking this will be an offer for sale. So the investors who are selling would be basically taking some of these calls.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, yeah, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. the last 1 month, if you see the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,000.
Amid global uncertainties and market volatility, SEBI, the market regulator, is steering through a complex financial landscape. Complex because the world order is resetting and no one knows what is going to happen next, how the global market is going to react. To shed more light on the evolving dynamics, we have with us none other than SEBI Chairman Tuhin Kanta Pandey. Chairman, sir, thank you for taking out time for us. I would like to start with, during your first day in office, you clearly set a tone by telling that, the focus area will be transparency, trust, teamwork, and technology. It's been 2 months in office. How are you driving your agenda forward, and what is your, the most significant learning so far in this current scenario?
Well, first of all, I'll take it from what you said. We have a fair amount of global headwinds, largely out of the trade policies and trade barriers that are coming. And that has, again, implications for capital markets. Be that as it may, we will have to deal with the situation, in the best interest of Indian capital market. So the trust and transparency, I say that, of course, all 4 T's, as I say, that basically they're pretty interlinked. But coming to the first issue of trust is a wider issue of how the people view SEBI and also how does SEBI view its ecosystem and other market participants. So this mutual dialogue and the mutual thing which needs to be appreciated, the feedback and the mechanism to consult. Of course, we do have an established system of consultations. Those consultations need also to be more nuanced, more rigorous, and I think a discovery of really fine-tuning the processes, so to say. And transparency is again issue of how the market gets the information transparently about the issuers, and how the issuers, both in terms of IPOs, in terms of listed things, and also how the SEBI, whatever it does, also is transparently available. Same thing is with teamwork. Teamwork is not only an internal teamwork within the SEBI, which includes different divisions, different departments, how to break the silos, how to bring them together, but also to have an external teams, which are so very important. The teams which are there from market intermediaries, market participants, and other players, the committees that we have, the PMAC, the SMAC, the IPAC, and how they are then sort of able to work collaboratively. So that is a broader teamwork issue. And technology, as you know, is a very important part of the piece, a very important piece now in capital markets. Technology with what the regulator has on both SupTech that we deploy and the RegTech, which is the regulatory technologies which regulated entities employ, and also the market intermediaries, the MIIs, the market infrastructure institutions deploy, and the risks that also get posed through the cyber risks and other risks, including of course on AI and computing risks.
Since we're talking about global uncertainties, you had your recent US visit. How's the mood among the foreign investors?
I think I was, in fact, quite delighted to see that there's so much interest that India has currently, and despite the global headwinds, I think India has been able to provide very consistently. If you take a 30 years period since 1990s, Indian markets have provided to FPIs upwards of 8.5% rate of return, X of dividends in dollar terms. And if you take any period, 5 years, 10 years period, I think the returns that Indian markets have offered to these things are consistently much higher than either the emerging markets, other emerging markets, or China, or even developing economies. So that is one which has been very well appreciated. The second part is the opportunities that India offers in terms of the consistent growth rate that India has been able to achieve, one of the highest, fastest growing economies among the large economies. Consistently, the demographic dividend that it has, the talent pool it has, the policy space which is available, the fiscal consolidation, the corporate balance sheets and the fiscal balance sheets are in good shape. So I think the overall they are looking at India as potentially a very important market for deployment. So there is a great deal of enthusiasm.
I'm sure, sir. So, taking cues from this and clearly that India growing role in the, global portfolios as well. So, do we see any ease of rule in terms of foreign portfolio investors? And in fact, what is being worked out when it comes to, allow foreign investor directly into Indian equities?
I think this was when, of course, when I visited, there was also IMF conference and spring meetings, and I attended also the ISCO, which is also the meeting of the regulators, and there is a financial stability expert group, FSEG. And we could share, different things, and also the engagement with FPIs at New York as well as Boston, and also in Washington DC. Now, this engagement process actually gives a lot of feedback. It gives you, sort of ideas where you can also simplify things, make it easier. A lot has been done. For example, there's an FBI outreach cell in SEBI, which has reached out to over the last few months, to about 2,000 FPIs, looking at their issues, if any. There is a common application form. A lot of improvement has been made there. The registration process, a lot of improvements have been done, and of course, there is a scope for more. And I think this engagement process will be able to, allay many of the concerns that they might have, and some of the recent changes which have happened for ease of doing business. They would be really, this engagement process puts, underlines that, and that there's an improved understanding about the Indian regulations.
So all you mentioned is the compliance side of it. Do we see some regulatory tweaking also in terms of the rule which we have at this point of time? Do we see something in the near term in terms of tweaking and modifying the rule which we have?
I think one is that, we will be constantly, in the engagement. I mean, we'll intensify the engagement. That gives you pinpoints that whatever we might they might have, and we can remove them. And so in the context of, in general, simplification, rationalization exercise that we have undertaken towards what we call optimum regulation. And I think every department in SEBI is currently has started working on, how we can simplify the regulations. So to achieve more effective regulations, get that impact at the same time, whether we can get more with less onerous regulations, with less micro regulations, can we have the same kind of effective so far as the risk is concerned. And I think that exercise is started.
So talking about the regulation, one regulation around, FNOs, the derivative markets. Everybody is talking about that whether it's a over-regulation or not. But one thing the experts are saying about that, this could hurt volumes because the way it is designed, it's skewed in favor of large institutional investors. But of course, SEBI is coming from the point of view of retail investors because you have studies talking about 90% retail investor losing money. How are you seeing this? What is your assessment at this point of time? And do you see that it's an over-regulation when it comes to derivative segment?
In the derivative segment, we had some issues around it when we studied this matter, and we put it out as this report also in public domain, where we said is at least 9 out of 10 small investors were actually losing money. The question is that whether the particular methodology which they were deploying was good enough, whether there was proper education. And we found that there was a particular problem in terms of, index options on the expiry day. I think that is where we find it was truly distortionary. The purpose of F&O market, which is also a very important market, is to hedge risks and also help price discovery. So to that extent, I think the market does that job. The derivative market is really important market. But sometimes I think if the distortions come in form of a particular way that we are looking at it. So therefore, we put out a consultation paper saying that, when we need to change the metrics, the risk metrics, where for options, in terms of risk metrics, we were having apples and oranges issue. We were, summing up, different components like futures and options. They're slightly different. And options, we were not counting the delta. And that delta is now, we intend to bring in so that we know exactly, how the, everyone understands what the risks are. And there are also certain things about the limits that was prescribed and some manner in which it will be done. The number of days where the index options were restricted, weekly expiries were restricted to 2 days. So these measures were really trying to take it from the point of view of holistically, not really trying to, unduly throttle the market, but to make it more this thing and improving the systemic nature of the market. So we have received a large number of 800 odd comments have been received, and we are seized of the situation, and soon we will come out with the clearer regulations around it.
Do we see guidelines soon, maybe in next board meeting?
Yes, these are the things that we can do. You don't require a board meetings for it, approval. This is something which we can handle based on the position paper that was put out and the comments which we received. A considered view will be taken.
So on the IPO momentum we have seen since February, there is 1 or 2 mainstream IPO. Do you see that the slowdown is attributed to the global uncertainty, and how you're seeing the IPO market in rest of the year?
Well, as you know that last year was a very big year for IPOs. India had the largest number of IPOs anywhere in the world.
Yes.
In fact, there were markets where IPOs are very difficult to come by. In India, we have a very big pipeline of IPOs which is there. Of course, the markets do adjust. Last few months, especially 2-3 months, have been fairly uncertain. Uncertainty is still there in the minds of the people, but last 2-3 months have been especially problematic in terms of where the world is going. So therefore, capital raising has been slightly, as I said, that postponed by many issuers, which I hope that it will resume soon, because things are as things get clearer, they may still get further things. So we hope that this will the new IPOs will start.
So we have seen a BSE IPO, and I'm on the NSE IPO status. I just wanted to understand where it is, what challenges is it facing, and what is the regulator view when we could see some green signal from the regulator to NSE IPO?
I think the NSE and SEBI are in consultation on some of the key points on market governance issue, technology, litigation, pending clearing corporation, and some of these points have been gone back and forth. Hopefully that should be resolved early.
So any timeline given on the IPO?
I'm not able to give you exactly the timeline, but I can only say that this will be taken forward.
So moving on the corporate governance part of it, when a GenSol kind of incident happens, it affects the sentiments of investors, particularly in the startup IPO. Perhaps, more than drop in a price after listing, it's more about the trust factor gets shaken after such instances. Do you think it's one of a case where, promoters are at fraud, or you think that there's some steps or measure has to be taken to avoid the reoccurrence of such instances?
Well, I think it's a case of egregious behavior by a few. And I think no matter what kind of regulations you do, no matter what kind of laws you pass, there will be, if there is an egregious greed, and if there is, in my opinion, also inadequate supervision, because we can't be there in every boardroom. You have auditors, you have independent directors, you have people who should ask questions, key questions, and there is quarterly results. There are people who are informing in the exchanges. So as a regulator, we can only do as much. In fact, you would be asking that we ask too much.
So of course,
but still, if there is a certain, like if there is a, false information, if there is a, fraud, or if it is a moving of funds which is not correct, I think in the order, forensic audit also has been ordered. So I think these are the kind of egregious behavior which, nobody likes them, but they do happen, and I think they should be penalized for that, whosoever is responsible.
Similarly, in the SME IPO situation also, we have seen a lot of these tax evasion angle is coming up, it's emerging. So do you think that both exchanges, stock exchanges and merchant bankers should step up, be slightly more vigilant about the documents which they are handling as far as SME IPO is concerned?
Surely, I think there's a lot of responsibility on the merchant bankers on this score, because I think they should do a better work out of about that. On our part, I think that initially we have brought in some changes in the guidelines in terms of profitability. For example, there's a minimum operating profit has been mandated. There is also certain other tightening that has been done, that you could use the funds only for certain purposes, and not for your general corporate purpose, cannot be more than a certain limit. So we've brought in certain restrictions in order for that thing, and this money cannot only be simply for the repayment of loans from the promoters, for example. So, but
it seems that it's prevalent in.
But the scheme was basically to facilitate the IPOs, in the point that helping the small and medium enterprises to raise resources possibly better and reduce their cost of compliance, and so therefore it was given to exchanges to approve, and instead of everything coming to SEBI. But I think that we have to really look at it. We will be watchful of how the things go on, and we hope that all the relevant parties in this will do circumspection while sort of reviewing the documents and putting it through, and the exchanges
all checks and balances,
and all exchanges also doing their due, because as a first line of regulators, in this case they are the ones who actually regulate and give approvals. So we expect them to do that because that's what the scheme was meant for.
Yes. True, sir. Absolutely fair point. On the investor protection side, sir, I have two questions. One on the finfluencer role, the way they are coming up with all those stock tips, etc. How you are going to regulate that? Is there any broad framework in mind? When could we see some curbing there? If you could share some thoughts around.
Yes, some of the points that on finfluencers SEBI has mandated is that unless and until they are registered, the SEBI market intermediaries will not be able to interact with them and all that. So that for really looking at their business model should not thrive while they are not getting doing registered. And secondly, particularly if they are giving any false promise on the returns which they cannot do. So I think efforts of SEBI has resulted in about 70,000 such things being taken down with the help of different social media platforms. But we need to be vigilant, and we need to continuously do that, because they can again spring up and things like that. On the other hand, we are also trying to ease the entry of the registered investment advisors and the RIAs. And recently I also met their association. Some of the work which has been done in case of their own rationalization, I think we need to do more also on ease of doing business for them. There is also for Parva, there is for past performance and accreditation, a new system is being brought out. I think both we have to see that this registered profession where the do's and don'ts are clearer, they grow in size, they are more, they come to advise the people, and at the same time the advisors who are self-appointed influencers and violating, they are taken down and the action is taken on them.
So finfluencer is one part of it. Of course, the face is, you recognize the face and you fall for it as retail investor. But on the other side, the stock tips, across social media platform, for example, WhatsApp, Telegram. Are you in touch with these social media platforms as well to get some idea, some surveillance there as well on the tips where there is no name, no face? How to sort of curb that, how to reach out to the depth of it, to understand how to...
One of them is also to see the education, because I think we have been constantly putting it out, and we will also further accelerate it with the help of this on investor education. Or when you are trying to get it to not to fall prey to these kind of advice, which is especially meant to actually dupe them because what kind of interest one might have on this stock tipped advice. A simple question, if you ask him why someone is advising me this in an unsolicited way. So there must be some interest which I must try to find out, and therefore I think the investors should go towards see more of documents. So much is online is available. And I think they should get into a league where if they really want to be serious investors, and that will be my appeal to them. And I will really urge them to be more circumspect and not to fall prey to this, doubling return, tripling return, or stock advice of that kind. And, and if at all they have, they should, approach the registered ones.
Absolutely, sir. So moving on the common KYC system, there has been talk. Any progress there, and what's your view now? Again, it's you think that in the current scenario, we can have common KYC at this juncture? I mean, is it viable? Is it able to, regulator would be able to implement that? Because there has been it's been a pending thing.
Yes, I think the central KYC is an important issue. Now, we do have, as you know, under the SEBI system, we have a common KYC system where if you get registered, it goes to KRAs, and from there it can be free. It can be then downloaded and shareable. You don't have to do it again. So it's a common there. Now the issue is that how seamlessly the central KYC and the KRA system of SEBI can be made interoperable, and that will be our effort, that it can be very simply be made interoperable, so that at one we will have just one KYC, at least so far as PMLA matters are concerned. From their point of view, if we have one KYC across the financial regulator, that will be great. I think that will be our effort to resolve.
So if it's get implemented, any timeline, one, and second, how this is going to benefit investors in a long.
I think the Ministry of Finance is abreast of this matter. RBI, SEBI, we are all working in a committee, and the PMLA rules also needs amendment. This whole thing is a matter of priority for us.
So one question which comes to everyone's mind, it's a bit offbeat, but on cryptocurrency, government has been working on paper, we will see it's coming forth. But from the regulator point of view, what is the SEBI view on the cryptocurrency regulations, sir?
Well, cryptocurrency is a policy issue. So it's for the Ministry of Finance to really decide, because it's not with SEBI. So far as SEBI is concerned, this is not a security yet.
Yes, sir, but the suggestion has been sought from all the regulators, including SEBI. So just trying, getting sense, what is SEBI view on the crypto regulation?
No, crypto means is not a regulated thing at all. I mean, so far. So I mean, that's my thing, and let a policy decision be taken on that.
Well, that's the wrap of this special conversation. Thank you, Chairman Sir, for sharing your insight and observation. Thank you very much. Appreciate your time.
Let's start with the story of how Fasos began. You're working at McKinsey, and then you decide to start making rolls.
Food was really always something very close. Food and football.
You're painting a very stereotypical Bengali picture now, right?
Yes. I was really missing the Kolkata rolls in Pune.
Will you make a decent roll if you have?
I can take a bite and say whether it's a decent roll or not.
That's a very different skill set.
We are not like Uber of India or Amazon of India. We are the first people in the world to do cloud kitchen at scale.
What was the most challenging point that you faced when you said that, maybe I need to go back to, that professional job?
Revenue dropped by 80%. Could not pay my daughter's school fees for a quarter.
So you started off with Fasos, of course, but why the name Rebel Foods?
Someone said, see, you guys don't do anything by the book, so, why don't you call yourselves Rebel?
Apollo ties. Now there's a buzz of a positive corporate development related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
the company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Jaggi brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching KYC and I'm joined by Puneet Javeri today, and we're going to take a look at one of the IT names, Hexaware Technologies. Interesting because it's just IPO'd, right, in February of this year, Puneet, and it's private equity owned. And generally when it's private equity owned, they're here to create value. That's the perception. So let's try and get straight to it. Let's see if they're actually here to create value and what the risks are like. What is it that we'd like to look out for when it comes to a Hexaware? One is they have a high exposure to quasi-US government agencies, and a lot of those are under the DOGE program, because of which there will be either some push with regard to spend timing. So the timing of the spend may actually get pushed, which could well impact the numbers for Hexaware. Or you could see a squeeze with regard to spending altogether, which could impact the numbers for Hexaware. And that changes substantially in the 3 months and therefore warrants conversation. The second piece is with regard to impact of tariff delays in spending. Now this likely has already been impacting IT companies this quarter as well as in terms of commentary. Also the fact that will impact what the Fed does in terms of rate cuts, and if that doesn't happen, will discretionary spend get impacted and will impact Hexaware Technologies in that sense. The third piece is with regard to
only 20 minutes and we must get
नहीं मेरे पास बहुत टाइम है.
So our moderator has already, Master of Ceremony has already given the introduction of all the guests, but quickly, yesterday Prime Minister gave a very big ambitious agenda to all the stakeholders, and he gave a plan that now you all stakeholders have to work towards it. One revelation I want to make to you all: between India and China, there is a huge possibility of movies, cooperation, co-production, and large, deep partnerships. And we already have 2 goodwill ambassadors appointed years ago. One is Mr. Amir Khan, and another is Mr. Prasad Shetty. Then we have 2 Chinese ambassadors who have been working with India since many years. Stanley Tong and Peter Chan. They are award-winning filmmakers. And if you know Jackie Chan, he is actually an AI avatar. The real stuntman is who has become a big filmmaker. So Amir, over to you. Just contextualize this for us. What Prime Minister has envisioned and how are we going to make Indian creator economy and entertainment sector a global hub, and what role India and China can play in this?
Well, you know, I've had the opportunity to visit China a number of times in the last 6 to 8 years, 10 years. And there are a few things that I would like to share with you all, which really, you know, I think there's a lot of potential. First, I feel that audiences in China, the cultural, you know, flavor in China, the emotions of the people in China, they're very similar to the emotions of Indians. So the Chinese audience reacts in a very similar way to content the way that Indian. That's what my experience was when I was watching, you know, a number of my films in the screen in China, and the audience was reacting to Dangal, let's say. There was absolutely no difference between an Indian audience reacting to the film and a Chinese audience reacting. It was almost identical, the reaction. So I feel that there is a lot of scope and potential for a number of reasons. One, I think India has a very vibrant creative community, and so does China. China has got amazing creative people. I've been to China a number of times. I've seen their live events as well, and I've seen their movies. The standard of their work is clearly world class. And I think that that itself is a great opportunity for India and China to collaborate and work together. I think that whether it's creatively, whether it's on an emotional level, or whether it's even from a business perspective, I think it is only a win-win if, you know, we collaborate with China. And in fact, over the years, I have been in discussions with, you know, my friends from China, and we have often explored the possibility. But now with waves coming in, I think it'll give a further drive towards that. I mean, if you look at a film, Indo-Chinese film, if you have a star from China and you have a star from India, that's roughly half the population of the earth, if you know what I mean. You know, so you have a huge audience already over there. And both India and China have a they're very ancient civilizations with a lot of history to them. Both India and China are very ancient civilizations. So I think there's a lot that both of these countries and cultures can offer each other. And I really look forward to a collaboration with talent from China.
Prasad, would you like to talk about how currently Chinese audiences are perceiving India, what kind of storytelling they would look out for, and what are the potential areas we should work?
So one of the things which kind of personally for me when I went to China years ago was that the way human emotion works, the way family emotion works, the way the value system about parents aspiring for their kids to be successful, worried about their marriage, even smaller details like, you know, how a parent will take care of its kids all the way till they are 40, 45. It's very similar. So I realized that one of the biggest opportunity Indian filmmakers had for China as a market was to tell stories which are very authentic to Indian culture. Because there's not so much difference between Indian culture and Chinese culture. So there is no requirement for, say, okay, let's go back to the factory and find out what is that formula which will crack the market. No. We'll make good films here. We'll make good films anywhere. And China somehow has accepted the cinema from around the world. whether it's Amir's films, whether it's films from France, whether it's film from any part of the world. It's the story, it's the way the emotions have worked in your own country. That's the same way it works in China.
Yeah.
Especially with Amir, a few of the films which we worked together on. I remember a very interesting story about PK. And the first time, I saw the film and, it made me cry. I remember, our previous panel guest was here. I saw it in Raju's office. And then my first reaction is that there was a Chinese assistant of mine who was laughing at the same jokes which I was laughing at with subtitles. She was crying at the same point. That gave me the confidence saying, we don't really need to customize a film for a market. You just make a film with full honesty, with the craft honesty towards the craft, honesty towards the story. And it just resonates.
Stanley, you have worked on 3 films.
How many films have you shot in India, Stanley?
I actually shot 3 films in India.
So why don't you talk about your experience working in India? Because what Prime Minister has envisioned is that we now create in India, shoot in India, and the story should be rooted in India. How do you react to that?
Well, actually, the reason why I come to India to make movies is like when I was a kid in primary school. When I always draw the Taj Mahal. The building, the architect is so fascinated. And then when I learned martial art, the Shaolin Kung Fu, and I found, Damo is coming from India.
Bodhidharma.
Yeah, and Buddha, the Buddhism, I studied that. And then when I make the movie 20 years ago, The Myth with Jackie Chan, and I put in the Karate Paya too, the ancient, Indian martial art into the movie. And I want to show, a lot of Chinese audience doesn't know about Karate Paya too, and also I found out there's so many beautiful scenery, and a lot of great cultures that we don't know. And only when I come over in 1993, first time, I actually from the Himalaya to the south to the Bangalore, I tour around the whole country. And I found so many fascinated and so many stories that I want to make. So for the last 20 years, and I managed to make 3 films in India. Because I found India film, I learned a lot because India film always about family value, friendship, love, and social issue. All of these issues is really resonate to the Chinese audience. Emotional and relatable storytelling that I think that in the future there's a lot of opportunity for us to be joined together because we are a good neighbor, and then we share our culture for thousands of years, And I was just talking to Prasad, on my way to India, and we were waiting on the launch. We talk about free story that that we could make together. I've been talking to Amir, and working together on some projects. So I really wanted to have more co-production between China and India. And just like what Amir was saying, that we have huge population, we have huge follower for Bollywood movie and also Chinese movie. Why don't we make more movie together and we share our actors, we share our writers and directors, then maybe we can make some better film for the world. Thank you.
Peter, would you like to throw some light on the way forward? Looking at your experience, what could be the next immediate steps that all the creators, filmmakers, producers should think about and start working on some projects? And what could be the framework? It will be co-production, it could be JV. How do we take the next step?
Before I answer that question, I have to admit that I am the least qualified speaker on this forum, Indian Cinema Oriental Outlook, because, I mean, to have my 6th degree of separation, my only association with Indian cinema was Shashi Kapoor when I was a boy in the 70s. Because I grew up in Thailand, half of my high school class are Indians, and I would be eating their lunchbox aloo prata, which I kept asking for that when I come to India, and my friend Prasad keeps saying that nobody eats that. You don't order aloo prata in the restaurant.
You don't get aloo paratha in Mahesh lunch home. You should not.
Not in Mahesh lunch home, but you'll get it everywhere else.
Don't.
I always ask for aloo prata. And well, that's my other association with Indian cinema was in 2005. I was asked to make a musical by 3 Indian investors. One Tamil Indian, one from Malaysia, one from Sri Lanka, and one from Hong Kong, to make a first musical in China called Perhaps Love. And I flew into Mumbai for the first time, and I met with Farah Khan, who was the top grossing director from Om Shanti Om. And she agreed to be my choreographer, and she brought 12 Indian dancers to be in Shanghai in the musical with all Chinese, but 12 Indian dancers. And so that's an anomaly. So that is not really an Indian-China co-production, but because we could use services and expertise from each other's industry, we got to work together. And I started making friends with Indian filmmakers, Amir Prasad, who lives close by in Shanghai. And then I also met with Raju. I was made by my assistant to watch 3 Idiots, where the first 15 minutes I couldn't get into because it's very different from my style of filmmaking. And it took me 3 to 4 times until I watched the whole thing. And I watched it 5 times with my daughter, with my wife, and then with my 3 different group of friends in the cinema. And that took me completely into the world of Indian cinema. And back then there was still a lot of song and dance. And now Indian cinema has evolved into something that is not strictly Bollywood, like we used to know Bollywood. So, and then I make friends with Kabir Khan, who has great stories to tell. And I think it's about time that we, of course, between the Chinese population and the Indian population, I mean, we have more than half of the population of the world, but I think we need to make movies for the world. I mean, half the population is not enough. And to be able to please each other by putting an Indian actor in a Chinese film or a Chinese actor in an Indian film, I think it's not the only way to go. I think we should make the movie that we believe, we love. If it's a local movie, make it local. Look at, COVID was a sad thing, but between COVID and the streamers, the world is watching Korean cinema in subtitles, Thai cinema, Indian cinema, series, and Japanese. And one of the greatest shows I watched a month ago, Adolescents, they speak English with such a heavy northern grassroots accent that is almost like foreign language to everyone. So in that respect, I think any language or any race or any color, it's not the point. It's when the story resonates with you and you can make it. And we need to try to build a collective between filmmakers in Asia, because we do have enough of a calling power, because we have enough population in our own territory. And when we have movies that could appeal to any ordinary folk internationally, we should collectively bargain with the pipeline of distribution, which still belongs to Hollywood at the moment. Although Hollywood and the studio is still trying to figure out what is the future. Because with COVID and with the streamers, I think the studio is also trying to find out what's going on with the world ahead of us. I think this is a very good opportunity for us to be able to make the story that we love. It could be as local as possible, and I still believe in the word local is global, because we're all human beings after all.
So, very important points. Now we should dig deeper with Amir. And before I ask Amir to comment on that, there are three very clear milestones. One is 2013, when Three Idiots was released in China, and it did pretty well on the box office. Then 2015, Prime Minister Narendra Modi signed a bilateral agreement to co-produce films. That agreement exists. Then 2020, Dangal.
2016 it released here, so 2017 it released in China.
17
few
in
months
China.
later.
Again, a benchmark that how successful Indian movies could be in a market like China, because as a layman, we think language is a problem. I don't think for storytelling language is a problem. Absolutely not. So, and you pick up themes which are of universal appeal, shared human interest and human memories, that kind of films you have picked up. So today, if you have to start new work with ambition, with big scope and big scale in mind, what would be your roadmap?
Well, actually for me, I have to say that the way I approach cinema and approach films that I work in, it has to be a very organic process. So what we are discussing on a surface level, that in principle I think that there are a lot of benefits for talent in China and India to work together. But the best and the most organic way of that happening is through writing. So it is always the story and it's always a script that comes first, which excites a creative person. And it can come from a Chinese writer, it can come from an Indian writer, it doesn't matter. But importantly, it should excite, the creative communities on both sides who actually feel excited enough to come together and collaborate and make something. And obviously, it should naturally lend itself to both China and India in its theme, in its requirements of maybe actors, but certainly thematically something that connects the two. On a very surface level, you can say, let's make a big action film, let's have one Chinese star, one Indian star, and one maybe Caucasian star, I don't know. So that's a very surface way of looking at it. One can go that route, but I don't really...
that doesn't excite you?
That doesn't excite me. What excites me is a story that... Because, writing is a very lonely job. But the fact is that every film starts with one person sitting alone with a paper and pen. And that, is of so much value, I cannot emphasize enough how important that is. And that organic process of a person sitting and writing down a story, which naturally involves, characters from China and India, which it has to happen organically. You can't force fit it. I always believe that you can't force fit anything. It has to come organically. With the environment being created, with the fact that as creative people we are being encouraged, I personally have now over the years a very, healthy relationship with the creative community in China. So I really look forward to it because I've seen the level of their work. It's outstanding work that people are doing in China. So it would be a real pleasure for me to work with creative talent from China. But ideally, it should happen organically. It should happen in a manner which is very organic. I know that some films are made and a lot of them are successful, which are pre-planned. Let's make a comedy or an action or a horror and let's, take these three actors and make it. So वो पहले project बनता है. First you make the project and then you write what you're making. You have to write a script around it. That's usually the other way of doing it. It's not that it's the wrong, there's no right and wrong in creative field. But I'm hesitant to go down that route.
So with permission from our Chinese guests, because we want your message to go to the larger audience. Actually अभी आपने हिंदी बोलना शुरू किया तो थोड़ा सा इस बात पे भी रोशनी डालनी चाहिए, क्योंकि बहुत लोग ये समझना चाहेंगे, क्रिएटर कम्युनिटी के लोग, कि ये फिल्में
आप अंग्रेजी में बोलिए ना, बेचारे समझ नहीं पा रहे हैं.
Okay. My next question to you is, but I want you to speak in Hindi.
अच्छा, okay.
Are you okay with that?
I'm okay with anything.
Yeah.
But I don't know, y'all are okay with that? Dual languages? I think for our guests we should stick to English.
Okay, sure.
Yeah.
That's why I prefixed
or
that
we can
with
switch to
permission.
Chinese if you know that.
No, that won't be possible. Yeah, so I wanted to understand from you, because technology and innovation and the craft and formatting has changed. So are we talking about large screen cinema, or we are talking about OTT? Because now some Chinese Americans are doing wonderful job in Hollywood, making micro mini drama and making billions of dollars. So what will be your advice to larger community who are in the industry, how to approach this problem?
It's not a problem. I feel it can go either way. You know, you can make content which is a feature film, and you can also make content which is long form content, which has many episodes in it, which is series, or even really short content which you're talking about. So I think that can be, it really depends on each individual what they would like to make. I don't think I particularly have any preference between, that.
Right. Prasad, what do you think that currently, like he rightly said, that it should be organic, not just because one comedy or one action movie will work. When we talk about shared culture, civilizational commonality, then what kind of themes would appeal to Indian filmmakers, Chinese filmmakers and Chinese audience, but made in collaboration with Indians?
So I also very strongly believe in this word, even though it might sound cliche. I believe that stories need to be very organic. And I think most of us, all of us in our panel will believe that story. When we think about a story, at least from a creative perspective, I don't think we should take into consideration what market, why we're doing it. Because today we live in a world where most of our emotions, most of our behavior has become very homogeneous. Thanks to social media, thanks to COVID, thanks to streaming. A young person in, let's say in Shanghai, would not be dramatically different than a young person in India.
Right.
And a young person in LA, for that matter. So what has happened is our